Now time for some of today's trending tickers. We are watching Tesla, Niagara, and Taiwan Semiconductor. First up, Tesla announcing its annual shareholder meeting will take place on November 6th. That news coming after a group of investors urged the EV maker to set a date. The previous shareholder meeting was held in June of last year, and since then, Elon Musk's growing political ambitions, the CEO's public clashes with the president, and slumping vehicle sales have worried investors. Tesla shares are off 38% from their record high in December. Next, snack food giant Conagra Brands' fiscal fourth quarter sales coming in below expectations as the company attempts to navigate the challenging macro environment. Company behind Slim Jim, Angie's Boom Chicka Pop, and dozens of other brands forecast flat organic sales growth for the upcoming year ahead, citing headwinds from elevated inflation and broader uncertainty. CEO Sean Connolly noting the past year proved more challenging than we anticipated. The company plans to invest in frozen food, snacks, and enhancing supply chain resiliency in the year ahead. And finally, Taiwan Semiconductor's first half revenue surging 40% thanks to booming AI demand. The company's June revenue rose 27% from a year ago, but dropped nearly 18% on a month-over-month basis. TSMC is a supplier for NVIDIA, which hit the $4 trillion market cap threshold briefly on Wednesday. And you can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Futures searching for direction after the Nasdaq knocked a fresh record high. Joining me now, Brent Schutte, Northwestern Mutual Wealth Management Company's CIO. So, Brent, as investors are weighing what to pay attention to, they seem to be looking past tariffs largely. So then you've got earnings and you've got the Fed. Which should investors be more focused on right now?
All the above. I mean, I think investors are looking past everything that's out there and judging that nothing is going to upset the apple cart, which I'm not for sure is going to occur. Look, we've only been with tariffs for 3 months, pretty much, and we don't know yet if they're going to filter through into higher inflation or a slower economy. I think there are risks on both sides of the equation, as well as risks on the earnings side. And that's why I think investors need to pump the brakes just a bit and make sure they're following their strategic asset allocation and staying true to their financial plan.
And what do you, okay, so if we're paying attention to everything, which do you think is the potential biggest risk here?
Look, I think the economy is showing signs of weakening. If you look at the labor market, yes, it's remained resilient. But for the past 3 months in the BLS Labor Department report, you've seen less than 50% of the industry is actually hiring, which historically has been a warning sign. You've seen continuing claims tick up. On the consumer spending side, you've had 0.5% quarter-over-quarter growth in consumer spending in Q1. And the last 2 quarters have been negative 0.3 and positive 0.1. This is where I think you're seeing signs that the economy is slowing down. I think consumers or investors are thinking it's going to speed back up. And that's where I think there are still risks to that equation, especially as we continue to find more and more about tariffs and what direction we're heading, which I don't think we have certainty yet.
And Brett, it's interesting because we've had a number of strategists come on the program recently and say they view the recent tax and spend bill as stimulative, right? They look at things like some of the tax changes for CapEx by companies. And they seem to think that maybe that could mitigate some of the weakness here. How are you thinking about that?
It certainly could. I guess the question out there is which side overwhelms which and which isn't pricing the market. And the S&P 500 trading at 24.5 times trailing 12-month earnings and 23 times forward 12-month earnings, respectively, you're at 7%, appears a bit optimistic to me. The thing is, there are opportunities in other places. And I was talking, as I came on the show, you were talking about some of the older school companies that I grew up with. Kellogg, Delta, things of that nature, not just tech stocks. This is where I think there are opportunities for investors to broaden their horizons and think about small cap stocks, which trade at the second lowest value. Good morning. In the 31 years that I've done this. The other time was June of 2000. I think we're all ignoring
All right, let's get ready for the opening bell. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday. Got about 7 minutes to go. Okay, target. Okay, looking at some things that Brent talked about this morning. About selling some premium stocks that are a bit overbought with high premium.
And so to me, I go back to valuation. I talk about that. People don't pay attention to that today, but I think they will in the future. At least they have historically. And that's where I think anyone with a time horizon for the next 3 minutes should think about owning small cap stocks for the next 3 to 5 to 7 years, because I do think you're in for a cycle of different market leadership. And that is what historically has happened. I think it will happen once again.
Brent, we're going into earnings season, of course, and for those of us who probably are holding stocks more than the next 3 minutes, what do you think is the key question that investors?
Okay.
What companies to look at after listening to and reading all the earnings news?
I think it's going to be forward guidance, and I know that's kind of an easy answer, but I think people are going to want to know what's the impact of these tariffs on each individual company, because that's where I think the question is going forward. The other thing, I think people have.
Okay, so AMD, you guys are looking at AMD. Chips in general, looking good. Supermicro up again today. Supermicro. Okay, Supermicro finished up with a nice look to it yesterday. Let's take a look at Supermicro today. Supermicro. Okay, Supermicro trading up there north of almost 51.
Good quarter out of them. I like they shut out stabilizing demand.
Mm-hmm. 55, yeah.
Restore their guidance, or at least put out a range, because they didn't do that 2 months ago because of the trade war. Then last, Julie, digging into this WK Kellogg deal, I actually think it is not a good deal for Ferraro, but who am I to argue with a long-story company like that? It's chocolate, but I'm going to try to argue the point.
A little chocolate covered popcorn action. Like, can we see some good?
Julie, I get the synergies, but nobody's in cereal anymore. Let's just be real. $3.1 billion is a lot to pay for a cereal company that's putting up all of
You know what cereal I eat. Oh, we'll take it offline, size. That does our morning breed. Much more ahead on Young Scientifically.
Yeah. Yeah, I like it. Supermicro looking really good today. With 4 minutes to go. 4 minutes to go. Coffee's good. Okay, hope everyone's having a good morning. Certainly looking good over here. Supermicro had a nice rotation this week in winning positions. Now Supermicro looks like it's going to go. Okay, Supermicro, thank you very much. Let me just get my active trader window open. Okay. Okay. Super micro. Okay, let me turn on morning extended hours action here. Super micro looking good. Okay, you have buy order blocks 3, buy order blocks during the pre-market. Super micro. Okay, let's get that. Bitcoin was a big winner late yesterday. We'll see if we get any kind of additional action today. Okay. Yeah, yeah. Core Scientific, looking for that to wake up too. I agree. All right, less than a minute. Okay, here we go. All right, first 15 minutes, I'm doing not much of anything but taking profits off the table. Okay, looking good. As they round the first turn, we got Super Micro heading into first place. Oh, there goes. Super Micro going. Oh, yikes a bee. Here goes Super Micro. Okay, looking good. Okay, so the airlines are flying, so don't chase it. Look for some follow through, but I would definitely be interested in some airlines once we get a better entry. Okay, Super Micro on the move. Wow, nice breakout, Super Micro.
Yeah, Brian, I have my eye on a few things here. Kicking things off with the major indexes, we're seeing the Dow open about 1 tenth lower. The Nasdaq coming out of those record highs is up today around 0.2% of the S&P, trading mostly flat. But you mentioned a few upgrades, and I want to get to AMD and Oracle. Both of those stocks taking a nice pop today. Let's start with AMD. HSBC upgraded share to buy the price target at 200 shares up from the prior 100. Now, the firm
Super Micro looking strong.
when it comes to its chips. So the firm saying that AMD is, quote, back in the bang, that the market has yet to fully price in a lot of this AI-driven upside. So AMD obviously a big competitor to NVIDIA, but their chips are actually a bit cheap. There's some
Okay, nice. All right, some profit taking there.
shares, they're moving higher. We're up around 1% at this point. The upgrade is to overweight the new price target of 270. That's up from the prior 190. Now the firm sees rising enterprise demand for Oracle cloud infrastructure as a major growth driver, and this adds to the company's 30 billion plus AI opportunity today. And for Piper Sandler, it wasn't just Oracle, they also raised their price targets on Microsoft and SAP, citing strong momentum.
Looking good. Super micro.
So true. All right, it's much. We're kicking things off with your daily guide to the biggest market drivers of the trading day. We're going to watch them. Number one, Delta soars at the brand of big quarter and outlook. If the airline should be any implications for broader.
Okay. All right. Futures coming back in a little bit. Tesla pushing a bit higher. Netflix down a little bit. All right. New York Fangs are all mixed at the moment. Many of them are a bit overbought. Looking to sell some premium this morning.
Number two, Bitcoin reached a new all-time high, finally over $112,000. That's past the previous peak of around 111,000.
Okay, so I got a nice little short covering pop there. Looks like shorts got smacked a little bit. Okay, Apple trying to do something. Netflix is back up. Tesla turning back up. Okay. Nvidia back down into yesterday's price action. Nvidia back down to 163 and change. Okay. Okay, AMD looking good. AMD, for those of you talking about a pre-market in the trading room, AMD, watch, AMD does tend to fade a little bit at the open, so be a little bit cautious. Look for a little dip and then enter after the dip. Looks good. AMD, Super Micro. Let's see, AMD. What you got news-wise on AMD, Corey? Set to report its fiscal second quarter 2025 results on August 5th. Okay. Well, that's not news. HSBC upgrades to buy. Okay. HSBC upgrades AMD to buy. Okay. I like it. I like AMD. I like SOXL too and the semiconductors. SOXL. Okay, this is probably give you a better entry on a dip. Give it a few minutes for the markets to settle down. First 15 minutes, I'm not doing much of anything except taking profits off the table where it's warranted. If I'm up 50% or something overnight, a lot of times I'll take profits. Right now, we're just getting some reactions. Yesterday, we had Coinbase up quite a bit. We're in the top of yesterday's candle. If you were around yesterday evening, around 2:20, 2:30, we got a signal. And the markets took off to the races. Right around 2:20, 2:30, we got a signal from Hero. Okay, Netflix. Let's see, Netflix. Might have to log back in. Probably have to log in here. Okay, I'll come back to this in a minute. So watching Coinbase. Coinbase, nice move on Coinbase.
Really very low levels, and you need a lot of oil will play.
mean, look, jet fuel is less expensive now than it was. They're still trending lower, and this is going to be a tailwind.
Okay, Coinbase, CONL turning back up.
Prices that are trending lower and are expected to be lower by the end of the year.
Something doesn't look right.
Another
There we go.
tailwind is this whole also this push
CONL, semiconductors, watching. There goes Tesla. Tesla going. Tesla going. Gonna torture the bears, looks like. Tesla ripping. Shorts covering. Tesla ripping, shorts covering.
You had a couple of quarters like this company like Delta, and it will raise the question: why are we even talking about rate cuts this year? And clearly, corporate America is fine. Clearly, they're doing well in a steady economy.
Thanks.
Yeah, and I think the rate cut debate, that is probably the biggest question on Wall Street right now.
All right, Tesla going there. All right, so we got mixed results on the FANGs for now. Okay, so if you look at Apple looks like it could, it's an inside day. You can see Apple inside day over there on the right. Okay. And Tesla, of course. Tesla ripping here. Big move on Tesla, back into the gap. That's what we're looking for. If you're trading Tesla, just jumped Tesla. Okay, so I have next week's 312.50s. Okay, so we got a ways to go to get up into that gap.
Yeah, most definitely. I mean, anything that is sort of crypto related, especially when it comes to Bitcoin, it has been on fire this year. Robinhood, Coinbase, anything that has crypto.
Tesla.
10,000 over the last couple of months. And what analysts have been pointing out,
Apple ripping.
becoming a less and less volatile asset. So
There goes Apple. Apple going too. Tesla looking good. Tesla looking good. Looking good. Tesla. Okay, probably just shorts covering for now on Tesla. Apple, nice pop. Apple. Okay, Apple. What do I have left on Apple? Okay, so I have those 210s. 210s. I'll let these run a little bit more. I have July 25th. July 25th, 210s and 220s left. Apple.
But regarding crypto and the self-directed space, I think there is something more under the surface that we're not really talking about too much, which is global access to domestic
Apple, nice.
see this increase of 20% in trading or 25 trading, and that's not necessarily night owls that are up in the middle of the night.
Okay, Super Micro. Okay, bounce. Super Micro looks like some profit taking, shaking some people out. Super Micro. Super Micro. Okay, I got a doji for now. They got probably got some sellers right here in this wick. Okay, there were some buyers there looking for a breakout. You can see the volume started to ramp up. It's still trending, 921 day. There's nothing that says it can't come back to, say, 49 to the 9 EMA again. Would love to see it break out. It all depends on what traders think. Do they come in and start buying? We'll see. Tesla, though, Tesla looking good. Okay, so Tesla catching a lot of people short, it looks like, for now. Okay, supply is overhead. A great distance overhead. So let me look on the 5 minute here. 5 minute, I don't see anything on the 5 minute. Let's go to the 15 minute for Tesla. Tesla 15-minute, nothing there. Let's go to the 30-minute. 30-minute. Okay, 30-minute, we got supply at 316. So I got 312.50, so that's good. Let me take a look at Money Magic's levels for Tesla. July the 10th. If you're not using Money Magic levels, you're missing the boat here. 297.50 and 300. All right, so we're above the call walls. Okay, Tesla. So you know what dealers have to do. Okay. Tesla's above in the gap. Okay. Dealers need to scramble to buy shares to hedge their shorts.
Amazing just to watch this big story on one hand, AMD catches up for Intel's video closure breaking itself up. This weird times in some places. All right, everyone, stay with me. Straight ahead, Roku finds itself on the downline trending ticker page after a seasonal upgrade. Details, and then we'll dive into our stock of the day. Your clue here, you probably don't.
Okay, SoFi. I've been looking for a dip to buy some SoFi. Okay. Off to the races, SoFi. Wow, that thing is gone. SoFi gone again today. I have small shares. I want to add to it, but I can't do it when it does this. Okay, it's going. SoFi looking really strong. Those are limit orders going off for sells into strength. SoFi looking very strong. Many of you in the trading room have been talking about this one. It's been on the watch list off and on a few weeks back. The extended watch list. Loans are being repaid. So student loans being repaid generate the bottom line. Palantir is going some more today. Palantir more. Okay, Apple. Okay, Supermicro just kind of figuring out what it wants to do. Apple grinding higher. Nvidia with a nice bounce. Shorts covering on Nvidia. Nothing yet on Amazon. Shorts covering on Google. Meta trying to see if we get any short covering. Tesla. It's above the call walls. Money Magic's levels will update as we blast through these areas. I'd look at round numbers 305 and 310. Okay. Nice move. SoFi. Okay, let me look at what Brent's been looking at. Gamma. Let's see. Maybe sell some premium. Okay, Coinbase, Target, Intel. Intel has high implied vol. Intel looks like it wants to keep going. Intel looking very strong. I believe, Sundog, you've been in this one forever, right? I have a very small position in Intel. I think it's like 50 shares. I'll have to check, but and not even in this account. It's in my longer term account. Apple still pushing. Apple looking for it to push again off of the low that we saw yesterday. We're bouncing. Could see a nice expansion day on Apple. Looks like shorts are covering right now. Tesla, same. Shorts covering. The dealers having to buy shares to cover their short call positions at the 300 strike. Above the 300 strike, you know what happens. We get dealers come in. Dealers don't like directional exposure. So you got a lot of people that are long the 300 call. Okay. So once it moves above 300, the dealer has to start buying shares in order to hedge their short calls because you're long, they're short, they sell them to you. And then we get this tailwind. So it depends on how far this goes. And you got people that are short shares as well that are getting caught. Okay, let's look at some of the other chips like Taiwan Semiconductor, a little expensive on the IV. Taiwan Semi, Supermicro, Walmart. Walmart looked good last week, and now it's drifting back below the 50-day. That's disappointing. I thought we were going to get some kind of follow through on Walmart. Okay, Apple needs some more follow through. Got a lot of back and forth on the New York Fangs right now. Most of them are lower. Most of the New York Fangs are lower. Only Tesla and Apple are pushing a bit higher. And those are tepid. Not a huge move so far. Okay, let's see what's the top of the list. Booking.com for a fourth day is the top of the list. BKNG, top of the list.
Absolutely. The market is reacting positively. So from the surface level, it looks like the market prices. I agree with you. The deal was absolutely at a premium. And comes with a lot of debt.
Intel. Okay, so we've got pretty expensive IV on Intel. So be careful chasing. You don't want to chase it at the highs. Intel, when do they have earnings? Intel, July 24th. So we got a couple of weeks. That's Thursday, 2 weeks from now. Thursday, 2 weeks from now, not next Thursday, following Thursday is Intel earnings. They beat expectations last time around, believe it or not. Their earnings growth is 50%. So that's based on previous. They beat the top expectation by 700%. This is Intel. Okay. So revenue growth isn't that great. It's flat, but earnings growth looks good. So compared to previous earnings, they're starting to turn the ship, perhaps. There was a point where Qualcomm, I believe, it was either Qualcomm. Yeah, I think it was Qualcomm that was looking to buy them or take over some of their capacity to produce. I think it was something like that, right? Anybody remember exactly what that was? Qualcomm's just sitting here. Okay. Okay, it looks like I did sell my trading account. It looks like I did sell my Qualcomm. Let me just click the little linky thing there. Okay, so that was Friday. All right. Apple, seeing wicks up high. So there's profit taking. Tesla, no follow through. Supermicro. Okay. Supermicro is still up about 80 cents, 60 cents, but off the best levels of the session. We hit 51.70. Futures are starting to drift a bit lower. SoFi looks like it wants to keep going. SoFi has been doing really great over the last couple of weeks. SoFi, once it broke out, it built the right side of this cup. It's a cup with no handle. SoFi, cup with no handle. SoFi cup with no handle.
But those free research for the folks at Ferraro, estimate sort of. Question today, a lot of the departure of CLX, unless seemingly not running X, juncture, is all this more bad news for Tesla shareholders? Just that it's another business that Elon is seemingly running at a time where he's trying to get where it was in 2 years.
SoFi is still going. Volume shows institutions have been picking up shares. Okay, Supermicro coming back in now. Supermicro. Supermicro coming back in now. Okay, it does this. It does trap bulls that chase. You don't need to chase. Wait for this dip to get bought. Okay, it's bullish. The stock is bullish. The trend is bullish. The 10, 9, the 9, 21, 50, 200-day all pointing up. Well, the 200-day is starting to turn from pointing downward. It's flat. But this is trending. So not surprising if this came all the way back to the 90. It may shake even more people out that aren't really sure what they're doing. Okay, this is a swing that's going to last for weeks and months, most likely, till we get back up to the 60s. I guess once they report again, we'll get more news out of that. Meta pulling back quite quickly here. All right, starting the bounce. Okay, Supermicro off now. All right, so the airlines have been doing well. So look for these to dip first, okay? Look for them to dip like Delta, LUV. Don't chase these, okay? Look for a dip to buy, but these are all looking good. United, Delta, JetBlue, Alaska Airlines, Hawaii Airlines. Is it HA? Is that no? Or did they get bought out? Hawaiian Airlines, Hawaiian. Hawaiian Electric. No, they got bought out, right? Did they get bought out by Alaska Airlines? I believe something like that. Alaska, LUV, Southwest. Is Save still? What are they doing? Save? No. Okay, Southwest. Now watch these YouTube videos of the crazy people that are on airlines these days. People losing their mind on an airline. You know, getting people. All right, so Supermicro is pulling back pretty quickly here. All right, so wow, the shorts really got a number there. 51 down to 50. All right, people are probably freaking out right now that bought the high of the morning. Supermicro. Supermicro, rather dramatic pullback here. Okay. So Supermicro, long and strong. Supermicro, looking for buyers. I might actually add on this dip. Supermicro. Microsoft is starting to bounce. Microsoft looked good yesterday. Microsoft, and in a minute or two, Microsoft starting to bounce off the low. Microsoft making new all-time highs yesterday, still trending. Okay, so let's look at some of the Dow Industrials for Farmer Jim. Farmer Jim likes to look at these. Start the day. Apple, Apple at the high of the morning. Still a doji. Apple just off the high of the morning. Okay, Amgen looks like it's going to trend and follow through. Let's rank these by. Actually, you know what? Let's just look at the candle glance. That way we can see all these charts together. Okay, so Boeing inside of yesterday's wick. American Express looks like a 3-candle reversal. Caterpillar following through. That's one Steven likes to trade. You know Steven as Catwalk something other, whatever your whole name is there. I don't see it. Catwalk 2265 Ghost Trader. You need to make that a little bit longer for me so I can say that. Okay, Home Depot looking pretty good. Home Depot, Cat, Home Depot, bullish and trending. You know I'm just busting your chops. Caterpillar looking good. Bounce on Disney at the 20-day. Disney bounce at the 21-day. J&J bullish. Okay, J&J and Merck, both of those moving higher. IBM losing the 21-day. JP Morgan looking for a bounce. Merck, Doji, 3M bullish. Okay, McDonald's above the 21-day. Oh, I hate this commercial. It's the cozy photo blanket. It's nauseating. All right. Okay, so SoFi is flagging at the highs. Maybe sell some premium up here. Let's see what SoFi looks like. SoFi. I have shares, so I may want to sell some premium. SoFi. What is it trading at? 21.30. Looks it's been in a very bullish trend. 21. Okay, 65. What if I go out another week? 23, 24. Okay, Coca-Cola moved lower. Nike flagging out. Okay, so you got Caterpillar, you got 3M, McDonald's, Merck, J&J. All these looking bullish. Home Depot. Let me take a look at Home Depot. Let's see what we're going to do with Home Depot. Home Depot looks really good. It's above the 50-day. Came back and tested the 50-day, which is good. You got volume 2 weeks ago, 3 weeks ago. You had a lot of volume on the last week of June. That's institutions. When did they report? Home Depot. Let's see when they report Home Depot and their earnings. I mean, that place is always busy. They missed earnings. Okay, growth isn't that great. Let's take a look at Lowe's and see how they're doing. Lowe's, not as busy whenever I go into the Lowe's. You know, there's people in there, but it's not like Home Depot. Home Depot is usually packed contractors. And wow, their numbers look really terrible. Lowe's. Okay, so here we go. SoFi coming back in. SoFi. Okay, there goes Apple. Apple going there. Taiwan Semi. Okay, Taiwan Semi. All right, just if you take anything share wise, make sure you're checking earnings dates. Okay, I'll do the same.
Sure thing, Joey. So you started with
three overall catalysts. I'll give you three kind of sub-catalysts.
Tesla.
In this trade story that we're watching.
Little fade on Tesla.
The one you mentioned, these spiking tensions with Brazil.
Okay, Netflix dropping off a bit more. Netflix.
50% tariff threat on Brazil last evening. Over this
Apple still going. Apple running higher. Apple.
President's already shot back that they don't take orders from the U.S. And so tensions are rising there overall, with trade now sort of center stage of that. And so that's the story that we're going to be following today. The second one is Europe. This today is Trump's self-imposed deadline for either a deal or a letter with the European Union. This is the biggest.
Amazon, Google, looking for those to turn. They're starting to show. Starting to show some short covering. Let's see, Apple. Apple. Okay, Apple looking like it's going to do something here. Okay, Apple running. Okay, I do have calls, Apple, July 25th, 210s and 220s. The 210s are doing well. Okay, futures did pull back a bit. Okay. Yeah, Jets is good. You can do Jets as well. Good point there, Frank. Jets looks good. Okay, that's breaking out. Bollinger Bands opening up. I doubt the airlines are going to pull back in dramatically. Jets. Bollinger Bands opening up. Okay, let me take a look at this real quick. Jets. I don't want to buy it at the high of the day, so I want to buy on any dips on Jets. Okay, so this is zooming higher. Okay, these are all pushing higher. Delta, UAL. These are starting to taper off a little bit. Starting to see a little profit taking. Okay, so Jets. Wait for a dip. I'll wait for a dip on Jets. Jets looks good. Bollinger Bands opening up. RSI rising. Volume looking good. The previous 2 weeks. MACD and stochastics look bullish. You just don't want to buy the high of the day. That's the only stipulation I would make, is that don't buy up here. Wait for the dip. Got to be more regimented. Okay. Okay, what's Coinbase doing? CONL. Coinbase. Okay, trying to get its footing. Let's take a look at, let's take a look at how the markets are shaping up. Okay, so we got hedging flows, you can see, straight down. Okay, watch for those hedging flows to turn. We know 6250. 6250 is a support zone. Okay, so I might get some long here. Might do some S&P long. Let's see, we back up to 6280 S&P. Okay, wait for that hedging flow to turn up. Okay, all the New York FANGs are down except for Tesla and Apple. Tesla's off the best levels of the session. Okay.
The gap between the US and the rest of the world is shrinking after a very long time. And the first place you can see that is in the currency markets, because the dollar is not behaving how it usually tends to behave. A lot of the traditional correlations that we've been used to in markets are not working the way they have been. In fact,
okay, all the New York FANGs are lower at the moment. Okay, so tech getting sold. Okay, watching for a change in direction here. All right, let's look at some of these like NVIDIA. NVIDIA yesterday had a really good day. Its hedging flows was rapidly rising. Okay. Let's see what's today. Let's see what next expiration looks like. Next expiration.
you look at the S&P 500.
Okay, this isn't, I don't see today's data yet on NVIDIA. Okay, that's Wednesday. How do I shift this to today? How do I change this? This is one thing, getting used to this platform.
So a lot of ways it's going to be positive for American companies. And I'm curious too, we kind of had the administration at different times take different.
Okay, so this will update here shortly. All right, trace. Looking for this to turn up. Nothing yet. Nothing yet. Starting to see maybe a hook upward. S&P big cap options for today, 0 day. Okay, so the 6280s must have got crushed. 6280, $1.50.
There was a BRICS meeting earlier this week that clearly pushed Trump to threaten this additional 10% tariff on BRICS, partly because there's an idea floating around there.
Okay, I bought a few 6280s up there at the highs.
Yeah, Jonathan, let me ask you about that. Is that a realistic concern that the BRICS would somehow come out with a currency where that one of their individual currencies would be real competitive with the dollar?
I think the BRICS has floated the idea of having a unified currency, which I think is unrealistic because that needs them to have a unified monetary policy. But given the very unique emerging market nations that make up the BRICS, summit, I think that would be very hard to achieve. What they can do alternatively is, start trading more in their local currency and settling their trade balances in local currency instead of the US dollar, which I think.
Okay, risky, but I'm looking for hedging flows to turn. I bought some at $1.50. They're $1.75 now. 75.
But that ultimately you do need a weaker dollar. But what I think does not sit well with them in the short term is that dollar weakness is coming from a loss of confidence, and if it's being initiated by other countries thinking about diversification away from the USD. I think he wants it more.
Some of these people they have on, I wonder what the hell they're smoking because they say some things that don't make any sense. I think they're just like they represent a firm. They're sent out there with talking points, and they just regurgitate them. But some of these things don't make any sense.
Following the 150% rally since the April low. So they believe that it's a bit overdone. But
she was talking about U.S. exceptionalism, and she's talking about how the dollar moving lower, having some big impact in the way they talk to clients or whatever. I remember back in 2008. Remember 2008? I believe it was 2008. Let me go look. Let me look at this real quick. S&P 500. I believe we're down in the 70s. You remember that? Remember when the dollar was down in the 70s, high 80s, high 70s? U.S. dollar. Let's go here. Okay. Yeah, it was 2008. 2008. Okay, so everybody was like jumping up and down back then. The lady that's on, nothing against her, but it sounds like she's just regurgitating information that she sent out there to talk about. But she's talking about the dollar, U.S. exceptionalism tied to the U.S. dollar isn't what it used to be, blah, 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 blah. Well, you could have said the same thing back in 2008, and look where the dollar went, right? And look where the market is now since 2008. We've been in the longest secular bull market in history, secular being long-term, cyclical within the secular bull. 2009, March 9th, 2009, we reversed. The markets went higher, and we continue to trend higher. So I don't know what she's talking about. You got to take, I won't say gaslighting because this is not politics, but that's what it kind of reminds me of. You have to double check what these people are saying, because if you rely solely on what you hear on the media, you're missing the boat here. Look at 2008. That's when the dollar was the lowest it's been in my lifetime, my investing lifetime. All right. 2008, 2009, we reversed on March the 6th, March the 9th, 666. Remember 666? And this has been the longest secular bull market in history. This beats out the 1987 to 2000 rally. Okay, so it helps to look at the long term because we are making new all-time highs and everybody's jumping up and down about what the market's going to do next. Over the long run, the market's going to be moving higher. I have no idea when the next huge bear market's going to come, but AI is certainly helping the bulls. Anyway, back to Tesla. Tesla just sitting here trying to push a bit higher. S&P. Okay, we were watching S&P. Okay, so we got a hook. Okay, I just bought the S&P 6280s. Why did I buy 6280? You see that resistance up there? Now, I'm not looking for it to get all the way back to 6280, but if I double these that I bought at $1.50, they're $1.90 now. Okay. So, looking good. Okay. All right, if you read the morning update, you know that we should stay within this range that Brent was pointing out, the positive gamma area.
We did get a downgrade. There's also been recent upgrades. I'm just going to be looking forward to the future here. I do think recent Washington advancements has been good for the crypto space. I'm really excited about what tokenization can mean for some crypto firms. I think Coinbase is uniquely placed to take advantage of some of that. Robinhood's really interested in that, but Coinbase might be the leader if we are looking at looking at buying shares of tech stocks in Bitcoin could be very interesting. So yeah, that's very exciting to me. And I have a reasonably bullish trade I'm looking at through December. Of course, volatility is very high, not to be surprised.
Okay, nice turn here in S&P.
370, 430, give me $50 of upside exposure. And I'm going to finance that actually by selling a downside put spread, 350, 300 put spread. Very expensive options, of course. I'm going to actually only pay $1 to have $50 of upside exposure from 370 to 430. Now, I am, of course, risking $50 of downside exposure down to 300. Yes, it is very risky, so I'm aware of that.
Okay, here we go.
In Coinbase right here.
All right.
I have a lot less risk than owning the stock outright. I have capped out maximum loss down to 300 if I bought the stock. Number one, I'd be losing from 373 all the way down to 350. So I don't have that exposure. And then I'm also capped out at 300 here. So for me, it's a much better way to be in a name, which has had such a big run up recently.
Okay, looking good.
Given what we know about just the market right here, and of course, Coinbase in general.
At 100%, if I get 100% out of this, if I get up to $3 on this, these options, I'll take half off.
Will be the next stop. So we have to wait and see. What's your big picture market thought here? We've been hearing seasonality being a big part of it, that these 2 weeks, week 27 and 28, going all the way back to 1990, are strong weeks.
Okay, so looking for a little bit more. Watch those hedging flows. Okay, we're up almost $1 now on these calls. Okay, SPX, S&P 500, S&P 500. Okay. Nice reversal. S&P cash.
We also tend to see some rallies there at the end of the year too. So given the recent market action, I think
in the past when I would take a position, we'd get a little pullback I wouldn't be basing it on gamma in the past. And I certainly didn't see the hedging flows like Brent's alpha subscription with these trace, being able to see the real-time hedging flows of dealers. Okay, dealers, this is real-time hedging flow. This purple line is telling, or blue line, this is telling me what they're doing. We got some positive gamma down here below, looking for a push up. Okay, I bought the 6280s. There we go. All right, so I'm up 100 $100 per contract now. All right, so climbing, S&P climbing. Okay, let's get some more out of this. Big reversal. Apple's still going. Okay, Apple. Apple. Shit, I was gonna add Apple and I didn't do it. Okay, there was SoFi. SoFi bounce. Okay, so we still got 8 out of 10. All right, that's super micro dip buyers. All right, super micro dip buyers. Okay, just watching S&P. Nice move on S&P. Fair value gaps on the way up. Note the buy order blocks here. Note the buy order blocks from yesterday. So using spot gamma over February, I want to say November, December of 2019. 2019 is when I started following Brent over at Spot Gamma. He's a ex derivatives trader from, I believe, Credit Suisse. Don't it's either Credit Suisse or HSBC or one of those. But he started this site, Spot Gamma, and he started talking about how gamma and watching option flow can help you out a great deal. And okay, watch this move here on the S&P. Starting to come back in. Watching what the dealers are doing and how hedging flows can help you navigate the markets.
With guided learning paths stacked with content curated to fit your unique goals, you can spend less time searching and more time.
It's something I've been following since right before COVID. It's a good thing because right after COVID, we dropped dramatically. A very similar drop to what we had back in February through April. If you look at the 2020 pullback and compare it to the current pullback from February into April and the reversal, eerily similar. Eerily similar. I posted a chart a couple of days ago that someone from StockTwits had pointed out, and I thought it was pretty interesting. Anyway, just watching the hedging flows here helps out a great deal. Okay, so if this turns back down dramatically like it is right now, I might sell these calls actually.
Yeah, I wouldn't necessarily just say this is a product.
Let's see if we get any kind of follow through here.
Of derivative income ETF, auto callable income, the ticker symbol CAIE.
Okay, I sold some of those calls. I'll if this dip gets bought and these hedging flows turn back up, I will get back in.
Derivative income ETFs already. Those are all covered call strategies. Well, in the structured note space, the other half of that pie is auto calls.
Nice day today. I hope everyone's having a good morning. I'm your host, Cousin Benny, coming to you from theclosingprint.com on a fine Thursday. A little overcast here in Myrtle Beach. Hot again today. Costco Had a bad print yesterday on Costco. What's Costco doing now? Costco. No, I don't know why these calls are getting. This is weird. Costco just sitting down here, not moving, but could be people buying calls that are paying up for them. August 15. Let's
Oh,
see.
exactly. Yeah, John and I were talking the other day, and he said, you know what you've built is really a reverse convertible, and he's not wrong. You know, we're the largest converts manager in the country. So John was very familiar with the structure that we did. The original auto call was a reverse convertible. We've taken that into the future. We're delivering that type of structure in.
Okay, Costco not getting much follow through there. S&P, watch here, S&P, choppy.
Because you have different products for how much risk you want to take in Bitcoin. You make money on the upside, but you're protected on the downside. You have something you could tell us about that.
Yeah, every quarter we launch a new suite of.
Yeah, Corey, after I'm qualified, I can't really, I'm not qualified yet.
You can now get Bitcoin exposure, a $2 trillion asset. It's the second largest commodity in the world. You can get that with the level of risk that you want. 0% downside, 10% downside, or 20% downside. So CBTY is our 20% downside risk product or 80% protection. You can now tie that to the price of Bitcoin.
Yeah, once I'm proficient, I'll no problem.
To Bitcoin. So the simple story is we've mapped Bitcoin to the traditional portfolio. Maybe you're swapping equities for the 20. Maybe you're swapping gold for the 90% protection, or your safe money for the zero floor.
With Bitcoin at record highs in the last 24 hours, you must be getting a lot of calls for, the FOMO gang, who said, "Oh, I didn't say. I knew we should have bought that at 60,000 or something," but at the same time, they're fearful. So this kind of opportunity with these different.
You can see how quickly these change. This turned up, then now turned back down. So we're back down to there's support down here. The hedging flows down here. All right. I did take those calls off. Okay. Supermicro turning back down.
I feel like each time I speak with you folks, you're more about setting up a portfolio with a strategy. Is that right?
Yeah, I think a lot of advisors are moving from the 60-40 portfolio to more of a 50-30-20, where that 20 bucket is more alts. Calamos is squarely positioned for that alternatives bucket.
Right.
Look at products like CPSL is a laddered, principally protected equity product. So for folks like retirees, that are coming out of their accumulation stage into
okay, so say I was just trying to figure out how to get the flows for today, so I just figured it out. You got the dates here, start date. For whatever reason, it was stuck to yesterday. So you can see the flows in NVIDIA continue to taper off, Corey. So once I see these flows start to turn up, that's when I'd be interested in buying the dip. Let's take a look at Supermicro. Do I have Supermicro here? Palantir. Okay, you can see all of these are starting to see flows tapering off from the open this morning. The open's over far left is the open. Okay, let's look at SPY. SPY right now. Okay, you can see very quickly this dropped off. Okay, it might bounce again here. Watch for the bounce. I might buy some more calls again. Okay, that's SPY. Meta's down. Meta is down. Okay, let's look at Apple, for example. Apple, okay, Corey. Apple, all right, you see the hedging flows are turned up on Apple. Okay, from the open, hedging flows over here just kept going. All right, you can see over here at the open, right at 9:30, this started to take off. After initial dip, there goes Apple.
Right. Well, it's always nice to see you, Matt. Thank you so much for being here, and the whole Calamos Investments team. Always a pleasure to have you on.
Okay, Apple hedging flows, continuation. We're going. Apple. Apple continuation.
Morning Trade Live.
Apple looking good. Okay, I'll buy a 40 Delta. That's 215 Apple. 215, 220, something like that. Okay, I bought some 215s. I got 210s and 220s. Bought some 215s.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
Yeah, Corey, it's a good tool. It's definitely a good tool. It pays for itself.
Ready for you, ready to go. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
You'll love Carl's Way. Take a left here, please. But there's a Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Yeah, it pays for your trading. For example, if you were thinking about buying Apple, right, this morning, Apple was chopping around, but the hedging flows kept moving higher. So Apple continues to show strength. And if you look at the daily chart and you plot out Apple, okay, you can see that it just bounced. Now, you know that I love these pullbacks, and I especially love when I see the second day bullish. Okay, so you get the pullback to the 90 MA. We know we broke the downtrend. 50-day is below us, 921 day. 21 days is going to cross through the 50. So that means all three of these are going to turn up and to the right over the next several weeks, next several months. Most likely, Apple's going to be back up here at the high. And the people who are buying here, like institutions, pretty obvious institutions were buying, right? Yeah, that's going to pay for your tool. That'll pay for that tool pretty quickly. Let me see if I can get you a discount, Corey. Let me talk to Brett.
Helping with the estate distribution, the two grandchildren planning for their college educations. Someday it'll be their turn.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platform. Bring your trades into focus on Thinkorswim desktop.
Let's see.
Including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab. Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl.
Schwab, a modern approach to wealth management.
Welcome back to Morning Trade Live. It's time for Horn will take us through the fundamentals. Rick Ducat will take us through the technicals. So we'll start with, and we're going to have Dan Ives later here on Schwab Network on the watch list for the 2 p.m. show. Dan Ives looking at Palantir. He loves this name.
And I think there's a lot that do right now, frankly, is that this name has gained, I mean, not only just really notoriety in the commercial space, but also as far as its revenue relating to the U.S. government, it continues to secure such massive contracts. I think there's definitely a lot of enthusiasm to be had. And I will not step on Rick's point about the charts, but technically speaking, this has been one of the most resilient names in spite of the overall tech downturn. You can see a pullback there when we saw the market nosedive earlier in April, but it's really recovered nicely. And like we said, Dan Ives did raise his price target on shares right now to 160, which signals about 12% upside with its current price over just the next 12 months or so. In a post on X, Ives did express this growing confidence in their AI strategy.
Okay, Apple's still going. Yeah, okay, so let's look at AMD, Corey. All right, so let's look at AMD.
Does still have this potential to dominate AI despite its forward PE, which is
Okay, so
56 times its forward earnings, which has always been a concern.
let me get rid of some of these here.
We're leaning pessimistically at Palantir.
Some of these I don't need. I don't trade that often. Okay. So let's go to AMD. AMD. Okay, add a tab. AMD. Okay, so you can see the hedging flows are starting to taper off.
We talk a lot about the growth we've seen again in the commercial segment of its revenue, but government still remains to be a huge driver of growth, and I think also showing signs of a more mature Palantir than the days when it was, I mean, super high growth, super high volatility, but not profitable consistently. Now we see, I mean, just consistent partnerships of fundamental improvement and firing on all cylinders under the Trump administration. So
okay, Apple's still going. Okay, Apple's still going.
Obviously hurt some names. It's only been a sizable tailwind for Palantir.
It's amazing because he's loved this for so long.
Okay, looking good.
So much upside.
Okay, there it goes. Just turned up. AMD.
So let's look at this chart, which has really taken off.
Yeah, for the most part, the price action has been traveling within the boundaries of this upward sloping.
Okay, Apple's still going though. I gotta keep an eye on Apple. Got to keep an eye on Apple's hedging flows. Okay, SoFi back up to the high of the day. SoFi back to the high of the day. SoFi back to the high of the day.
But a bit of a slip today. For now, we can see though that price is above the yellow 21-day.
Okay, so I want to buy some Nvidia, but I don't want to do it until I can see these hedging flows. All right, so it looks like we turn back up. Trace, turn back up. Okay, not yet, not yet. Looking good though. Gamma, delta. Okay. So it looks like we're going to go again.
To the downside a little bit further, we have the bottom of our range lows there at our light green line there near 120. So those could be some downside areas to consider. For the most part, though,
S&P looks like it wants to run.
Exactly with what the bulls would want to see. Bearish divergence here, marginally lower highs on the RSI. This price continued to make new
62.80.
Not a mismatch between momentum and the price action here. Now, this doesn't mean it's going to be some collapse in prices here. It could just be a slowdown as part of the next leg to the upside, but it is worth noting that the pace of the gains is starting to moderate a bit here. If we were to look at our other studies, standard deviation channels and volume profile, we can see the area in which I mentioned earlier, 120 to 133. That's where most of the near-term volume is. It also represents an old significant high point for right there. So this could be a further supportive level. To the upside, that's a bit trickier though.
Okay, Apple's still running. Apple's still running.
The top of our channel could come back into play. Right now, that would be maybe around 155 or so.
Momentum may slow. I mean, you can't have 400.
Okay, S&P back up to the highs. S&P back to the highs. Apple Beautiful apple. Apple's still going.
Yeah, I did see a price target hike. You're going to tell us all about it, Jenny. In the meantime, they could be investing billions more into Anthropic. I mean, Amazon is ever changing what they do. It's not just getting your boxes at your door. Some of the latest.
I know that is how I tend to think about it myself because
Okay, S&P is turning again. S&P. You can see S&P is turning again. The hedging flows. Okay, Nvidia is starting to turn.
To unlock demand for additional retail categories and retail growth. The firm does believe AI is a key driver of this digital transformation, and AI can help AWS growth to accelerate as the AWS opportunity they still actually feel remains underappreciated. And 285 obviously would imply some nice upside from where we are currently trading just below 221.
Yeah, Corey, that wasn't me. That's that's just the dealers, right? Okay, Apple looking good.
Amazon did unveil new powerful AI servers to support now NVIDIA's most advanced chips. So speaking to the fact that right now we are seeing this significant high demand for NVIDIA's latest chips, but AWS decided not to wait and build new liquid cooling data centers and instead has engineered custom hardware to be cooling NVIDIA's GPU workloads that are used in AI. And of course, we are still right now in the wave of the Prime days. Now, I remember when Prime Day was truly just one day a year. That has since very much changed, of course. Now, this time running, of course, from July 8th through the 11th being its longest Prime Days event ever. So for that reason, I mean, so many are saying we can expect to see spending on these Prime Days rise as much as 50% from last year. So I know AWS is more of the focus of the street, but I do find some of the ways in which Amazon has utilized AI on its e-commerce platform to get like customized search queries as well as perhaps the best deals. I mean, it does definitely impact the way you shop. It makes it a lot easier and frankly, easier for us to spend money as consumers.
Right. Thank you for that. You know, your thoughts here when you take a look at this chart. It's at 220 today, Rick. What are your thoughts?
Once again, a bit of moderating growth here in terms of our stock price. So we can see that if we were to begin at those April lows when we had all those tariff announcements, the recovery was pretty swift. We had this steeper blue trend line, but shortly after earnings, things started to slow down a little bit. Now it would be more like these two white trend lines making this channel a slightly more modest slope, but still on the move to the upside here. Once again, though, bearish divergence on the RSI price making new closing highs. RSI trending downward, though, still in the bullish range, still also have a green trend line in play, very slightly sloping, almost horizontal trend line, but higher lows nonetheless here. So it's kind of a mixed signal here. One thing to be on the lookout for is if prices do start to decline, green line near 216, it represents a high point,
having a good morning.
Point after a gap, low point, breakdown point, and then more highs further. It also, like our last chart, lines up with some other factors here, our 21-day exponential moving average and our trend line. So if we start to get below 216, that could be a warning sign. The next potential support area based on the price action would be this area here, a series of old highs here, 206 or so. Now to consider our other studies that we follow, the area in which we are kind of stuck right now here near these highs around 220.
Dealer hedge flows are still going. Apple still going here. Dealer hedge flows.
The old gap here near 236 is a key point to watch to the upside. To the downside, 216, that comes back into prominence here. There's also where volume starts to pick up again, and our yearly linear regression line, our line of best fit. So a lot of supportive factors in that area.
Thank you for that. And we go from one max 7 name to the next, and looking at Meta with a price target hike. This is a name that really has served its shareholders so well. Now what?
This was our name that was out for 20 consecutive sessions at the beginning of this year, which I always like to talk about because it was such a fun, really record-setting time for Meta Platforms as the year of efficiency has really rolled into now the year of efficiency, but they're shelling out cash. So I don't know how much it would become, but the event did note this, while raising their price target, substantially to 765 from 690 with a buy rating, noting Meta has made an investment of around $3.5 billion to acquire a 3% stake in the Ray-Ban and Oakley parent company Luxottica, signaling a deeper and longer-term partnership to develop smart glasses. So Luxottica is the largest, most powerful fashion brand I've never heard of, frankly.
Okay, let me take a look at NVIDIA. NVIDIA, I want to buy some NVIDIA, but I'm waiting for these hedge flows to turn. Trying to turn.
More high-income consumer with that 3% stake. But the latest investment, in this analyst's opinion, does reflect right now the strategic focus on the smart glasses and Meta's wearable strategy, as well as the full immersion of VR goggles, likely underperforming expectations. So it's been a long time since we have discussed some of their, of course, like Reality Labs offerings, which has been a quietly underperforming aspect of their business as it's never been profitable. But Meta's still trying here. Those that do have these smart glasses.
Okay, Meta's starting to turn. Let me take a look at Meta. This is going to be another one. Looks like another one. Meta's starting to turn. Hedge flows are turning. Meta. Let me take some Meta here before I post in the trading room what I'm going to do here. I want to take the trade. Okay, so the hedge flows are turning on Meta. Looking for her coming off the low. This is going to be a Friday. This is tomorrow's calls. This will be pretty risky. Man, you know what? I'll take the 18th. What the hell? I'll take the 18th expiration. I'm going to go to a 40 delta. I'm going to buy the 730 and I'm going to sell the 740. No, 735. 735. 730, 735 on Meta as we turn. Okay. So it looks like a good risk reward. Okay. Trying to get, okay, just got filled 730s on Meta. Okay, so that's the first position. So I'll add to that if it continues.
In this case, it's not really a channel. It's more like a rising wedge type shape where our two white trend lines are converging toward each other. We have another similar supportive point, though. If you were to look here, that's kind of where we started to experience our breakdown. Then it was our highs that we saw on the way toward making these new all-time highs. 705 or so lines up with our 21-day EMA as well. So
Apple.
These supportive confluences that you could consider in your trading here. And from there, though, the next low point to consider, 681, this brief double bottom area where price did experience some consolidation. To look at our other studies, though, once again.
Okay, Meta hedge flows. I just bought the 730s for 18 July.
More emphasis on that area. Our +1 standard deviation channel, though, just above those old highs. So even more important for the bulls to break through that area because there's potential resistance there based on that study here. So kind of a tense moment here. Will we make new highs? Will we collapse?
And, I will ask folks to thank you for all of that, Jenny and Rick, but I'll add about Mark Zuckerberg and he spoke at the Harvard commencement. He attended Harvard. He got in, or I don't know if he actually.
Okay, Meta looking good. You're looking at Meta on the screen right there, Meta.
Was when he got into Harvard, even more so than when he created Facebook. I thought that was sort of funny and sort of tongue in cheek. But he talked about.
Yeah, Joel, it looks pretty good. Looks pretty good. I'm looking at what you're looking at. Weekly. Yeah, weekly. Maybe buy some, Joel, maybe buy some weekly, not some weekly, maybe buy some leaps.
But we do have some back and forth action, a lot more to discuss. Morning Trade Live will be right back.
Okay, I'm gonna buy some Intel. IB's kind of expensive. All right, Apple's pushing. Okay, Apple. Microsoft is turning. Let's take a look at Microsoft flows. Okay. Bitcoin play. Okay. Yeah, you can see, Corey, that Meta is turning from below. I can adjust this. Okay, I can just grab this and move it. All right, I can move it. So it's really irrelevant. It's the pivot you're looking at.
What's up, Carl Nation? It's your number one broker with the best full service wealth management skills in the biz.
Actually, I'm seeing something from Schwab. Uh-oh. Yeah, Schwab lets you invest and trade on your own. And if you want, they can even manage it for you. Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
Again, this is dealer hedging flows. This has everything to do with the calls and puts, but it's the dealer that you're looking at, what they're doing. Okay. Okay, let's look at NVIDIA. I want to do some NVIDIA. NVIDIA. Okay, still sitting here at the low. Apple, still going. Apple's still going. So if you look at Apple, the hedge flows on Apple continue, right? Okay, we're starting to taper off here, so you might want to take some profits. Yep. Hands down.
Schwab Network contributor, and Michael McCurr, director, Schwab Advisor Services. Thank you both for being here. Sam, as we see the
Yeah, using this and the hedge flows. Okay, so I look at the buy order blocks. Okay, you can see the buy order blocks. See how they started right at the open on Apple, right? Look at the buy order blocks right at the open. Okay, now we're starting to see some profit taking. So I'm going to take some Apple off here into this strength. Okay, Apple. We're going to take some off into strength.
$4 trillion market cap club, and whether we could see now shift in focus to the $5 trillion club as well. So obviously we've seen the tech rally continuing.
Can we get some more out of this?
Uncertainties, but also looking at Delta, of course, we've seen the earnings.
Okay. S&P is still going. S&P is still going.
Today, earnings revenue beat the street. So they also brought back the 2020
S&P, big trade on S&P. Game changer for the S&P. S&P big cap. Okay, you can see the hedging flows. S&P big cap is still rising.
52-week low off the back of their earnings. They did actually come in below Wall Street expectations, so a bit of a miss there. And then Helen of Troy also sinking today on disappointing second quarter guidance. So as we start to see some of these earnings coming through, as I said, there are some really interesting individual stories to focus on today.
Delta, wow. Yeah, Delta's incredible how that's been the leader, but so many bits and pieces. And that's what Liz Ann Saunders was saying. Now earnings season, some of the earnings estimates may be too low, but it's going to be the outlook from all of these companies. The leader in the S&P 500 is Delta right now. United, Southwest, Albemarle, Estee Lauder, among the other winners. Michael McCurr, your thoughts today?
Sure. So first, I typically start from a technical perspective, looking at the macro market. I look at the S&P 500 and the U.S. 10-year yield. So starting first with the S&P 500, I think the technicals continue to look quite constructive, medium to long term. There's a lot of technical support or technical demand that we've developed over the past few weeks and few months. From a near-term perspective, I do think that the market is a little bit vulnerable up here. You look at momentum and breadth those two lower panel oscillators. Those are definitely in that overbought or overextended territory, which
Okay, hedging flows continue to rise. Are looking good.
that tend to be happening. You look at small caps outperforming, momentum and growth, underperforming a little bit over the last week. That on the cap weighted index, where the bigger companies certainly drive a lot of the performance and returns in the S&P 500 and 100. Overall, the market hasn't traded at its 10 or 20-day moving average.
What do you want, sweetie? What do you want? You trying to get my attention?
Since July, June 23rd.
Kitty cat is so lovely. She's so lovely.
Level of support. If we do get a counter trend pullback for the S&P, it's right around 6120, 6,120. But overall, the market continues to have the wind at its sails. I think that stable growth, and now we're talking from a fundamental perspective here, stable growth, easier financial conditions, those really should continue to.
All right, those 6280s are now $4.20. Okay. Nice trade there.
All right, thank you for all of that. And this says the S&P is about 14 points away from all-time highs. Yesterday, I spoke to David Kuba, who, when I asked him, he's bullish, and I said, "Do you think we could see 5 or 10 new highs coming in the second half of the year?"
6280.
He was right on board with that. Certainly was the word he used. Sam, a final thought?
Yeah, I mean, interesting that you say that, Nicole, because, the folks over at Goldman Sachs earlier this week were out with some of their forecasts as well on the S&P 500 valuation and returns. And David Foster was talking about how they see 11% upside. This was for the 12-month period of 6,900. So, what's going to get us there? Obviously, they're talking about earlier a deeper Fed easing and lower bond yields than had been previously expected. Obviously, expecting to see the strength that we saw in the previous earnings quarter continuing as far as that trend is concerned as well. So, yeah, I suppose we have to wait and see. I mean, it does look like very much markets seem to be looking past the uncertainties around what we've got from the FOMC, which is in that wait and see mode, and also some of the tariff noise as well.
All right, Sam Bonus, Mike McCurr. Thank you both so very much. Appreciate it. Good to see you, folks. Thank you so much for being with me right here on Morning Trade Live every day. I'm Nicole Petalidi.
Trying to get my attention, kitty cat.
So glad you're with me. It's another record-setting day.
Actually, it was more. It was 130, not 150.
Once again, the conversation continues here on Schwab Network. Keep it right here. Trading 360 with Diane King Hall.
Oh, that was yesterday. Never mind. Let me see. Today.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money funds, and more. Get more with Schwab.
Okay, those 6280s are backing off a little bit.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Morning movers, be the first to find out what's shaping early market action. Tech check. Sports Corner, Futures Focus, technical
Okay,
analysis.
let's see.
Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platform
Okay,
to your unique needs.
nice follow through. Okay, watching the dealer hedge flows again. Watching these dealer hedge flows. Once it starts to turn up again, we get a little higher low. Perhaps we can get some more out of this. I don't know. We might be done for now, but Apple done for now. That's pulling back a little bit. Okay, I'm still long Apple long term. Okay, just some day trades here and there.
Good morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trade 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Let's start out with our roadmap. Coming up on today's show, in our 360 Spotlight, we'll analyze sector positioning based on your time horizon and tax implications of that one big, beautiful bill. The disruption today is Coinbase following a double downgrade at H.C. Wainwright. Find out why the analysts may not be as
All right, really good day today. Really good. Apple's still pushing. Apple, just watching Apple hedging flows for Apple. I'd like to do something with NVIDIA. Let's check out NVIDIA again. We need NVIDIA flows to, there goes. Okay, that looked erroneous there. That was an erroneous little spike. SPY looking good for, I don't know. Do we keep going, SPY? By the way, Corey, if you didn't catch it before, you can adjust this. I can just move this up and down to be able to see it. But what I want to be able to clue into is what does the open look like? So I can grab the right margin and just squeeze it like you can on a Thinkorswim chart. But what I want to see is the open pivot low in this case. And once I can see that, I'll just scoot this down so I know that I know where I am in reference to the flows. Now, the other thing I do use, Corey, is the tape. Okay, tape. I can go over here and look at, say, this is BP right here. Let me put NVIDIA here. Okay, so let me do NVIDIA right here. Okay, so that's NVIDIA. That's going to pull up all the NVIDIA trades today. Okay, so this is another part that I don't use a lot, but it is good to look at. You can see all the puts being bought. Up here at the top, you can see, what is the most, the biggest trades right now. You got 924 million trading on NVIDIA. So it looks like NVIDIA might get something going here. Hertz, top daily movers. You can see Hertz and Delta. And then over here on the right, largest daily trades. The 160 call on NVIDIA seems to be big. Okay, so you can see in the grid below, these orange, that's obviously calls versus puts. Okay, volume, premium, and delta. gamma, and vega. Okay, I also use Equity Hub, which is telling me where and how the traders are positioned. This is SPY. Let me look at let me look at NVIDIA. All right, so NVIDIA really, this is a little sticky right in this area. All these calls, okay, and puts positive gamma, negative gamma. Okay. Okay, Meta's turning. Okay, so we took a trade on Meta, right? Check Meta. Okay, Meta was set up. Meta's turned. Okay, so Meta, what were we looking at on Meta? We were looking at the hedge flows. You see them turning here. Okay, that's what I'm interested in. Okay, so I'm interested in the turn. Okay, and I can pull this up now that I can see it. I can see it. I can see right where it turned and what price is doing. So the price is not keeping up with the hedging flows at present. But if you look at the buy order blocks on Meta, okay, Apple's starting to turn up again. Look at the buy order blocks on Meta right here. Okay. Okay, we don't have any right now. Let me go back to the 15-minute. Let's see if there's any on the 15-minute. Okay, so there's some here. You just hard to see right now. Okay, so that's a good low. That's a good low to buy off of. That's about 9% of the current volume trading at this level. You can see histogram is turning. So Meta looks pretty good.
Morgan Stanley's Keith Wise, 175. So still a little bit of controversy about how far this stock has run. All things considered, though, 2 out of 3 analysts in the buy camp, 1 out of 3 and hold no sells.
Okay, so Piper Sandler now the latest to get even more constructive on Oracle. It seems to me it's all about AI and the cloud story there. Anything else stand out to you with regard to this analyst coverage, Alex?
Yeah, I think the one thing I would say, and this isn't necessarily in regards to the analyst coverage, but I think that there's a feeling and there's this idea that, hey, stock gapped up around earnings. It's made a nice move. Like, it's due for a pullback. There's that feeling. And you hear that in the commentary. You hear the concerns around valuation.
Okay, Apple.
A stock like Oracle. Key up a stock like Microsoft.
Yeah, Apple's still flagging.
Like NVIDIA. They can continue going. George Kelly.
Okay, Meta looking good, turning back up.
He was exactly right. That's exactly what's happened.
Okay, let me focus on Meta for a few minutes. I want to keep an eye on this hedging flow on Meta. Okay, and I want to switch back and forth. I'm sorry, it's going to kill your eyes going back and forth, but need to keep an eye on price action. Okay, so this was pretty good. A few minutes ago, we saw this turn. There was a buy order block right here. Okay, and you got a buy signal. Okay, you got a buy signal right there on super trend. Okay, let's switch channels here. Let's switch channels. It's 11 o'clock.
Let's turn to Washington. The president's barrage of tariff threats not slowing down with both copper and Brazil in the headlines. Megan Casella's
CNBC doesn't know what to do with themselves. All of these tariffs back and forth, back and forth. I really don't see any kind of big moves in the markets based on any new tariff threats or anything. The markets continue to move higher. We've gotten to a point where professional traders are playing off of these pivots. Professional traders playing off these pivots. Tesla's still grinding higher. We're grinding higher, S&P. Okay, let's look at junk bonds. Okay, so if you're new to the room, if you're one of the new members, keep an eye on junk bonds. This is a signal that we use. I won't say exclusively, but it's one of the 25 signals that I use to give me an idea what the markets are going to do. Potentially, okay, there's never there's never a guarantee. I don't have a crystal ball, but if this is above, in this case, we're above the 200-day for the last 3 weeks. We're above the 9 and 21 day. This would look a lot better if it was bullish, like it was 3 weeks ago. But this is still above the 921 day. So junk bonds are a harbinger of what might happen in the short term. The reason why this is important is because the traders that invest in junk bonds or trade junk bonds are risk averse. You can see what happened back in February. This turned over pretty quickly after the Trump tariffs came in. This actually lagged the S&P by a couple of days. Generally, junk bonds will go before, but you can see that on the 19th we got news of the headlines. We made the reversal and we dropped below the 50-day. Junk bonds tend to lead, but it's also a confirmation. So in this case, we were lagging, but you can see how these traders are risk averse and will jump out of the markets. They'll sell. That's a signal, okay, to get out of the way when junk bonds drop off. High yield corporate debt, same thing. High yield corporate is less risky. It's still a risky asset class, but less risky than junk bonds. You can see this is above the 90 EMA. 9, 21, 50, and 200-day are all pointing up and to the right. What is that telling me? That's telling me the targets that people are giving, like Mike Belsky, I think his Brian Belsky, and Tom Lee, they're all given 6,500, 6,600 by end of the year. These are all confirming what they're saying, okay? Junk bonds and high yield corporate are still moving higher. We want to see what copper is doing. Copper obviously being affected by some of the tariffs, but that popped up. Copper higher is a good economic indicator. IWM small caps, another risky asset class. Whenever this is trending like it is, that's a risk on signal. Bitcoin, another risky asset class. If this is moving higher, that's another risk on signal, or risk off if it drops back down. Okay. You can see this has been trending since the April low. All of these are moving higher above the 50-day. Okay, I learned this idea from Hugh Carwitz about 20 years ago, maybe 15 years ago, when I was in GTO's room. He would often have this like red, yellow, green system of indicators, and everything he was watching is pretty much what I'm showing you here in the flow. So this is not reinventing the wheel. It's just watching where the money is flowing into or flowing out of. If it's flowing into Bitcoin, that's a risk on signal. Same thing with biotechs. If biotechs are rising, that's a risk on signal. These are very risky assets. I forget the trader's name. I think his name, something Fly. About, I don't know, maybe 8-10 years ago, I remember him posting something like he blew up his account because he was too long biotechs. It was a few years back. I want to say like 15 years ago. Okay. Biotechs, maybe longer. Could have been longer, maybe 20 years ago. I think it was over here. I think it was 2015. Maybe it was 2015. We had this big drop, and he was too long, and he got caught. The point I'm trying to make is whenever you see biotechs, IWM, small caps, Bitcoin, junk bonds, high yield corporate, all of these things moving up and to the right, that's a bullish signal. Okay. We don't have a crystal ball, and intraday, all sorts of things can happen, of course. But generally speaking, if the flow's not going to change, within a day or two, as far as, the intermediate and long term. Short term, yes. Okay, so here's IBB breaking above the 200-day. That's a risk on signal. Now I can go on, but the point is that most of what I'm seeing is fairly bullish. And if the rumors are true, it looks like Powell, I think it's a rumor, Powell's thinking about resigning. I wouldn't see him resign. That would be kind of giving in, even though he's been behind the curve. When you listen to Tom Lee, I respect Tom Lee a lot. The guy is intelligent. Um, he's a little he's a little girly for me, but that's okay. He's not somebody I'd play football or basketball with, but he's very intelligent, and I follow everything he has to say. And even though I follow it, I do always question everything I hear. But Tom Lee said something that caught my attention. He was comparing the way the Europeans measure inflation. Now, I can't confirm this, but what he said was Europeans strip out shelter when they look at inflation, and their numbers were 1.9% inflation. I believe that's what he said. Same thing with the US. If you strip out shelter, our inflation's 1.9% as well, which means we're about 200 basis points behind the curve. Now, for whatever reason, Powell isn't lowering rates. There is potential to lower rates at least a quarter or a half. Now, we can go check the CME tool. Okay, so you can go here. You can go here and CME Fed tool. Just type that into the search box. And Fed Watch right here. And we can look at the potential for a rate cut in 20 days. Okay. Okay, where is, okay, here we go. It's a little slow to display. So they're looking at 4.25 to 450. So that's not much of a change where we are right now, being figured in. Okay, Meta, a little higher low there on Meta while I'm yapping away. Apple's starting to push back up. Okay, Nvidia dropped off a new low. Okay, so Nvidia, watching the flows on Nvidia, you wouldn't have gotten trapped on Nvidia because Nvidia wasn't giving us a reason to go long. It wasn't starting to trend up like the others, like Meta. Okay, look at the difference between Meta and Nvidia. Okay, that's starting to turn up now. It is turning a bit lower right now, so we want to keep an eye on this. Apple, same thing. Apple's flows were heading higher. Okay, Apple's flows are turning up again. Okay, I just want to adjust this so I can see it. I start off the day being able to see what it is at 9:30, and if hedging flows continue to ramp up, we can be pretty certain that we're going to have a bullish trade on Apple in this example. Let's see what Palantir is doing. Palantir has been drifting lower. Okay, you can see from the open we popped up, and then we just started fading on Palantir. What's Tesla doing? Tesla is gradually moving higher. You can see from the open over on the left. You can see the open. At the open, we started drifting up. Tesla. Okay, Broadcom's starting to turn, so I want to keep an eye on Broadcom. I've been trading Broadcom lately, day trading. Okay, so we want to see the hedge flows turn up. We're not yet, so I'll stay away from Broadcom. What's AMD doing? AMD. Okay, you can see hedge flows peaked right around 1050, and have been moving lower. So if you're buying the dips on AMD, you want to wait for the hedge flows to turn back up. S&P big cap, we traded the S&P big cap. I bought the 6280s. You can see this has changed quite a bit since the open. Now I can go back. I can go back to the open. All right, see how this is turning? I can scrub this to the open. This is early morning. Okay, 9:30 is when the hedging flows will start to show up. The purple line will start to show up right here. Okay, there's a hedging flow starting to show. Now watch the purple and the red histogram bar on the left. You can see how it's growing at 6280. So I bought some 6280s. right around here, around 10:05 or so, and continuing to real time until right now. Okay, the hedging flow is looking for a higher high, higher low. Looks like we're about to break higher again. But you can also see how much negative gamma below. That red really starts to get pretty vivid. Not sure how to read that at present because I'm still learning this tool or tools. There's so many tools here. You can look at the indices as well. There's so much information here. Okay, over here on the right, this is telling me where negative gamma kicks in under 6,200. You see that? Okay, you can see these numbers become negative. Okay, gamma becomes negative below 6,200. So we want to stay above 6,200. And then they become very positive. See all this positive gamma we're trading in right now? Okay, 6280, a lot of gamma there. Okay, so there's lots of tools here to use. I'm just focused on certain things. I'm doing a lot of day trades, so I pay attention to Hero, what it's telling us, real-time hedging flows. Okay, so right now this is what? This is S&P 500. Hedging flows on S&P 500 starting to fade a little bit. NVIDIA is still moving lower. NVIDIA. Okay, Meta looking for more upside. Meta.
To nice places, I guess, like Nice.
Yes, exactly. Yeah, we've been strong. We've been there for 10 years. We are a bit unique because our fleet is composed of narrow-body, long-haul airplanes, fully fitted only with business class seats, low density, low comfort, easiness. The experience we offer to passengers is very unique, very reputable, and we do have a very strong reputation among that. Once difficulties come into the industry, we are working like the other one.
Are you in a mode to expand your route structure?
Yeah, sure. For the time being, we are only at 2 airplanes to Neos. We have another one coming next year.
I think my son's cutting the grass. Let me take a couple minute break. I'll be right back.
So-called H21 XLR with extra long range, which will allow us to offer new routes beyond what we do today. Today we fly Milan and Paris to New York, which is already a long haul, but we plan on flying further out to Miami or potentially even San Francisco.
Wow. Does the weaker dollar have any impact on consumer appetite to travel to Europe, or is it changing the behavior of the way consumers are traveling to Europe? I think something Ed Bastian mentioned was that consumers were opting maybe for the off season as opposed to the summer months, which tend to be a bit more expensive for them.
Well, with the public we serve, which is affluent VIP division space, the sensitivity around the money is not really, the value of the dollar is not really strong. But there is some to some extent. I mean, they're potentially more concerned about the attitude or the welcoming effect that may have in Europe coming as Americans. That's not the case actually, but that's the fear they have. We need to understand and address. The impact of the dollar, the weaker dollar, has is that this is because we are a European airline, so everything is consolidated into euros. So our total revenue per annum is being exposed to a weaker dollar. So basically, this year we plan something like 5% decrease into our global revenues from scheduled flights because we do have capital charter flights. So just for the mere fact that the dollar has become weaker versus euro than a year ago.
I'm always fascinated by anyone who's willing to start a new business in airlines, because you've got safety, you've got unions, you've got consumer, you've got all these trade. I mean, it's one of the hardest businesses, isn't it, to try to carve out something new?
It is. It's a very challenging entrepreneurial approach to developing a business. But we have been there. We went through COVID. COVID was one of the major disasters that aviation industry has encountered over decades, and we were able to go through COVID, even though the borders were closed on each side of the Atlantic Ocean. We emerged from that, and we've been profitable ever since. So yes, but we're used to facing contingencies every time. So 2024, we had the Olympics in Paris, which was a bit of a challenge for organizations and for the public, who was a bit sometimes shaky to
come and address big crowds, things like this. But it was okay. Demand was not as good as.
Okay, it was amazing.
Well, I mean, the Olympics turn was very, very good, excellent, by the way. But the travel from the US to Paris was not as strong as we all expect. Not only us, but the other airlines, the legacies. But it was good repetition of Paris and France in general as collectors. And also, we were expecting 2025 to be very strong as far as demand, and that was, like I said before, the case for the first quarter. But second quarter came with all these stories that we've already approached, and here we are. And I think you mentioned before that the geopolitical struggle that are in the Middle East in particular are also a reason why some of the American people try to shy away from going to Europe at this time. Right. Well, it's not always rational, but this is the way the consumer thinks, and we need to respect that, and we do respect that.
Well, we really appreciate your insight, wide-ranging here. Thank you so much, Christian, for joining.
My pleasure.
When we come back, it's shaping up to be one of the biggest decisions for mega cap tech. Build or buy your AI. Talk about two different strategies taking shape with billions of dollars on the line. Tech Check will take a deeper look after the break.
Then Evercore with 5 tactical calls ahead of earnings season. The stocks they say to buy and sell when Money Reverse comes right back. Stay with us.
All right. Hedging flows turning back up again. We're up against resistance right now. 62, right below 62.8. Okay, Meta making a new high now. Meta was something we saw about a half an hour or so ago. Actually, it was about 10:50. No, it was down here at the low. So very early at 10:30 or so, Meta started to turn. And we noticed that around 10:30, 10:35. We continue to push higher. We're about 6 points off the low. So if you're trading a 50 delta, okay, and you can catch these turns, right? If you're trading a 50 delta, for every 2 points, you're going to make $100 per contract. So think about that for a second. Now, you can do it a couple of ways. A lot of people don't like to focus on the money. They like to focus on the risk reward. Okay, so if you do a risk reward here and you put your stop underneath the low of the day right here, and you get long here. See how far we can get this. All right, so you can see supply up here overhead. So what I like to do is, where is supply? And then if I were to get long right here, okay, actually I would pull this up. I'd get long here above super trend, okay, and put a stop right underneath that low right there. So I'd be putting a stop right here. Okay, so if I can get long here, 727, I got 4 or 5 points overhead potential. And my risk reward is what, 2 to 1? At least 2 to 1. All right, so we're starting to move now on Meta. Okay, so that's one way to look at it. For the fault of me, I guess, I look at the money part of it. So if I know that if I do a 50 delta, if I take a 50 delta, for every 2 points, for every 1 point, I'm going to make $50. So for every 2 points, easy to calculate, I'm going to make 100. So if I take 5 calls, I'm going to make $1,000. I'd be done for the day. Okay, now let's compound this with the bullish move, and then look at, you guessed it, let's look at Hero. Let's take a look at what the dealers are actually doing. Okay, are the dealers actually hedging long? Yes, they are. Okay, so think about it for a second. If I can see what dealers are doing, and then wait, sorry, you didn't see that. If I can see what dealers are doing, that purple line, okay, that's dealers right there. Okay, that's turning up. Okay, I think I just scrolled out here. Okay, there we go. And now we can see that it's rising. Right? So if dealer hedging flows are rising, and I can create a bullish trade setup, even if I bought right here as this is rising, put a stop underneath, I'd be looking at 2 to 1 right there, 2 to 1. So from a delta perspective, buying at 727, I can see that I've got 3 or 4, maybe more points upside before I get to supply. So that tells me right there that for every 2 points, I'm going to make $100 on a 50 delta. So if I want to make $500 a day, I can just buy 3 calls and look for, a couple of points. And $500 a day, is $10,000 a month. $500 a day, $10,000 a month. Now your goal could be, you could like shoot for a goal of $2,500 a month. You start putting away $2,500 a month and just put it right into savings or a 401k. You look back and let compounding do its thing. 10, 15, 20 years from now, you're going to be set to retire, which is what I've done, right? I'm an architect by trade, but I don't do as much architecture as I used to because I make more. I want to say I make more. I can make more, and most of the time I do make more than I do dealing with a crazy client, right? My client is you, a traders in the trading room, but you're doing the same thing I'm doing, so it's less of a client relationship. It's more of a let's make money together. So long way of explaining, long explanation of why this is a good trade and how the setup works, okay, and how you can potentially profit from it. But futures continue to move higher. I'm your host, Cousin Benny, coming to you from theclosingprint.com. It is Thursday the 10th. It's overcast here in Myrtle Beach. I thought my son was cutting the grass, but he did that yesterday and just left a lot of grass on the sidewalk. He's got to clean up after himself. So here is what the hedging flows look like. All right, so they're turning up again. So hedging flows are turning bullish again. It looks like we're going to run here. So maybe I'll do another trade on S&P. 0 day. Okay, 0 day. 62.80s are what I've been trading. Okay. Those are up to $6 now. The 62.80s. Okay, Meta's still climbing. Mm-hmm. Okay. 6,300. Can we sell the 6,300? That's 75 cents. 6,300.
spotlight since Trump withdrew his nomination of Elon Musk ally Jared Isaacman. In a post on Truth Social, the president said Duffy would be a fantastic leader, even if only for a short period of time. And the first ever Birkin bag just sold at auction in Paris for $8.2 million. According to Sotheby's, that crushed the previous $500,000.
Okay, so NVIDIA is starting to look better. So let's go check out NVIDIA. I might want to take an NVIDIA trade here. Okay, NVIDIA is starting to turn up. Hard to tell what NVIDIA is going to do here because we are making lower highs and lower lows. So we need to make a higher low. We're pretty close to the low of the day. So NVIDIA, if you're thinking about NVIDIA, that looks pretty good. Okay, so NVIDIA, watching NVIDIA for a turn here. NVIDIA. Okay, so here's another example. NVIDIA, we're looking for buy order blocks. Okay, we got a sell order block overhead, but no buy order block. We got a buy signal. Let's check the dealer hedge flows again on NVIDIA. Okay, starting to rise. Okay, Microsoft. Let's check out Microsoft. That looks pretty good. Microsoft trading all-time highs yesterday. Microsoft. Okay, Microsoft, not really that, it's sort of flattened out right now. So watching Microsoft, that might be a trade. Shorts start to cover, but not like Apple. Apple was just stellar. Apple looking for another push higher. Watching Palantir. Palantir's starting to turn the corner. Let's watch Palantir. Palantir. Okay, you can see the hedge flows are starting to turn off the low. Do these get moving? I mean, they've been spending most of the day making lower highs. So Palantir looks like shorts covering for now. Back to S&P. S&P, we're looking for hedging flows to turn upward. Okay, pretty sticky right where we are right now. Hesitant to buy the high of the day. We had a nice S&P 500 big cap SPXW 62.80 calls. Those were entries at $1.50. They got up to $6.20. Let's see what they're doing right now. S&P, they're trading at $5.60. $5.60. All right, watching the hedging flows on S&P. Lots of resistance overhead.
NBA is definitely in expansion mode at the end of last month, announcing the planned addition of 3 new teams. Players like Caitlin Clark, meantime, mobilizing to fight for some higher salaries as the league.
Got to sell more tickets. Promoters are not going to continue to pay higher salaries if you don't promote, if you don't sell tickets. It's funny, everybody's like fouling and very aggressive against Caitlin Clark, white girl. She's a good thing for the league. I don't know why you would be. If I was the opposing team, I'd be helping her make layups and stuff, you know. If she's going to help me with the league. I never watched WNBA until this past year or so. Pretty interesting. Okay, just watching the hedge flows here. You can see resistance just overhead. Do we blast through here? There's a lot of positive gamma, dealer gamma here. So if we start to move into that, you would think that dealers are going to have to start buying the underlying shares in the S&P to hedge against and move through this area. If we get above 6,300, that would be insane.
Cities that either had W teams before or never had them, like Philly and Golden State. So, and then next year we'll have Toronto and Portland. So we're in a good place, and I think the college level and the international level.
There's also a huge case being made right now that there are a lot of tailwinds, not just for women's sports, but for sports.
Okay, Meta pushing a bit higher. Meta. It looks like Meta could go pretty well. ABCD pattern on Meta. Okay, NVIDIA is trying to turn. Let me look at the hedging flow on NVIDIA. Okay, this is NVIDIA. Meta looking good. Meta's working.
Or the valuation of a franchise, and that's all driven by revenue and a multiple of revenue. And about 5 years ago, that wasn't quite there for the W or women's sports. So we raised capital in February of 22. That helped us grow the league from what I call an adolescent into kind of a young adult now, and we're maturing, and so we're in a hyper growth.
They don't play like they're mature.
I think our teams are now seeing a lot more revenue for Gate, for their corporate partnership, for local media deals. We've obviously just signed, including with MDC, a great national media deal to start next year. And so that all drives into the multiple ultimately, and the valuation. Evaluations have gone from 5 to 260, 270 million on average.
Wow,
over about a 5-year period.
Now, when you look at some of the smaller teams, smaller market teams versus the large market teams, how does that kind of maybe spectrum look from the lower end, if you will, to the higher end?
Yeah, we're not as heavy with the multiple small market teams like maybe some of the other men's sports leagues. We're in major cities. Probably our smallest market's Connecticut. And then we do have a couple teams that play in smaller arenas that would like to upgrade to bigger arenas over time because that drives revenue and Gate. So balancing that all. But now, I mean, look what the Valkyries are doing at the Chase Center, Liberty at Barclays. I mean, they're packing the house every night, and it's great to see kind of the fans coming out in the seats.
And before we let you go, one more quick follow-up. Those evaluations, when do they translate into, say, higher salaries for players?
Well, we're in collective bargaining right now, so we're meeting with the Players Association, and we're going to return as much as we can to the players, do something transformational by the end of this year. So I think you'll see something coming on that note.
All right. So some of that pay gap, Carl, narrowing just a bit here. Kathy Engelbert, thank you very much for joining us from the American Century Championship.
Yeah, it's great to be here at the American Century.
Back to you guys.
All right, Dom, fantastic stuff and a gorgeous shot as always, Dominic Chu. When we come back, Evercore reiterating one member of the Mag 7 as its top pick, predicting a massive re-rating of the name come August.
Okay, watching NVIDIA and Netflix for a reversal. Let's go check out Netflix. Let's check out Netflix and see if there's a trade here on Netflix. It's coming into the lunch hour, so Wouldn't be surprised to see some pivots here, low pivots that turn higher. Okay, you can see Netflix is starting to turn. Netflix is starting to turn. Netflix, hedge flows, turning, live screen. Netflix is turning. Okay, we're starting to get it giddy up now. I'm going to buy some Netflix here. Okay, I'm buying some 40, 20 deltas. I'll buy some 40s, sell some 20s. Netflix, come on. Clunky. Thinkorswim. Wish I could just like talk to it and tell it exactly what I want to do. Buy next week's 20. Buy next week's 40 delta call. Sell. Oh, that's S&P. Shit, I don't want to do that. See, I'm rushing through this and I'm going to mess up. Netflix turning. Okay, so Netflix is starting to turn. Most people are not even paying attention to Netflix right now, I imagine. Netflix. What's going on here? Oh, there we go. Okay. Netflix. Okay, let's go. Wow, these are expensive. Expensive options. Let me go ahead and do Fridays. Let me do Fridays. What the hell? Let's see what we get out of this. Netflix. I go with a 40 delta. 40 delta is going to be a 1267.50. I can buy those for 580. Buy a vertical. Okay. Cheap way to play it. Buy a vertical. Okay, so I'll go with that. All right, I'll go with that. All right, I bought the 1267.50 call. I have next week's as well. So Netflix. Looking for it to turn. Let me just go check out. Let me just check this out. Okay, Netflix. Okay, so we got the low. Okay, looking for buy order blocks. Okay, got buy order blocks. Okay, check. That's good. So buying right here. Okay, where's supply? Overhead. There's supply. Put a stop underneath this low right here. And that gives me a near 2-to-1. All right, so if I can get a little bit past the high of the day, past the high of the day, that would be a 2-to-1. So 50 delta, I'm buying the 40 deltas, but a 50 delta would make you $50 per point, 100 points, $100 per 2 points. So I'm watching Netflix for a trade. I just bought some 1267.50s.
Joining us this morning, Evercore ISI head of internet research, Mark Mahaney's with us. Mark, thanks for helping us get ready for the season. I know you have some favorites. You call them DHQs. You want to tell the audience what that means?
Yeah, it's also dislocated high quality. It's I don't know. It's a good concept I've been working on, and with for a couple of years. I put it in my book a few years ago. Nothing but that.
All right, S&P is starting to push a bit more. Meta's looking better. Meta. Where's my Netflix chart? Meta. Palantir. Meta. Netflix looks good.
For a variety of reasons, their TAMs, their total addressable markets, management team, product innovation, competitive position, et cetera. And then you wait for them to get dislocated. You wait for them to trade off aggressively for whatever reason.
Okay. We're coming into the 12 o'clock hour. So I look forward to earnings season because I like to sell iron condors above and below the current price action on many of these stocks. So I'm looking for some opportunities coming up. earnings season. Always like your earnings season. The banks report next week. Big banks report next week. Bank of America, Citigroup, JP Morgan, Goldman Sachs, Morgan Stanley, PNC Bank, etc. Comerica. They're all reporting next week. Watch Broadcom. Broadcom might get something going too. I think I passed on Broadcom. Okay, look at the flow on Netflix. Look at the flow on Netflix. Look at the flow right here. Check the flow in Netflix.
What about Amazon? Are you concerned at all about the early data, the early indications about Prime being down so much?
Yeah, it's a little bit of a head scratcher for me. Really, down 40% is what I saw. I'd be surprised if Amazon over 4 days of Prime versus 2 days last year wasn't up, a solid 15, 20, 25%. I mean, maybe the consumer is just a nosedive. I don't think so. I certainly didn't get that from Costco's results. We didn't get that from Costco's results. So I'm a little skeptical of those numbers. I don't have any better numbers. I'm just skeptical of those numbers.
What's going on here? What's all of this? Oh, I grabbed a hold of this or something? That was weird. Okay. Netflix. Okay, you see the hedging flows turning up. Okay, what's Supermicro doing? Supermicro shakeout.
Finally, Mark, I am curious on some areas where you're exercising a little more caution. It sounds like Spotify on valuation and maybe some of the online travel.
Well, I'm going to give you a nuanced call on online travel. Actually, we put a tactical outperform on Expedia because, and the Delta news this morning seemed to confirm it. U.S. travel was the only real area of softness, and it looks like things have gotten less worse. They started to improve the second derivative.
Supermicro on the move, turning back up. Netflix looking good. Okay, so just want to keep an eye on Netflix flow. Okay, look at the flow. Look at the flow. Beautiful, beautiful flow here. Okay.
Always appreciate your intelligence and guidance as we go into, once again, it's going to be an exciting few weeks of earnings. Talk soon, I hope. Mark Mahaney.
Thanks, Carl.
Still ahead, one Wall Street analyst calling for Apple to replace Tim Cook. That debate and a closer look at Cook's tenure as CEO on the other side of his break.
Okay, S&P at the high of the day, two 60-minute, very, very large 60-minute candles on the futures. Still on a buy signal on the 60-minute. Okay, let's go take a look at, let's go look at our charts. S&P 0-day setup, 0-day. Up volume continues to lead, greater than 2-to-1 across the board. New York Stock Exchange, NASDAQ Composite, SPY, the Qs, Dow Industrials. Only the IWM at 1.3, but all up volume. Up volume today, looking good. Beautiful, beautiful, beautiful. Okay, looks like we're starting to consolidate at the highs. The S&P looks like consolidation. Meta starting to fade a bit. Maybe you'll take that trade off. Meta, that was a nice little bounce in Meta. Not following through. Meta, let's see, Meta. Took these today. All right, so maybe I'll take these off for now. 18 July, 7:30. Yeah, I'm going to take these off. Okay, create a closing order. Sell those, 10 of those. That was a nice gain. All right, I just took some Meta off that we took from the low of the day. Slowing down. I still have some for the 25th, July 25th. But I'm going to take these off that I had for the 18th that we took at the low of the day. Meta. Okay, hedging flows on Netflix. Watching Netflix now. Netflix. Meta. Let me go over here. All right, so looks like Bitcoin might get going again. Bitcoin. Okay, yesterday was pretty epic on Bitcoin. We had that blast higher. Okay. Bitcoin. Coinbase. Let's look at Coinbase. Coinbase flows at the high. Okay, Coinbase hedge flows at the high of the day. Okay, Supermicro looks like it wants to go a bit more. Supermicro. CONL. Coinbase. Let me just take a look at Coinbase. SoFi looks like it wants to turn back up. SoFi. Coinbase. COIN. Coinbase. Okay, Coinbase trying to take out last week's. 2 weeks ago, we made a high on Coinbase. Trying to take that out. Coinbase looks really good, folks. Okay, so Frano and Frank, I believe a few other people pointed out the bullish look to Coinbase. Okay, the 9 EMA. Price action holding at the 9 EMA. So here's something you need to practice. If you're a new trader, this is something you need to pay attention to. Okay, once you get the reversal, okay, obviously you get the turn. Okay, so look at it from this perspective. All right, you get the turn. If your eyes are glazing over because I do this too often, this is for the new traders. Okay, so once you get past the middle, you start to build the right side of the cup. So what we're looking for are the support levels. Support at the 20-day, support at the 9 EMA, support at the 9 EMA. Over here too, support at the 21 day, the 50 day, 21 day. As the trend or the phase 2, the markup, as phase 2 markup progresses from a change in direction, markdown to accumulation, and then phase 2 starts. When phase 2 starts, we start to move back above the longer term averages. In this case, we move above the 921.50. Once we do that, we can be pretty comfortable that we can buy dips. Now that we're above the 200 day, we came back and tested the 200 day right here. Okay, we tested the 200 day right here. We started rising. We broke out above this pivot right here. Okay. Now we're starting to test the 9 EMA. Now what are we doing? We're just like riding the 9 EMA. So buy the 9 EMA and just run the trend. Put the stop underneath today's low now. Okay. If you bought Tuesday or yesterday, put your stop underneath the low of today and just keep doing that. All right. So tomorrow this gets up, we'll put it underneath the low of the day again. Just keep running this trend. Looks good for Coinbase. Looks good for Coinbase. Okay, these calls, let's see. Coinbase, yeah. Coinbase looks good. Okay, Coinbase, C-O-N-L, C-O-N-L. C-O-N-L. I got the 50, 55 vertical, so C-O-N-L. Okay, so I got the 50, 55 vertical. Okay, if we retest the high, I'll take these 50, 55s off. Okay, so I have the 50, 55 vertical. The way that works, if you're new to options, okay, I have a vertical only because I didn't know if this was going to hold the 9 EMA. So I took a less risky trade. All right, so the way these options work, all right, so at the money, prices start to rise. So do your options. Your options rise, rise, rise. And then it gets to a point right here at 55 where it no longer appreciates in value. Unless the Bollinger Bands open up and volatility expands dramatically for whatever reason, you start off with a 50 call and your maximum is 55. I have the 50, 55, because that's right there. Okay, so once it hits 55, my profits are no longer going to expand unless volatility picks up. So my target is 55. I bought the 50, sold the 55, and that's for 18 July. I'm starting to think about taking profits off because of the time. Coinbase looking pretty good. SoFi turning back up. SoFi. Okay. Okay, it's 12 o'clock. All right, so.
Really happy to be back, and I read all the notes that we're going to talk about today. And I think the thing that's fundamentally really important to understand, the strategist has a very tricky job. They obviously can't see the future, and they have to think big, and they have to think about, all right, July, what do things look like, within the next 6 months? How do we end the year? What are some of the stumbling blocks that we might need to get past? And then what is like the chronological setup? You've got an earnings quarter about to get underway. This should be a fairly good earnings quarter if consensus is even close to what the numbers will end up being. There might be a surprise here and there with a tariff announcement, et cetera, but like they have to skip to the end, and they have to do so in a nonsensical way. So they build this framework, and the framework has to have something to do with earnings and something to do with the rate.
Okay, what's Freeport? Freeport.
You do that, and you realize that one of the biggest
Freeport
risks in this
McMoran.
market that we were all worried about, as you all know, the tariff thing. As you realize that that's sort of petering out, and it's still with us, and it still could produce shocks, but it's probably not going to be a worst case scenario. Then what are you really worried about? Like, other than the typical exogenous event that no one can predict, what's the real thing that you're worried about? Because we got through the tax debate. Okay, this was a big one, and we got through it. We've gotten through
Okay, Meta.
several earnings quarters, the last 2 quarters,
Okay.
where the upside surprises were wild upside surprises.
Netflix. All right, Netflix.
Is the AI theme going to have legs this year, or did everyone shoot their wad last year? Now we know that's not true. They have to spend just to maintain the spending they already committed to doing. So when you realize that that's the setup and which stocks are most important to the index level returns.
All right, we're starting to fade. S&P is starting to show profit taking. Profit taking on S&P. We should expect to see hedge flows turn down. Okay.
$6,900 for next year. Yeah, I'm at $6,100 for this year. Why wouldn't I be? And so I think
Okay, so we got a 1 o'clock with Brett today. Okay, Brett's going to be broadcasting at 1, so I'll go ahead and set that up.
Quote, tech stocks, industrial stocks, NASDAQ hit all-time record highs, crypto through the roof, NVIDIA up 47% since Trump tariffs. Of course, that ignores the fact that the announcement of the tariffs crushed the stock market, but that's neither here nor there. He said the U.S. is back. He said no inflation. He wants rates lower. So it's gotten his attention too, Bryn. Are we supposed to continue to buy stocks?
I think so. I think the pain trade is people that are trying to, we'll say, time the market or sit in cash or overweight bonds. I think that while the market has largely become anesthetized to the tariff letters, the threats, etc., what's interesting, who hasn't become anesthetized to it is the Federal Reserve Chairman, Jay Powell. And so I think the irony, if we would actually just have 10% tariffs, move on, and just be settled out, I think the Fed would be set to start cutting rates ASAP because we can, right? And so if you look at the yield curve, there's plenty of room to cut rates, but the Fed Jay Powell clearly says that we don't know about tariffs. So I think that's going to be, we'll say, the juxtaposition this year is between tariffs and rates. And I do think ultimately we'll get 1 or 2 rate cuts, which then goes into...
Okay, so we're hanging out at the highs, S&P 500. You can see the hedging flows are just flattening out, making higher highs and higher lows. We have major resistance overhead all the way up to 6,300.
Jason, I mean, NVIDIA's up 88% since the April low.
Coin is breaking out.
What has happened? And by the way, as that stock got within 3 cents of another new high, and maybe it actually did hit it now, it was reiterated sell today. $100 is the target. Seaport Research, that's a 38% downside from here. What do you think about that? I mean, we've had some calls.
There goes Coinbase.
Late today to take some of the, some of the analysts might drop off. What do you think about this call?
Fine. Seaport's been busy over the last 4 weeks. I think they also downgraded Netflix recently. So what I would say about that call, first of all, data center momentum is still very much intact. Growing demand for sovereign AI. We've seen that with all the Middle East deals. And this Blackwell Ultra chip, from a production standpoint, is 50% stronger than the last iteration of it. So when I look at sales going forward, again, we saw a double from in 24 and 25.
Okay.
52% in 2026, 22%.
All right, just watching Netflix here. Netflix, Coinbase. Okay, Coinbase, you can see the flows are ramping up. Okay, from the bottom left, 9:30, we dipped right into 10:30, and then from 10:30 on, Coinbase has just gone ballistic.
Almost 6,300, 7,000. Possible to you? Is HSBC correct to say buy more? They increased their overweight to equities further. They now prefer U.S. equities the most, which is interesting because you've had other calls too, that the better value exists internationally. They say risk assets are set to remain supported with lower sensitivity to tariffs, and the Q2 reporting season is key catalyst.
Here's why I think 7,000 this year is a little bit of a stretch, although I'm certain that we'll get there soon enough. everything Bryn said was right. The Fed is restrictive. The Fed does want to cut rates, but the problem is that because tariffs still exist, even if we're all ignoring them and most of the people on the floor are ignoring it, there's an August 1st date now that's out. So if you're a Fed chair and you're Chairman Powell, you're going to want to at least see 1 or 2 months of data to prove that the inflation isn't tariff driven. So that takes us to September at best for a rate cut. Excuse me. We're not getting one in July. We may get one more at the end of the year. We could get 2. It's going to be tough for the market to get to 7,000 this year if we're not having a pull forward on rate cuts.
I mean, but and by the way, if you have a 10,000, if you have a 10% increase between now and year end, you're basically there. You're on the doorstep.
All right, Coinbase looking good. Coinbase.
On the rate cut doesn't matter. S&P. Yeah, nobody should be baking in any specific number of rate cuts as a means to say stocks therefore are 8 to 10% undervalued. Like that should not be the bull case that we're going to get like accommodative policy because the employment situation is going to start to suck. That's just it. The logic is completely backwards. Nobody should root for medicine. Look, rates are probably too high. Let's all agree. Okay, probably given the actual like GDP growth rate and maybe given some of the softening in like initial claims, which honestly is not that bad, but fine. Let's just say they were a little bit restrictive. Are they 200 basis points over where they should be? No, I don't think anybody would say that. And you didn't need rate cuts this entire rally. So what are you begging for Sudafed for? I don't understand it. So that's number one. Number two.
Coinbase. All right, so nice move.
Because that's what's driving earnings.
Coinbase.
The $2, $3, $4 trillion stocks that matter the most to the market cap. By the way,
Coinbase. Okay, that was a nice little pop.
The IPO window being flung open, all of it is coming from CapEx. And I'll tell you something else that's not popular, but I'm going to say it. It's also driving the consumer spending. I watched TV this morning. The Delta CEO was on Squawk talking about the K-shaped recovery. They had like 3 different guests in the World Bank of America talking about it. Look, it's the top 20% of the country.
All right, Super Micro trying to go.
They're spending. They're not doing that magically in a void. They're doing that because of what their brokerage accounts look like. Every morning when they open up the app, they're doing that because of what their 401k balances look like. That's why they're accelerating their spending on travel and luxury services. So if you tell me that you think the AI CapEx tailwind holds up, then the domino effect for all of that is, well, the consumer spend is going to be fine. The leisure economy is going to be fine. Retail is going to be fine. Restaurants going to be fine. And that's the way that you need to think. Not, oh my God, I need my rate cut. What's wrong with you?
I'll give you something on that. Piper today says their latest CIO survey reinforced the bullish spending backdrop for AI infrastructure, i.e. CapEx, right? They raised their price target on Microsoft to 600. It was 475 prior. They raised their estimates. They upgrade Oracle to overweight. 270 is the price target.
Okay, I'm selling some Coinbase CONL up here. I have options. They're getting a bit expensive. Okay, we're at the highs. Netflix now. Netflix. Netflix is still showing upward sloping hedge flows.
And that's just to name a handful and an extra one. But that's where the money is. You go where the money's going, right?
Absolutely. I mean, and I think that from the CapEx spend, I mean, we already know, we talked about the other day, when Mark Zuckerberg is paying multiple engineers $100 million signing bonuses, CapEx is, I think, going to continue to ramp up. And so, you know, Satya talks about being with the spend having like a high ROI, which is great. I think investors want to hear that. But I think with these big
Okay, what's Target doing? Target turned the corner. Target was one that Tony brought to our attention a few weeks ago.
And so I do think, you know, NVIDIA's numbers don't come out till the end of August, but over the next couple of weeks, we're going to hear from all the hyperscalers, and I think they're going to reaffirm the spend. And you can list off those names again and look at those names. All those names you just listed, the Vistra, the Dell, Oracle, et cetera, are going to be the beneficiaries of those. And I think that you're going to continue to see that. I will say one thing on rates. You know, the CPI is at what, 2.5%? Fed funds are at 4.5%. Rates should be coming down, right? That's just like simple math. And
All right, Target turning the corner. This looks a lot better than Costco. Costco Walmart was below the 50-day. These three amigos, Walmart below the 50-day, looked very good last week. Actually, on Monday, I thought this was going to do very well. But Target doing the best. Target actually the best.
Remaining performance obligations is up 34% for Microsoft. This is a huge company. That's $315 billion. So we talk about capacity constraints and what these companies are, the backloads are. I mean, demand is insatiable. So you look at that and you look at Oracle, same story. RPO's up 31%. That's over $100 billion of business that is due that they need to kind of get through and execute on. So for me, yes, that's what's driving the story, and I think it continues.
All right. So the hyperscalers, they continue to spend, or certainly are weighing the possibility of doing that.
Apple, Apple.
That's according to the FT. JP Morgan's Retail Radar says Amazon replaced
Semiconductors, SOXL. Semiconductors, SOXL above the 200-day. Okay, narrow range, but moving higher. So let's look at some of the semiconductors. Semiconductors.
It's about the AI marketplace, which they literally, as the AWS CEO told us a few weeks back on the West Coast.
Semiconductors. Okay. The first thing I notice is that the semiconductors, every single one of them, for the most part, 20 and 50-day are up and to the right. 20 and 50-day up and to the right. Okay.
Training and inferencing chip side, but I do think like Amazon very seriously is week after week making AI or AI adjacent announcements on the hardware side that are really important. Like they're talking about their own chip
Every single one of them above the 20 and 50-day.
because of how much usage there is in the data centers that they've already invested in. This is a really interesting situation because they've got that infrastructure and now they're spending to support it. But while they're doing that, they're finding ways
SOXL and SMH are working.
Bring more and more in-house. They're all like Amazon is a hardware builder for the AI revolution is not really a thing that a lot of people had on their bingo card 6 months ago. But we have to start thinking of this company this way. And when you do, the only thing you can conclude is it might actually be undervalued if you're thinking in 5 and 10 year increments. So Amazon's a big position for me personally. I've been adding to it. I've talked about this name as a name that could surprise in the second half to the upside. I also said that in December for the first half, and I was wrong. So I'm redoing that call. But I really think Amazon's not getting enough credit for how important AWS is going to be for this AI, the remainder of the AI decade.
Kev, Alphabet, tactical outperform. Evercore ISI, that's ahead of their earnings, which are obviously in a few weeks. Meta, the target to 765 from 690. That's reiterated by at Bank of America. You own both.
We talked a lot about Google and their loss of the search monopoly. Perplexity's bringing in a search engine. We know what's happening with OpenAI search. I think Google still has 60% of AI search, which is very powerful. But it's branching out into all the other things. Everything that Josh said about Amazon is why I like it.
Okay, NVIDIA did make a higher high. Came off the low, higher low now, higher low. We're looking for a higher high. Watching the hedge flows.
Robotics or all of the other things that they're doing. Satellites, really going after Tesla. Meta is my top pick for the year.
Drone delivery. Yeah, the list is so long.
The best thing about this show is that I think all the viewers already own these names, so we're not looking at it to say, well, should we be buying these companies?
Hidden gem Amazon and Alphabet.
Adding to or not is the question.
Right.
When you're at record highs, when you have a sector like tech and stocks like these, not Alphabet specific,
so for all
obviously.
of them across the board, you wait for pullbacks and you can add to them 100%. I don't think you need to chase them here because when you talk about where these things have come from April to lows, it's incredible. But the 5-year trajectory, to me, is so exciting. I just can't wait till next week when we've got earnings.
Well, let me ask you this. By virtue of our conversation alone, we're 16 and a half minutes into our program today. It's been concentrated, hasn't it? All over big tech. And how can't it be? That's where the action is, which is also concentrated in the market, which people say the market is too extreme. Like Apollo today, S&P 500 concentration has returned to extreme levels.
Okay, there goes Google. Google on the move. All right, let's go check out Google.
Different companies. Anyone investing in the S&P, they say
All right, let's take a
today
look at
is
Google.
basically making a bet on the Mag 7
Google.
stocks propelling even higher.
We want to see hedging flows turning up, up, up.
Because they're pitching private equity.
Google going, hedging flows turning up.
Like, oh, if Apple stumbles, then all these people who are invested in the S&P, they're going to have a lost decade. Or they're not going to make. No, what actually ends up happening is Apple stumbles and Oracle comes along. Like that is not. It's fundamentally not how it works. That you have to have Mag 7 continuously doing 20% every year in order to make money as an investor in large cap U.S. stocks. I know people want it to be that way so they can sell an alternative, or they could get you into a small cap fund, or they could get you into a buffer ETF.
They're not the only ones saying that the market, though, is too concentrated. If you look at the
No, it is
outperformance,
too concentrated. But here's the thing: it's not as concentrated. This is what I want to say. Forget everything I just said. Listen up. This is just not my opinion. It's the mathematics. The concentration of the Mag 7 as a percentage of the S&P is lower at this 52-week all-time high than it was at the 21 peak.
Or 2023.
Or 23 for that matter. Thank you. So if you don't like concentration, I don't either. The good news is it's becoming less so. And why? Not because these stocks, NVIDIA is not shrinking. The reason why is you've got this second tier below the Mag 7, the Mag 50, whatever you want to call it. Names like CrowdStrike and Netflix and
Josh reminds me of myself. When the markets are working, I get a get a lot of energy, I guess you could say. I feel a lot of energy.
In some cases have grown at a faster rate. So it's not an all-in bet on Microsoft and Apple to the extent that it was 4 years ago.
Financials and industrials.
Yeah.
Markets have been treating us very nicely. This is the third week, so third week. You know, you gotta pay attention to the fact that the markets. This is new since the April 7th low. That S&P 500 is going to be up for a third week, or is it still an inside week? We're pretty close to the high. Okay, so we're getting pretty close. Do we break out above 60? We're going to test 6,300. We'll see. But since the April 7th low, the most we've seen is 2 weeks in a row before a pause. Occasionally we see 1 week, 1 week of pause. The last 2 weeks up, pause for 2 weeks. 2 weeks up, looks like a pause. Keeping an eye on, let's go take a look at breadth. Breadth should be looking good.
the high beta ETF, okay, that's at a record high. 12 positive days of the past 13 is what it
You hear Wapner? He's not helping anybody by what he's saying, and from my perspective. Yes, everything is, well, unless you're thinking about short. Unless you're thinking about shorting. He's saying that everything is at highs, which is true. And those are setting up some shorts. I'm not looking to go short just yet or to hedge. What I'll be doing is taking profits off the table into strength. More day trades lately. Apple off the high of the day. Hold on a second. I'll be right back.
Didn't they do this in 2017? Small caps aren't keeping up. Didn't they do it in 2019? You still have plus 30% years for the S&P in those years. Did you have small cap participation every year that you had an S&P double-digit rally? No, you didn't. Get over it.
No, I'm talking about like, Palantir's done well. The ARC innovation funds at a 52-week high-ish. You bought more DraftKings. DraftKings is up 14% a month.
It's great when you can have these mid-cap, small-cap names ride the coattails. But I mean, your true investment are in the large cap. It's fun to get into some of these smaller names. We bought DraftKings. To your point, it's up 14%. I like the momentum. This is like a duopoly. They have 80% of the market share combined with the other name. DraftKings and FanDuel. Thank you. Yeah, FanDuel. So 80%. You've only got 25 states so far for DraftKings plus DC. Missouri might be opening up, but there's such a potential there. So I really like the space, and I think it's fun to own some of these names. But that's not where you make your investments. You make your investments in large.
Speaking of large, well, okay, speaking of that, good segue. Back to Bryn for a move. And you
alluded to this yesterday when you were with us, or the day before, but I can't remember. You were on the last couple of days talking about different stocks. Tesla, you did buy more as you said you were going to. Yeah, it was on Monday. You bought it at $293. You sold the August 320s and collected $14.50. Why is now the right time to make that trade?
I think Kevin should do that trade too, or should have. Well, so I think that was the day that the American Party, right? The day that the American Party announcement came out. And so I just thought that I was surprised, once again, that everyone was surprised that he would do something like this. And I thought it was an overreaction. So I'm happy to own the name below 300. And the call premium is so high. So if it gets called away in August, which is 6 weeks away, I'll have made 14% in 6 weeks. If not, it'll lower my cost basis on this new trade by 14 points. So I think it was a win-win either way. I'm comfortable trading this name. I feel like that 250, 260 to 350. 360 is the range, and it's so big. So it's just a great opportunity to buy the name, sell some calls, and if it gets called away, with a good short-term
Rhea
trade.
just loves the smoke. She likes that. I think you like that. I think you're addicted to the drama here. Can I do like a very quick Tesla Uber thing?
Yeah, go ahead, because Uber was reiterated neutral by Ives.
Yeah. Call him later.
And Tesla was reiterated underweight at Wells.
Right. So Ives, this is the only stock Ives and I disagree on, and he's made his bed with like the Tesla call, and I understand that he's more bullish on.
Okay, NVIDIA looking good here. Watch NVIDIA. Okay, so Netflix looking for a higher high. Watch NVIDIA here. Let's check the flows. NVIDIA looks like it's about to pop. Let me buy some NVIDIA. Do I have any NVIDIA yet? I think I do, actually. NVIDIA, Meta, NVIDIA. Okay, so NVIDIA, I have tomorrow's 165s. Okay, those are pretty cheap, actually. Let me go out a week. NVIDIA. Trade NVIDIA. I'm going to buy some NVIDIA. I just want to check the, whoops. Okay, NVIDIA. I want to go out a week. Let me just check the flows. NVIDIA. Okay, NVIDIA flows. Okay, NVIDIA flows are turning up, so I'm going to try some NVIDIA calls for next week. Okay, NVIDIA. Come on. No, I don't want S&P. TOS is slow. I'm going to have to reboot here shortly after this trade. NVIDIA.
Literally tell me how. And I'm sure Dan has a great answer to that. But
all right, so we're going to take a break. We do have moves coming up.
Okay, I'm going to go 40 Delta. That's a 165. Buy the 165. Sell 165, 170. 170. 70, 170. NVIDIA starting to go. NVIDIA starting to go. See if I can get filled. 165, 170. 165, 170. I got a bid in. Let me adjust my bid. It's a couple of pennies. 1 penny above where I have it. Let me adjust the limit here. Okay. I got some NVIDIA. Got some NVIDIA here. Bought NVIDIA here. Bought next week. Okay. Next week. 165, 170. 165, 170. Okay, RX. Okay, watching NVIDIA. Okay, watching NVIDIA flows turning up. Okay, NVIDIA looks like it wants to run. Okay, let's go. Let's go. LETSGO. Let's go. Let's go. Let's go. LETSGO. All right, NVIDIA, what you gonna do when they come for you? Bad boys. Netflix looks like it wants to pop here. Netflix looks like it wants to pop. Let's go check the flow on Netflix. Flow on Netflix. Okay, that's still rising modestly.
All right, welcome back. Let's talk Costco.
Bitcoin going. Bitcoin going.
Core comps came in 5.5% versus the estimate.
Bitcoin's going.
JP Morgan still reiterates overweight. That's probably why the stock is modestly lower today.
Okay, Coinbase is on the move. Let's take a look at Coinbase. Look at the flow on Coinbase. Okay, Coinbase flow is continuing to rise.
Decelerating sales growth. So for me, this is a company that manages their calls very well. They got the annuity stream of membership income. They're catering to the higher end of the consumer base. So I continue to like this, like, despite the news that we saw this morning.
Carlisle upgraded to buy at City today. Price target to 65 from 44. We can take a look at that. So way past the 44. Obviously, they think it's going to 65. That's a 52-week high today from Carlisle, and that's your name, Josh Brown.
Yeah, look, this is one of the best globally, one of the best private
Coinbase about to break out.
that exist. I've talked about Harvey Schwartz before on the show. I think he's somebody who understands where the industry is going, where the next generation of wealth, how they want to invest, what vehicles will be needed. And I think these stocks are generally pretty pro-cyclical. So when you get a bull market in traditional stocks and bonds, get the IPO window reopens and people feel better about deal making. These are all the preconditions you need for private equity names like Carlisle to rally, and that's the setup right now. This summer.
So you don't like when private equity weighs in on market concentration, but you like when there's an upgrade to the stocks.
I'm just telling you, if you're trying to sell interval funds to people, you have to convince them to do something other than NVIDIA, Apple.
I couldn't resist. Apollo.
He just comes across as a dick. I don't know what it is about him. It just really bugs me.
Yeah, I mean, I think like Carlisle, these
Comments he makes aren't necessary.
over the past 3 and 5 years.
It's like snippy comments.
But we don't think private equity in general is a great asset class for private clients because you have like a 15-year journey. There's a ton of dry powder, but all of these companies, especially Apollo and KKR, are raising new funds. We know we're going to get those management fees for sure, incentive fees in the future. So I think owning Apollo and KKR, Carlisle as well, is a better way for private clients than just owning a bunch of private equity that you don't have any liquidity in.
McDonald's upgraded to buy today. Goldman Sachs 345 is the price target, Kevin. They like the snack wrap returning, and they say they believe MCD ultimately has the scale marketing digital advantage to successfully navigate the environment.
Yeah, I think the price target's a little generous. You know, we've seen so many times where we get a 320, 330, 340 price target at McDonald's over the years, and it stalls at 300.
Generous? It's like stocks at $300.
382.50.
I say that as a
Coin.
It's hard to get off.
Oh, there goes coin.
Digital scale. They have 150 million active users in their website, into their honor system, award system. They're trying to get to 250 million. That's really, I think, the gem in there for them to get to that 345 mark.
Okay. Do you think JP Morgan is too generous when it comes to Caterpillar and the target, which just went to 475 from 395? It stocks at 410.
No, not at all. I think this is a real
gem, a real hidden diamond in the rough when you're talking about like the sneaky AI play from the data center standpoint.
How sneaky is it? Stock's been like at a high.
Well, think of it as an industrial play, but I'm talking about from like literally building the data centers. So you get a spillover effect there. Josh talked about financials earlier. I think there's a way you can play industrials. That's why these sectors are going up with it. I totally agree with the target.
Okay, sorry. Chevron, maintained by B of A, 170 price target. Josh, you own it?
Yeah. So I first bought it right before the Rose Garden tariff debacle. So I was down 18% in the stock, like in literally minutes. I couldn't believe my timing. But I did add to it during the month of April. It looks much better today than it looked then. But I didn't understand the sell-off in the stock. Fundamentally, it made no sense to me. And I guess it didn't to the rest of the market because it has recovered. But we could see there's still plenty of room. But I think the story here is always going to be a total return story. It's a massive buyback. It's a huge dividend. It's not the sexiest business in the world, but it is, I think, the best run version of a large oil company. And it's a part of a portfolio. It's not the focus of my portfolio, but I'm here.
All right. Pippa Stevens has our headlines today. Hi, Pippa.
Hey, Scott. Israel is warning that it will strike again if it's threatened by Iran. At an Air Force graduation ceremony today, Defense Minister Israel Katz said if Tehran tries to harm the country, it will respond with greater force. A hearing is set to begin in the next hour where a federal judge will consider a request from Kilmar Abrego Garcia to avoid deportation before his federal smuggling trial begins. Lawyers for Abrego Garcia, who was mistakenly sent to El Salvador, are asking for the government to bring him to Maryland to await his trial. On Monday, federal prosecutors said
Coinbase again. Wow.
Abrego Garcia, which would deny him a chance to defend himself. And new details emerging about the disciplinary action taken at the Secret Service after the assassination attempt against President Trump in Butler, Pennsylvania last year. NBC News reporting that 6 people were suspended without pay or benefits, which included agents in supervisory roles as well as line-level agents. Scott, back to you.
All right, Pippa, thank you. Pippa Stevens up next. Josh Brown's best stocks in the market list. He's going to highlight a new name. You might not have heard that.
All right, looking good. All right, so Meta squeezing at the moment. Netflix looking for the next move if we get a follow through. There goes Coinbase. Look at the dealer hedge flow on Coinbase. Oh, shit. Wow. What happened there? Did I close out the screen? What did I do? Oh, there we go. What's going on here? I don't know what I did with my screen here. Okay, I got my screen got way over there. Okay. Okay. Coinbase. Boom. Look at the frickin' hedging flow. Holy smokes. Oh, jeez. I'm going to take some off into strength, though. I have to take some off into strength. As much fun as this is, I got to take some off. Coinbase has just gone vertical. Wow. That's looking beautiful. Sold a little bit too soon. That's okay. That's okay. I'm happy with my trade. I'm going to take a little bit more off here at Coinbase. Okay. I know I'm going to regret it, but that's okay. I want to reduce my exposure to the markets. Next week should be pretty interesting too. All right, I took a little bit of, that's me taking a little bit of Coinbase off. I sold another 100 shares, CONL. Okay. Looking good, looking good, looking good. Okay, SBET is back up. SBET.
To his best stocks in the market is ticker symbol ANSS. Yes, it hit a 52-week high today.
Okay, nice volume on SBET. Sharp Lane Gaming.
A lot of people know Autodesk. We're talking about computer-assisted design, but ANSYS specifically is like the world leader in simulation. So in order to develop any product, you have to take a lot of risk out before you put, millions, hundreds of millions, billions of dollars of investment capital on the line. You have to simulate what's going to happen to that product under a range of conditions, depending on what you're doing. Are you doing semiconductors? Apple and Qualcomm turn to ANSYS for their help to simulate during the development of the 5G chips.
Supermicro.
Doing EVs. Lucid.
Okay, still consolidating here. Looking for that break higher. They shook a lot of people out, that's for sure.
So that's what this
Target, TGT, Target. Turning the corner, Target. You can still buy Target. It hasn't really taken off yet. It's got an ATR of about $2.70. Currently up to 336. So while it's okay to buy Target, you don't want to do it at the high of the day. It's more than 100% up on its ATR. Okay, so if you can, maybe it's not today. If you can, you want to buy a dip, a B pivot. Target looking good. I already have a position in Target, so that's doing well. Maybe I double up on my Target. Okay, I got 105, 110 calls on Target. I could double up that. I would have 10 at that point. I have 5 now. I could double up to 10. But I'd like to see, well, it's squeezing right now. So Target, watching that one. Okay, Netflix pulling back a little bit. Netflix.
If it can hold 350, I think you want to stay long. If it breaks below, make other arrangements.
All right, good stuff. We have more moves coming up from the committee. Another one from Kevin, another one from Jason. We'll tell you about it next.
Okay, NVIDIA looking for that pump. NVIDIA looking for a pump. Okay, NVIDIA. Okay, so Target looking good. Target. August calls. August calls. Target August. Do I want to double up on that? Don't want to do it at the high of the day though. Target. Target August calls. When are their earnings anyway? Target earnings. Target. I would usually take the week of or week before, right before. Okay, August 20th. All right, so that's what I did. I took August calls on Target, looking for it to grind into earnings higher, and for implied volatility to pick up. Okay. Target looking good. Following through. Target looking good. There goes NVIDIA. That looks like a sell order limit that got hit. Oh, that was Coinbase. Okay, Coinbase took out a little bit more. Coinbase. Watch NVIDIA here. NVIDIA is going to get NVIDIA ready to giddy up. NVIDIA is ready to giddy up. Okay, watch what's going on here. NVIDIA is starting to go. Okay, NVIDIA, let's check the hedge flows. Okay, so the method here is working pretty well. Check out, we look at the intraday chart. We're looking at buy order blocks. You see them, right? You see those buy order blocks? Okay, now that we see buy order blocks, where is the nearest resistance? Is at 164. So that's $2 overhead. So a 50 delta will make you $100 per contract. You take 5. If it makes it back up to the high, most likely you'll make about $1,000 on 5 calls, 550 deltas. Okay, and if we go out, maybe we'll go out to 15 minutes, see maybe there's something a little bit higher. Okay, all right, so it's a bit higher. So 164, we're trading 163. Okay, so that's only $1. That's only $1. Okay, so not a whole lot of potential. So this has to move quickly like we did with Apple. I think it was yesterday we did Apple. We took like a 30-cent or a 40-cent call and it doubled into the close. Yesterday was pretty good. There goes Google. Google's running. Okay, looking for Tesla to turn back up. Okay, the New York Fangs are showing short covering.
Two more moves. Kevin Simpson bought more Merck. Why did you do that?
Real quick refresher, we had stopped out of the position.
Google's running here.
We thought the acquisition yesterday of Verona, Scott, was the right move. For them to be making these types of big acquisitions is what they need to do if they want to replace Keytruda. And it's possible that this new COPD drug can be $4 billion product between now and 2030.
I see a little dose of red on the left. Can we throw that back up, please? But give me like a 2-day. Did the market not like? Was it down on the deal? Or no?
It was up nicely yesterday, and we bought it as a result of that. I mean,
Okay, Nvidia
where you've got a company that's trading at a
performing now.
4% dividend. They're showing that they can get into the acquisition business, and without that, there's no hope for them.
Stock's up 5% this week. Okay, so it likes the deal, and you like it. You sold Lowe's. I did. How long you own that for? A long time.
Merck doing well.
Yeah. Why'd you sell it now?
Okay, S&P back up.
I mean, the stock's down 6%. You know, into the year with a little bit, more bullish on the housing trade. I think the trade is more on the builders than it is the do-it-yourself names, right? So, slight miss on the top line, over the last quarter, slight beat on the bottom, and they have.
It's been a good couple of weeks, right? This being the third week. Very bullish price action. Dip buying continues. We're getting a little bit extended though. Some of the IVs are pretty high on some of these calls. The call skew is ramped up quite a bit.
Which I do. You don't think the worst is in the housing trade? It's like seen the worst, and now you're going to sell it now?
Well, I think.
Okay.
I think it's the builders are going to be the real recipients when this thing turns. It's a DR Horton.
Okay, looking for Nvidia to run here. Nvidia. Google's starting to go. Google. Nvidia. Google. Google turning up. Okay, let's take a look at Google. Okay, we got buy order blocks, but we're right up against supply. So we would need to get through 178.50 or so. 179 on Google to run some more. If you look at the daily on the right, Google's running into some pretty major resistance. So above 182.50, 183, Google becomes very bullish. If we can get above 182, 183.50, watch Google. SoFi been moving sideways just below the high of the day. SoFi. Okay, watching Netflix for a higher low. Watching Microsoft. Okay, let's go check out Microsoft. Here is okay, so the Nvidia flows are dropping off pretty quickly here. Okay, be careful with Nvidia. Nvidia flows are dropping off. Okay, Nvidia. NVIDIA flows are dropping off. Maybe I'll take some of that off. NVIDIA calls. Okay, NVIDIA. Okay, now we're bouncing. This is pretty wild. Watching the flows on NVIDIA at the moment. This is NVIDIA, not Netflix, sorry. NVIDIA. Okay, let's look at Google. Google's at the high. Google's at the high. Flows. Looks like people selling puts down below. The 180 puts. Google. Okay. Watching Google. All right, the markets are just kind of taking it easy. B and C pivots this time of day is not unusual. Call skews are getting kind of expensive, so just be aware. Shouldn't chase. I'll be trading a lot more verticals because call skew is getting pretty elevated. Okay, watching Netflix. Hedging flows continue to make higher highs, higher lows, just kind of hanging out at the high. Google moving higher. A train is shorting at 22. Okay.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new
Okay, S&P cash at the high of the day.
all crafted just for traders.
Having a hard time getting any higher. 62.80.
Curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly. with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Alphabet, let's take a quick look at the markets, which are near session highs as we speak. Still some weakness in the tech space. 9 out of the 11 S&P 500 sectors are positive. The only two that are not are information technology and also communication services. S&P 500 up 0.2%. The Dow up 238 points. NASDAQ down 0.25%, and the Russell 2000 leading to the upside, up over 0.75%. And if you take a look at the heat map there, got some green. You got AMD doing well today. You look at the far right there, consumer discretionary is doing well, healthcare is doing well, and financials ahead of the
All the New York FANGs are kind of taking a pause right now. Microsoft looking interesting. Microsoft, let me check Microsoft.
Today. Now let's get into a discussion.
Okay, so we've got flattening hedge flows here.
In the space.
Okay, let me check out Microsoft. Microsoft's turning. Okay, Microsoft flows have been bullish all morning. Microsoft. I'm sorry, the flows had dropped off all morning, went sideways. Now we're looking for Microsoft to turn back up. Not the best setup, Microsoft.
They're coming after Google Alphabet pretty hard here, Cap.
Well, Google Alphabet has dominant positions, Tom, in search that you already mentioned, AI, streaming, cloud, robo-taxis, everything that's most important in the U.S. economy right now, Google Alphabet has a dominant position in. Yet, the stock trades at 18 times forward earnings. The question is why? Why is is this happening? Why can't this stock get any traction? And again, Tom, I pay attention to headlines, and they pepper this stock with negative headlines. All day, every day, they had negative headlines that keeps this stock under pressure for some reason. And I don't know
Okay, looks good.
or what will happen, but it's amazing to me that this stock trades so incredibly cheap when they are down in just about everything. I mean, it's another
Market's
head
kind of gone to
scratcher.
sleep, looking like a siesta right now, with the exception of maybe Amazon and Google.
Put a $220 price target on it. They hiked that from 200.
Watching Microsoft. Microsoft looks like it wants to do something here. Microsoft.
For the most part. And
Microsoft.
but if they're coming after
Not too interesting. Microsoft.
about 14% from those
Okay.
all-time highs that we saw at the beginning of February. While
SoFi, been moving sideways all morning. SoFi.
Strategy here, Kev. They report earnings on the 23rd. The bar actually might be low going into this report, but I wanted to avoid that earnings event on the 23rd. If you think this stock is undervalued, or maybe it's going to go higher over the next week or so, this strategy takes advantage of it. So going out to the July 18th monthly cycle here that expires in 8 days, buy the in the money 175 strike call. It's in the money by a couple bucks. It's got that higher delta reaction.
Coinbase pulling back in. Coinbase.
Sit to offset some of the costs on that bullish call purchase. Sell the 182.5 strike call. So a $7.5 wide bullish call vertical.
Coinbase pulling back in.
It's trading closer to $3 right now because the stock has moved higher. Kevin, real quick here. No data.
Robinhood noting the news that Mondo just posted in the trading room. Robinhood could break out here. Okay, I got the 98 100 call vertical for next week. Okay, so that one's up, looking good. Okay, Google looks like it wants to go. Nvidia looks like it wants to go as well. Microsoft looking good. Microsoft looking good. Microsoft doesn't look as interesting. Hedge flows are kind of flat on Microsoft, so nothing there. Just like day traders playing around with Microsoft. Tesla starting to fade. Tesla. What's up? What do you want? You want some food? You got food right there. There you go. There you go.
Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash move to your mortgage account is available.
Okay, so NVIDIA, watching the flow on NVIDIA. Flow.
And more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
11 o'clock, the reversal on NVIDIA. You can see the reversal in hedging flows at 11 o'clock. We always look around this time of day for pivots. You got your pivot right around 11 o'clock on NVIDIA. If you traded the pivot low at 11 o'clock on NVIDIA, you got a nice entry once you saw the dealer hedge flows turning right at 11 o'clock. And it's turned. Okay, let me go to the 5-minute. Okay, we got supply overhead, so we'll need to get through this area. Need to get through 164. Okay, so we're pushing. Note the buy order blocks. Okay, I'm going to take a 2-minute break. I'm just going to do a little stretching.
Whether you're a bull or a bear, on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Welcome to Next Gen Investing. I'm Alex Coffey, joined by Jenny Horn. Jenny, we got a market that is a bit mixed, but it's really just the NASDAQ that.
And the backlog is unbelievable.
Oracle, that's me. I really like this Stargate project. That's a big deal. Hang on to this one.
Yeah, we've been talking about that's in that group. AI stocks just continue to run. And then finally, Joby Aviation's having a nice day today, Josh Brown.
Nice couple of weeks, up at 30% since I first mentioned it on the show. The stock continues to have great headlines.
All right, good stuff. I'll see you in a couple hours on the bell. The exchange begins now.
Thank you very much, Scott. Rosier data is Tim Cook cooked and the airline soaring, even as we face the steepest tariff rates yet. I'm Kelly Evans, and welcome to the exchange. The major averages aren't too fazed by the president's 50% tariff on Brazil. The NASDAQ even hit another all-time high this morning, but has since been in and out of positive territory. Dow's up 236 or 0.5% right now. Small caps outperforming, continuing their recent rally. And Delta soaring after earnings. The company reinstating the guidance it pulled earlier this year, which spooked the whole market, if you remember. The shares are now at 12%. They had an EPS operating revenue beat, and Delta is up 45% now in the past 3 months. I'll kind of relatedly.
Amazon trying to push higher.
Claims were much better than expected last week. Continuing claims still had a 3.5-year high. Amid questions about
NVIDIA just sitting here between these buy order blocks and the supply overhead. S&P moving higher. S&P.
It's time for Tim Cook to step aside as CEO.
But when you look at the institutional investors that could potentially own this stock, this is not really a new concept. And certainly, even in, the world of tech media, this has been something that's been discussed more recently.
But for all the recent AI stumbles, Tim Cook has been at the helm for a number of successful.
Amazon going, watch Amazon.
Watch the AirPods, Apple Pay, Apple Music, the M1 chip, massive international expansion, and tremendous market cap growth. Joining us now to discuss, Gene Munster, managing partner at Deepwater Asset Management, and Patrick McGee, author of Apple in China. Patrick, look, we got the library book. That's what it's a great read. And we're thrilled to have you both here. Look, the book talks all about how Apple created the made in China problem, why it was late diversifying its supply chain, and so forth.
Amazon, you can see Amazon flow is turning up. Amazon flows are bullish.
Exactly, Kelly. I think it's important we just take a step back, and there are a few factors that are being, I think, missed in this conversation. And the first is that being CEO of Apple is more akin to being CEO of a country than a company. And specifically, if you look at Apple's revenue plus their gross revenue and the number of employees, that they have about $2 trillion in annual kind of impact globally. And separately, about 7 million people find their full-time work from it.
David and Jude and everybody. My core concern today is that more people are showing up to my Q&A, which is JT's Sharpen Your Skills. Luke Piper, I knew we were best friends. All right, if you have any questions here, pop them in the Q&A box on the old Zoom toolbar. I'll do my best to help you out. Hopefully today's been a profitable day for everybody. I suppose I should shut this off, buy music, and restart the recording now.
Recording in progress.
Okay, Brent's on.
So first things off, we were missing a few symbols in Equity Hub that was rerun and should be populated. So if you're still missing them, let me know. Did get those.
Amazon flows are higher.
But I will talk about if you're seeing it out. So Brandon and Shengxing, I hope I pronounced your name right, sir. Sweet. I sit up here in the Connecticut wilderness and I travel around a little bit, but I'm used to pretty simple names. Simple US names. Although I will say that it's the only people that can ever pronounce my name, my last name the correct way, are people not from the United States, which is funny. Anyways, this is not why you're all here to listen to my stupid banter, so let us move on. I want to start with S&P today. I was talking to some people in the Discord just before we got on here about the Jane Street India thing. We talked about this last time. Just the fact that you see these options flows come in, you see the delta hedging come in, you see the market just move, right? And if you look at this really interesting chart, where did it go? This one. Hopefully I can see that. So this chart is from the bank, or from the India SEC, essentially, right? And this is, they track the entity exposure of the deltas right here, and then this is all the options volume, right? So they don't have like a trace-like chart on here. But what's funny is you see all the risk reversals that the Jane Street entity was trading, and then you see they start selling the delta exposure, gets more negative as they add on more
Tesla pulling back.
Risk reversals, right? And what happens? The market goes down. They were trading at the money risk reversals, but you know, the argument here is that the market spiked, which is this purple line, and they pound these risk reversals, and the market just kind of drifts down. In this case, the flow stopped when the risk reversal stopped having crazy skew, we talked about this with Matt Cashman, and he brought up that this was actually a synthetic trade, essentially. So I was calling it risk reversal, but then you add in that extra
Robinhood.
So that's what you get. And what do you look at when you see the S&P here? JT also told me to get this new thing yesterday so I can make fancy arrows. I haven't tried this yet, so I should probably try it before I screw around with everybody. Anyways, the point is that you get this situation now where Heroes bid huge, right? 2 billion up to 2 billion, so it's 4 billion in total. Can I make this an arrow? Ooh, I can, look. And then over here, you get all this positive gamma. Now, by itself, it's not a lot of positive gamma, right? It's 6,300 is a 98th percentile, it's 97th percentile, 96th percentile. There's no 99th. And the difference, kind of like just wealth in the United States, right? It's like the difference between the top 1% and the top 0.01 is like, someone who can afford to go out to the, Cheesecake Factory on an average Friday and Elon Musk. It's like, it's such a chasm. But when you get this clustered together, it's like, okay, that's a decent amount of resistance. And then what do you see? Hero pushes into it and then we just stop, right? So, in Discord, there's a lot of
Amazon pushing above its 20 EMA, 60-minute.
And, it's 20 handles. That's nothing to shake a stick at. But in my view now, it's like, should the market reject from here? No. Is this just going to be kind of one of these like, and we just trend higher? Probably, right? But that big, quick 20 handle gain is probably done because you just see this positive.
Robinhood.
And if we flip over to the charm chart, it implies there's some selling up here now because those calls will start to decay for the dealer community, and there's some buying under here, right? So you kind of just think of path of least resistance is into this 62, like 90-ish area, right? Now the question is there a trade to extract from this? And if you look at the 0DT options prices right now, it's pretty thin. VIX is getting slammed, which tells you that obviously balls coming in, fixed strike balls coming in. Is there money to be made on betting on this right now? Maybe around 2 o'clock, you get a cheap call fly, put fly or something, but, by and large, it's kind of extracted, right? The ball's extracted. There's not much going on. If we get an intraday move away from this pattern and you can bet on that mean reversion, then, like there's a little five handle micro dip right there, then, all right, maybe have a small little scalp there, but there's just not much excitement there, right? Now, if you go back and you look at the founder's notes, I had this note from last week.
Coinbase back up to the highs.
Getting long SMH and some single stock names. And the general idea was that the S&P would just sort of succumb to this positive gamma and not do much. And last week, S&P was up 3% and SMH was not up that much. But what you're seeing now, right, and so I think it was a little bit, it was a week early on this view. What we're seeing now clearly is, that tech stuff breaking out. These other stuff is really moving on, right? Like so, this week SMH obviously has outperformed spiders, for example, right? If you look at the crypto stuff,
Sharp Link Gaming.
So there's this
back to VWAP.
Stable environment, right? S&P is not doing much, and now you're getting people going, ooh, crypto's going, Nvidia's going, some robotics names going, oh, Robinhood's going, right? It's these individual names. And what does that mean? That means correlation is crashing. Now, I haven't looked at this recently, but I'm guessing this is at lows. 11. This is late. We were at 15 last week in this, remember? Now, if you all remember, those of you who've been around with us for a while, like Annie, I know she's heard this before. Here's record low correlation ever, right? And this broke all sorts of stuff. And I think this ultimately led to the VIX 60 crash, right, in August, because we got so stretched. And the interesting thing about this was the 2017 low, right? And in all of late 2024, we had just these people chasing the AI stocks and et cetera, et cetera. But we're very quickly loading into this. And then you add into that earnings are coming up. Earnings is going to drop correlation even more because people are going to be playing the idiosyncratic risk of earnings, right? Like, okay, the Taiwan semi reports, and then Delta reported last night, and then the banks report. So the vols get a little bit different for those single stocks versus the index vol, which pushes that correlation even lower. So if you're going to say, hey man, we have CPI next week, maybe it's good, maybe it's bad, I don't know. We have the buyback blackout. there was a great Odd Lots podcast with Charlie McGilligan, and he says that the number one passive flow now is buybacks because of size. I didn't know that was the biggest. I thought it was like 401k, kind of that passive inflow. So that we got the buyback.
Google's still going here. Google.
Because of the earnings. We got FOMC.
Google pushing up against supply overhead.
Right. The equity chase has gotten very extreme.
S&P breaking out.
And now when you look at the scanners, this is what I covered this morning. If you go to the Explorer view, I set this to call percentile. And this is the individual sectors in the S&P, not S&P 500, individual sectors in the equity market. So if you look at, all of the XL whatever, XL this, XL that, JT covered that, he likes this as well. But you can start to look and see, like XLB for whatever reason, right? I got to look up what's in XLB, I forgot. Huge expensive call skew, right? XLP, consumer staples, huge call skew. Spiders, big call skew, right? All this stuff is at the top of this chart. Housing, all of this stuff is at the top of this chart, the Dow. Calls are expensive. Implied vol overall, not that high, right? This is the x-axis here is the IB percentile. So Bitcoin actually has a lower, IBIT has a lower IB percentile. So, our call spread's a good idea to get long or to get short. Well, the vol isn't terribly expensive, right? We haven't had that vol up scenario yet, but you look at Spiders, Dow, HXB, you're having high call skews in the face of even average high IV percentile. Okay, these things are starting to get, over their skis, right? So that means we have a 10%, end of days correction.
Netflix fading.
Consolidation seems like a lot of things are lining up for that, which is why we're saying, hey, look, I like to sell some call spreads in here for 1 month call spreads. Like this bus is not ready to stop today. Clearly tomorrow's probably not going to be.
Okay, Coinbase at the high today.
Next week, the tone can start to change a little bit, right? Same thing here. If you look at call skews versus IVs in individual stocks, you look at this stuff, Google call skew very high, IV very high, right? Are you starting to look into that earnings window a little bit? Probably. So you got to be conscious of some of those factors, right? But these are all getting to be pretty rich call skews. And you got to remember, these are rich call skews in the face of everything that's happened in the last year, right? So 2024 is in this window. The giant market comeback from the bottoms of April is in this window. So, these are indeed very bullish readings in the context of everything that's happening. And so the way that I've looked at playing this is I sold some 1 month call spreads. I sold 25 delta calls in the S&P. I bought some VIX call spreads for August. So nothing huge, just getting a little something on there. I'm looking for, some things that, just seem rich. I will say that the place I'm staying away from is crypto. I know there's someone else obviously mentioned in Discord, there's the Genius Act, which could go through. And, if you sell call skew in Coinbase, but Bitcoin goes up 10% from here, you're going to get run over, right? So I am avoiding that complex in terms of selling those calls. Because me, you don't want to buy them because the calls are rich, and that makes sense. But I just largely think that that sector's got something else going for it right now, and so that one worries me a little bit in terms of being short. Are we able to capture OTC executions in the platform Flex? We can. So Flex options, we do include in the platform.
IREN, IREN. IREN high today.
Now I will say the OTC market, right, is, and for those of you who know, it's called over-the-counter market. So if you're a bank, you can make a deal to trade a certain amount of, Vega or volatility swaps, different things like that. And those are based essentially on the S&P volatility complex, Jared, right? And so the feeling is that if I'm a bank and I do a big OTC trade with some hedge fund, I'm going to hedge that out with some type of listed product, right? So the argument is that would feed down, right? Those exposures would feed down into the S&P themselves or into the VIX, volatility complex itself, Brian. So that's generally how I've seen that. And the dude, could you please go to the Dow's, the Delta Iron Condor this morning. So on, what night was that? Talked about Delta Airlines in one of our recent notes. And we're talking about the put skew, I believe, or that was in the Q&A. Anyways, Delta was showing a pretty high put skew, and that was the interesting thing into earnings. Here's the problem with the Condor, right? And we talked about this with Matt Cashman again on the most recent Q&A. Stock's up 12% today, so it's quite a big bump, at least last time I checked. And so, the argument here is, do you buy the Iron Condor this morning after earnings pop and the volatility drop? Well, how low should the volatility go? We can use forward implied vol to figure that out. If you look at this, you go, okay, we got another maybe 2 vol points to drop. It's not a lot, but there's a little bit more maybe vol to milk. And not only that, if you look at this later dated expiration, for some reason, we forecast that.
All right, that's me taking a little profits off of IREN, IREN.
Sell the at the money call to buy a longer dated call. That's what forward implied vol is suggesting, right? Because this is telling us that vol may be too cheap here, or is this maybe currently too expensive? So I think that's an interesting trade at the moment. But if you look at this now, this is 1 month vol.
Supermicro looking for more. Microsoft's still sitting here doing nothing. Supermicro doing nothing.
Versus the call side, maybe. But overall, there's not a ton of skew into this thing.
S&P 500 grinding higher.
On Monday, I think it was. Just try to pull this up for
S&P cash.
8 expirations. See if this is a lot different. This is what it looked like before, right? So you can see those walls just collapse, and you still get the feeling that this put wing did not come down all that much, which is kind of interesting. I don't know what's going on with these other night puts. There could be some trial or who knows, right? So just make sure that's not the case. But this suggests to me almost like a put 1x2 would make some sense if that ball comes in, right? But
Google's still rising. Google S&P still rising.
So do you do an Iron Condor? The positions are likely to change a lot today after the earnings report. But let's just look that up and see what the positions are. All of this is positive gamma, which is interesting because remember that put skew suggests that dealers maybe, they're a little bit full up on these. They're long these puts, so why would they? Those are puts. So long these puts and their puts are showing as expensive. That's a little bit counterintuitive, I think.
Apple turning back up.
Offer that high. But yes, so stock up 12% at 57, all the way up here now. No reason to think this thing keeps running up here. There's no positions at all, right? Nothing there. And to the downside, all the way down to 50s, back open. I don't know that it has to necessarily go all the way back that level as before where it was for earnings. So can you extract some vol from this point? Not really. Is a call calendar spread at this point interesting? Yeah, maybe. Or a put 1x2, maybe. I don't think those are like the type of trades that you're going to make your year on, but hey, they could generate a bit of something. So, Ricky, can I go over tape? Why some call buys are highlighted in green or some are white? Okay, so the biggest problem with tape, right, is that, and if you go online and you look at any of these accounts like a Cheddar Flow and Unusual Whales, and they just put somebody bought these, or somebody sold these, it's all off of which side of the tape, right, or bid or offer the trade took place on. So, if we just look at some of these NVIDIA trades, the question is, why are some of these listed as, why are some of these in green and some of them in white? It's because of where the trade is taking place, right? So you're looking at the flow data here, and you can see the option price traded here, 67.3. That's on the offer, right? So since it's on the offer, the assumption is that was bought, right? Is that going to be reasonably accurate? Yes, but as you know, there's a buyer and seller in every transaction, right? And interestingly, if you look at a lot of the transactions, well, a market maker can buy from another market maker, or a retail person could put their order out. So when we say someone's buying or someone's selling, we're trying to talk about.
Okay, Google's ripping here.
The buy side, right? Not that
Google's still going. Google going. Google's ripping higher.
So the white is, we're not not sure which side took place, right? And that's what the difference is. Now, implied vols, because the argument is that a market maker or a dynamic hedger, like a very sophisticated volatility fund, would never buy an option that has negative edge, right? That they think the vol is too cheap or too rich on something. And I think that's fair. But, you know, what can you really glean from all of this? It's tricky, right? So a lot of times those accounts that like, look at these guys, they're pounding these puts, they don't know what they're talking about because it's related to a risk reversal.
Google, nice vertical move here.
Maybe it's the market maker that bought these things. Like
Okay, Microsoft's starting to get something going. Let's see what Microsoft looks like.
Why do we even care about this? It's because
Microsoft.
Of the stock, you could look at the
Okay, watching hedge flows in Microsoft, nothing yet.
You can look at open interest to get a bit more information. You know, so like look at all these core weave trades, for example, right? There's all these huge core weave trades, and so they're all in calls. So if you were like Shutterfly, like, you know, hey bros, bomb emoji, rocket emoji, core weave calls just going like crazy, right? And so when you look at this, what do you see? Well, these are huge crosses, number one. So, you know, that is a little bit difficult, and Luke's putting some very helpful information there. So that's one element. Are you seeing like a repeated call sweep of big size, for example, so you can break the order flow down a little bit more to help understand? But these are some type of block crosses, which likely means that maybe one fund brought from another or a bank bought from a fund. But because it's a cross, you have no idea what side the trade took place on, right? Because it could be a hedge fund versus a hedge fund, for example. That's what a block and cross is, right? So
Google's still running here. Google going. Hedge flows looking good on Google.
So you go, well, look at all those giant call prints. Someone's buying tons of calls. This looks quite negative, right? It's not, you know, the world. It's not world-ending size here, but it's almost the most negative.
Google, nice follow through on Google.
The price action.
You can see hedging flows are looking very strong on Google.
So on a kind of first order, you know, principle here, you go, well, we believe that calls are getting sold in this environment largely. Hero shows us that. Looks like there's a little bit of put buying as well, and the stock's getting creamed. So
NVIDIA looking for that to pop.
Calls that are getting sold.
Okay, Google's still going here. Google's still going.
What information can I take from
Hedging flows very strong on Google.
160. So let's just break this down. CRWV. Stock is at extreme highs, right? Incredible run, starting to come down. What does that mean when the calls are starting to get sold? And these are longer dated calls, right? Not this week's calls, longer dated calls. So if we go back to tape and try to figure out, okay, forensically, let's figure out what's actually trading. And I go to the contract data tab. You look at total volume here. You know, you can look at the deltas, which is Hero's most likely to show you. Let me actually get rid of all of my filters here because I'm missing a bunch of flow. All right, so what's getting sold in here? Huge, right? 16 billion in delta. Oh, it's not filtering for me. It sounds too big for those deltas. There we go. All right, 123 million in delta around some of these positions for next week, right? There's some January calls that are deep in the money here that are trading as well. These probably have a bunch of deltas. So you kind of get the feeling of where you could write this as profit taking, right? Why else would these jam in the money calls be traded? That doesn't make sense for any other reason. You know, are these calls getting rolled? Are they being changed? What, you know,
Apple going.
Right. So we're starting to put this narrative together, right? Stock obviously is weak. You're seeing these longer dated positions come in. Okay, you know, profit taking. What does Equity Hub show us in terms of the positioning? Where might the support and the resistance lie? This looks a lot like that Delta Airlines chart where it's all, you know, there's all these long call positions above, right? Negative gamma for the dealers above. But guess what? Now we're coming down into here, right? Into this area, which should be some positive gamma support in this general zone. And if we just take off the
Okay, NVIDIA's starting to go too. Google is ripping here.
Lose all of this positive gamma at the next expiration, which is
okay. NVIDIA's moving. Watch NVIDIA.
You start to think about this and break this
Okay, NVIDIA, we want to make it through this supply. NVIDIA pushing through this area. Okay, want to make it through the supply that is just overhead.
I would suggest that we would find some support for today, maybe the next week, right here, right now, based on this positive gamma. But we're likely to see this upside just get reduced, I think, significantly. So what does that mean? This seems like a stock that's going to lose a lot of that upside momentum right now, right? I mean, you could argue that, hey, that's already done. I think it'll find a little bit of a bounce in tomorrow, but is this a great name to maybe play as a short over the next couple of weeks? Seems like it. I mean, I don't know what the relative options prices are. I think a bounce here for today makes sense into tomorrow, given the positive gamma expiring for tomorrow. But you can see these are longer days.
NVIDIA looking for more upside.
The position's losing its momentum. We could check the ball surface too and put together, yet another piece. So it's like, okay, I know what's going on. It's not short-dated players really moving this thing around. There's a little bit of that. It's longer-dated call sellers. So you could put all these pieces together and then start to say, okay, I get a picture of this now, right? Momentum's kind of zapping this thing. What can I do? Maybe a put spread is a great idea right now. Counter put spread, right? Because short-dated today, tomorrow, we're probably a little bit oversold, but maybe next week this is a nice way to get some exposure. Also, very, very bizarre ball surface here, right? Not sure what is going on with that. Very odd. So I want to check our data on that one. The at the money's having this extremely high. I mean, this is where that positive gamma is, which is super interesting. It's very, very odd. Just looking at my Thinkorswim here. Thinkorswim has the, so if we look at these guys, these are the 145 strikes showing a 99 ID. That seems, 84. Then if we go down to the 130s, we're showing a 76. Yeah. The game is looking a little funny versus what we're seeing, but I think a counter spread here, counter put spread, selling this week's and buying like 2 weeks out or something like that. That's kind of interesting idea.
Google a little profit taking there.
JT's session is open. So go to resources and go to webinar replays. You should see it in there. Ricky, I hope I helped answer your question, and I hope with the core weave analysis that was helpful. If I didn't do enough, it makes sense. Brian mentions the bar rate's out of control at 142. That could be distorting things. That's very, very good point there, Brian. I like that.
Google a little profit taking at the highs.
So here's the deal. Why
Still going.
For those you don't know, the borrow is obviously the cost. If you want to short the stock, you pay a fee, right? Because it's crowded. A lot of people are shorting a certain name, and that makes its way into options prices, right? It's part of the borrow cost or interest cost, essentially. So if it has a high borrow rate, it skews the value of puts and calls. IV change. I love that idea. Anonymous attendee. So can we put IV change versus today or tomorrow? That makes sense. I love that idea. So we pop that one in. Man, I got something so cool to show you guys too. And if I show you guys, I'm gonna get in trouble. I'm gonna show you this. I will taco this if anyone ever says that I showed it. Oh, you know what I gotta do too? I didn't record this entire thing. That's not helpful at all.
Tesla fading a bit. Netflix fading, but Google ripping higher. Okay, Snowflake might be
I
next.
just have my share screen. That's bad. All right, I gotta pause the recording.
Snowflake. Snowflake looking for a follow through.
Only one man in this room who has seen what I'm about to show you.
Snowflake, nah. Pass on Snowflake. Google's still looking good. Google's still ripping.
I have built a tool that is going to be super helpful. All right. I'm only showing you one small snapshot, okay? But this is where we're going. So we've taken our proprietary positioning data that we have, and we are building something really cool to show everybody that positioning on a daily basis. So this is just the premium spent yesterday. So when you get a group that is like, hey, everybody, look at everyone just bought or sold these puts or calls, you will start to see this data pop out in the morning, something like this. This is the biggest positions, right, that were changed on the day, right? Calls and puts across all things. So you're going to be able to come in here and see, oh my gosh, look, some big fund literally is just, going crazy on, NVIDIA risk reversal or Tesla calls or whatever. And they were long or they were short because we know that from all of our positions.
Okay, NVIDIA is going. NVIDIA is turning back up. Google, the flows on Google. Okay, here's NVIDIA flows, looking for NVIDIA flows to go. Love to see NVIDIA flows match what we're seeing on Google. Look at Google's flow.
Recording in progress. I've been working on that document for probably 3 months.
Apple looking good.
We launched Trace, and I was like, Trace was like a huge hit. Knock on wood, thanks to many of you for investing in the platform at that time. And Equity Hub, I thought the same thing. And we had a great reception to that, even though we launched.
Okay, there goes Apple.
In April, where the world fell apart. And I think that this report is going to make life for everybody so much more interesting and fun, and just it really takes all our data and is going to show it on the card.
Okay, Amazon also turning up. Let's see Apple. Let's see what the flow looks like on Apple. Apple flow turning back up. Amazon. Where's my Amazon?
The other reason I'm showing is I'm like, yeah, it's almost there. It's almost there. It's almost there. And I know people say that all the time, right? So I'm like, no, this is the thing. You can see it.
Coinbase.
Thing you can see. Chart.
Amazon.
I've actually seen a demo of it now. We were promising that for a while, and it's crazy. So like this hero chart.
Apple's flow is turning up. Apple's flow.
I'm starting to see some of the demo out of our system for that. So that's actually a real thing now. It's really amazing. So yeah, so there's gonna be a lot of cool stuff coming out soon. That tool that you just saw, we're gonna be doing a lot of work with people around that, analyzing the report, pulling out all the things that can pull out the report. Yeah, I mean, I don't know. I get too bullish on certain things in terms of what the impact's gonna be, but I think that could be as impactful as anything we've ever done. Look at these heroes, man. This is crazy. 4 billion just all day. Now we're at 62.90, right? Which is, this will be interesting because we were talking about the 62.90. Now it's 99th percentile. Interesting, right? And that's what the chart suggests, that this thing may get a little bit tired. So so that is fascinating. That is quite fascinating. So we'll see.
Okay, Apple flows continue.
IB changed. Did I write that down? I started showing. I'm so distracted by the other thing that I was doing. I know it's riveting Zoom. Riveting Zoom content. So Zimmy says, are there any data points looking to determine if we could be an ended day sell-off or yeah, it's the number one, right, is what are we in a positive gamma position or negative gamma position? And right now we're on the positive gamma. If you see 99th percentile strikes surrounded by other 99th percentile strikes, I don't think we're going anywhere, right? Number two is, what's Euro doing? It has not stopped going down. So we were kind of getting in this area that should be sticky. We shouldn't really move much. If we get a little dip, I'm going to buy the dip, betting that we move back. Is there a trade to be done on this? Unfortunately, as I mentioned before, it's like, what are the zero DT options prices right now? The straddle's going for $9. You're going to sell, but you're going to be selling the naked straddle because as soon as you add the wings onto that, then all of a sudden it's like a $5 straddle. Could you get long the call flyer on that strike? Maybe. Okay. But the market right now is basically telling you, if you were to look at options prices, I feel like it's the market basically saying to you, hey, this is where we're going. So, and all the balls agree, right? So that's a little tricky. If you're long futures, do you just play that ride higher? Maybe, but I think what I would look for now is like
Snowflake turning back up.
It'll sell off just because someone moved a position.
All right, Google, little profit taking, Google.
If we were in a negative gamma position or there was no positions in and around the general area, then I would start to worry or start to think that we could shift. So let's say that all of a sudden someone closes this strike, then I'm going to think the market could shift, right? Or if Hero suddenly tanks, like meaningfully. But right now we're in a very stable regime. Everything is just trending. Balls coming in. It's like, man, what am I going to do? Well, the answer is I'm going to go play. We got 3.4 billion. That's the largest. Oh, it didn't update.
That's me selling a little Google.
230 million. That's much more benign. A lot of zero to Z flow, as you can see, right? Stuff for tomorrow's expiration. So, Zimmy, it's like, if that 90%, 99% how strike wasn't there, then I would just continue expect more and more longs higher. But right now it's just trends. So if you're already long the market, you take it off and just kind of let it go, I think, right? Maybe sell call for tomorrow against that long. Today's aren't really worth anything. So
You see what Hims and Hers looks like. Hims and Hers got a position on Hims. Got stuck on the pullback. It's sitting on the 50-day. I'm going to go ahead and sell this position. Take a small loss.
So Zimmy, that's kind of what the deal is, right? Now, some of you may argue, look, it's been a really nice directional trading day because the markets just continue to go up all day, and you can't argue that, right? The rate of change isn't super powerful here, and if you just kind of bought futures and went and took a nap and took a walk outside or whatever, you're like, oh, okay, it's fine. Euro's going up, positive gamma. Why should I sit here and stare at the screens, right? If you want to white knuckle it and go into Hood or Coinbase or whatever, that's where some March stuff is happening. Sell core, we can put spread, put counters.
That's me taking a little bit of Costco off, not moving. Costco.
You sell spider calls versus buying puts based on the current volatility skew setup. Is selling a Delta 25 call means solely to express directional downside? Would Rise and IB hurt this position? So he's bringing up a good point, and so let's dig into that. By the way, JT just touched on a bunch of this as well. Maybe not this question directly. So if you go into the webinar replay, so we'll cover this maybe a little more in a more thoughtful manner. But look at spider call skew percentile, right? 93rd percentile. What does that mean? The 25 Delta call relative to the at-the-money call is as rich as it's been in the last year, period. That's not 99th percentile, still very elevated, right? IV percentile is only at the 30th. So what would be the most obvious time that you would be like, I got to go all in on calls? Like 99th percentile IV and 99th percentile. It was like, okay, this is crazy. So like if you look at Google right now, right, it's like, oh, 88th percentile, 70th percentile. Well, I'm guessing they got earnings in this window, right? Oh, they don't. I'm gonna look still. But this to me then is like, okay, rich calls and high IV calls are just expensive, period. So what Steve brings up then is like, well, yes, 25 Delta call is expensive relative to at the money, but implied vol overall is not
Okay, Nvidia's still going.
aren't trading for that. They're not that expensive, right? Because implied vol is not that high. And that makes sense. So we go to risk reversal. What is the risk reversal, Mary? The 25 Delta call versus
Nvidia going. Here, watch Nvidia.
Spiders.
Nvidia's on the move.
Its highest implied vol value versus the put in the last year, basically, right? And IV rank is still IV rank and IV percentile are just kind of different.
Nvidia looking good.
IV still. So Steve says, well, if you are that
Nvidia flow looking very strong.
The 25 Delta call to buy the 25 Delta put. That totally makes sense, right? And if the market drops or vol picks up at all, you're likely to make a lot of money. Why? Because that put value is going to rise relative to that call. So that makes a ton of sense. Why did I choose to sell calls in this situation? Because I think there's a good chance that the market kind of just chills, like trends a little bit over the next week. And I also have a whole bunch of long puts in my portfolio already. I did these put ladders and some other things a month or two ago. So I own laddered puts for the rest of the year, right? Now, those are quite out of the money at this point. But I've been just trying to carry those. And so this just helps me carry those a little bit. But if you have a fresh position, you're like, hey, I'm going to sell a 25 Delta call for August and buy the 25 Delta put. That makes total sense to me, actually. You know?
NVIDIA flows turning up.
And Steve, you're looking at the total right way. There's not one right answer. And ideally, you would have higher implied vol, right? So like Google, that call that's expensive, right? And so let's just take a look. If you're like, well, how do I know if Google has earnings or when it has earnings? If we just look at the term structure, you could tell, right? So bring up the term structure, clearly has earnings on the 25th. So that is why that implied vol is so high. Question came up yesterday. Why do you use Garch rate? Because Garch doesn't know about forward events. And so if the Garch vol is expensive, then that's another way of telling you, hey, this vol is expensive just because of maybe demand and movement, as opposed to like, oh, there's earnings, so I got to worry about that. So what could be interesting here, buying some sort of Google option for next week and selling like a post earnings one potentially, or if you want to try to carry through the next week, maybe buy that the money Google call or put, right? Mike has asked about API. No update on API availability, Mike. We have a whole bunch of compliance related.
NVIDIA still going. NVIDIA.
Things, and it's just farther on the back burners, being very transparent.
NVIDIA right up against supply. Looking for a follow through now.
First time I asked about it first time, Mike. Appreciate those two questions. Very technical. Thank you. XP is trending now.
Microsoft pushing.
Wow, look at that. So this alleges to be a pretty large call buyer, right? Is what Hero is showing us, and that's a substantial amount of delta. They have earnings here on the 8th, and if we look at skews, doesn't appear to be anything all that exciting. I'm guessing it's high because of earnings, so you do have some elevated options data there, or excuse me, elevated skew implied vol prices because of earnings. If we just go look at tape.
Okay.
The other thing that is cool for tape is, you know, oftentimes
Google flagging at the highs. We're listening to Brett Kuchabar over at Spot Gamma, talking through alpha tools. Meanwhile, market's moving higher. NVIDIA right up against supply now. If we get through this level, watch for a breakout.
Pacific Gas having some of the highest options volume in the market. Weird. Cash rules everything. You're very welcome, sir. Ma'am? Doesn't feel like it's a female name. Could be wrong.
NVIDIA, nice move on NVIDIA.
Danny, would you ever name your annual cash flows everything? Anyways, so what's happening here? These are a lot of 185 strike options. If we just sum this up, you're seeing these calls right here, right? A lot of them. A lot of delta being bought there. Total volume, almost 4,000 of these things. You know, do we think these are getting bought, right? In the question, or are they getting sold? Well, what's the stock doing?
NVIDIA.
Stock is going up 5% today. And if we look at where most of these transactions took place, we can see it in Hero. Stock seems to also be going up, right around that time. So the argument would be the dealers
NVIDIA having a nice move today.
Buying these calls, right? They'll be shorting stock, and this gives the impression the stock kind of bumped around that time. It's going up around that time. So I kind of feel like these are being bought. Obviously, the report I just showed you with detail if they indeed were. And also, if we just watch tomorrow on Equity Hub, when we get the update, we'll know. But the inference is that there's someone buying these calls up here, which have fairly low positioning. If we just look at open interest here, we can see maybe these are just bought back. Looks like they only have 70 calls is what we're showing in the buy side positioning. So this could add a decent amount of negative gamma, and I could understand or agree with the idea that you want to be long this stock based on this flow, right? Now earnings are coming up, but clearly it looks like somebody with some pretty good
NVIDIA still pushing.
Getting long these calls, so that makes sense. And Clive smartly brings up Delta's guidance for increased travel, and Brian too. So check to see you guys. That makes a lot of sense. Now it's up 5%. It's pretty good.
NVIDIA still pushing.
Iron Condor into the close. What are you getting paid for that? The answer to that question is not a lot, right? So in these situations, if I was going to do anything, I would be playing a call fly or a put fly, very cheap one, right? Betting that we would move into the 62 kind of 90 area. So that's the kind of thing where you spend 55 cents or 75 cents trying to make $10. That's the kind of thing I would think about. I wouldn't really look at trying to put on a $10 wide condor. So meaning like you put the strikes are $5 wide and it's a $10 wide run at the money, trying to make a buck. Just don't. I think the risk reward of that is just not that great. I do think buying a long condor for tomorrow makes sense, and in fact, I've been doing this on a daily basis now, and if we close up at 90, then today will be the third out of 4 days that I've made money from those. Now, the day I lost $15. And then the next day I made $15. So, the P&L there is waffly, but when you're getting long condors or long strangles is what I've really been doing. I've been selling the wings. And the idea is that like Captain Condor loses 3-4 times in a row all the time, right? And they keep doubling down with the martingale style. But the thought is here was like, well, imagine if I have unbounded P&L, and so I'm just kind of chipping away, making a little bit of money on these things. I'm inevitably going to get a move that is way outside of what the market was pricing, right? So on those days, do I make $50, right? That's the kind of thought. Now, vol gets really expensive. I'm not going to do this, but right now, vol's at 15. We're going to get a surprise at some point, right? Maybe the surprise is the upside, but when you're getting implied vols at, let's look at these vols. So turn off compare mode.
NVIDIA still pushing.
You got an 8% implied vol for Monday, 9-10% right out here. This is where FOMC is. The tariff day is 13%. No one's pricing in anything. So these are the situations where it's like, number one, I'm going to lean on being long volatility, right? I'm not talking about today. I'm talking about, on a rolling kind of basis, right? This is why we're talking about buying fixed calls. This is why we're talking about, hey, was it Brian? Sorry, I forget. I think it was Brian that brought up what was it, Brian? Somebody just brought up the risk reversal trade, right? Great trade right now because you're getting long puts at 10% implied vol. Those things make total sense to me.
S&P still moving. S&P.
Right?
S&P still moving higher.
It's like nothing, right?
S&P still going.
S&P's at 50, you're going to get just smashed when you're wrong, right?
Okay, note the hedge flows and NVIDIA.
So buying the 1D DT straddle. I've been doing it about $20 wide, and it's been working right now, right? And it's one of those strides like, okay, I was going to commit to doing this for a while, and we'll see. And my feeling is that we're going to get inevitably some type. I mean, we've all been trading here for a while, right? You're going to get a 1-2% down move. Like Monday was kind of that move, right? And that was, that was the best payday for this thing, where it's like, oh, I kind of didn't see the dividends coming, which is not all that big of a move, but market's pricing in 20 pips. So that's kind of the idea. And look, you're getting 40 handle 25 point move here, so that's an 8% implied vol annualized move. It's not, that's not huge. So if we keep getting this, it's not happening. Are we likely to get a huge move tomorrow? No. But again, next week, CPI, OPEX, buybacks, blah, blah, blah. It's not too hard to think that we have one slippery kind of 1% move into that window and then into the end of the month. So buying that down, those downside, I think just in S&P,
NVIDIA looking good.
A lot of sense, and I'm going to keep with this strangle strategy at the moment. The Eric's we have 1,000 on Chewy. The reason you have 1,000 is because the logic, what it does is it says take today's or tomorrow's expiration gamma. So in equity, you'll see.
Okay, there goes Microsoft.
Take today's and then measure it against everything X today. So it's not a bug. It's just the way that I asked to have it looked at, and it confuses most people. So that is something that is actually being fixed now. So you see that go where it's changed, I should say. Some things are bugs, and I'll admit they're bugs. Other things aren't. What about Netflix going on here?
There goes Microsoft. Microsoft popping. Okay, here goes Microsoft.
Not a longer dated call selling there. So you're going to get nearly the most negative day in the last 30
Microsoft going.
Not the most negative day ever. Kind of looks like the core wave chart, right? A lot of these things kind of look like they're a little bit toppy, don't they? And if we go to equity, this bug is going to go out there in the chart. Let's try to make bananas. All right, sorry. So weird structure. Holy cow! It looks like there's a call spread, some kind of sold there, and then a lot of positive game down here at 1,200. Based on this curve, right? And that game, it doesn't change all that much after this expiration. So, if I was going to play something that, you're going to be short this thing down in 1,200, I think that
Tesla bounce. Microsoft bounce.
It just seems like, we're sliding down this curve. So, I don't know, 1,200, like, I could see selling maybe some 1,200 put spreads if ball popped at all. I don't know what the earnings are on this thing either. I guess the next 90 days, like everything else. Yeah, that ball is very elevated right now. So earnings next week too. So another one that might be interesting: sell this week's puts and buy post-earnings puts or something like that, or just selling this week's put spreads. Maybe it could make some sense. I'm thinking about here. Looks like I already have.
Okay, took some profits. NVIDIA.
6%. But based on the on this positive game in this 1,200 range, right? I would think betting that would kind of have some support there, even in the next week, could make some sense for earnings. Yeah, I was just looking at that too, Chuck. That was the equity.
Microsoft looking good. There goes Tesla.
IV rank and IV percentile mark is just two different things. So IV rank tells you out of the last year where's
Amazon high of the day.
It's sort of like 1 out of 365, right? Basically, and then IV percentile is just the percentile of the last year. So that's what the difference is, right? And if you just Google the difference between rank and percentile, you get it. Two different ways of looking at things. The argument is that you could have a bunch of days that have the same rough IV, right? Whereas the rank is literally ranking from the last number of days, so it's putting it into a slot like first, second, third, fourth. Whereas the percentile, you can argue maybe is a little more accurate. Like if the name is in an area where IV has historically been at its lows, it's with a more similar percentile, and it probably is. When I'm listening to myself saying this, I know that I'm not explaining it well. But if you just look it up, percentile versus rate, could get the difference. Is there any platform you watch SG Hero and Little 2 at the same time? TrendSpider does support SpotGam. I don't think it imports Hero data. But the argument is you want to see this with Hero.
Okay, Tesla pushing higher. Tesla.
If you go here, right, you should see this. So there's your time and sales. I think that's what you're asking for there. Yeah. Jonathan Bond, what's up, man? What expirations am I using for long ball condors? I've gone 1 DT on those, and I've been going 10 to 20 handles wide. So what I do is I look at the money, and then I go down 20 handles, and I buy the call, and I go up 20 handles wide. And that's what I've been doing. And the reason I've been going to 20 handles is just because I have believed that there's been big strikes around, 50 points wide, basically. So 60, 250, 6,300, for example. So like, where do I think the market could run? And using our level. So if I think the market has the potential to go up, say today, up to 6,300, then I buy the condor that I know will make me money if the market does indeed do that. And that's it. If the ball is cheaper, maybe I go a little tighter. If the ball is expensive.
Sharp Link Gaming back to VWAP, looking for a bounce.
What I'm trying to do is I'm just going to track this for a little while, right? And once I track it for a little while, then it's like, okay, let's try to make this into something a little more of a concrete strategy. Yeah, so if we stay here, then we'll
Coinbase still going.
There's a day that Captain would lose though. So if Captain's losing, and it's cool. He's not even in the market today. He's driving his fucking Lamborghini. Zach, most recent flow and price diverging with IW and Russell. The IW and Russell is a. I don't really ever look at it, to be honest. And maybe I should. Yeah, and a lot of negative gamma in here. Really up until you get to 230. The problem is once you rally into 230, people are going to change their positions around, right? And so, I can't argue with you if you are long in here. The tailwind seems to be dwindling a little, meaning the gamma gets less negative to the upside. But there's plenty of positions up in this 230 area. So
Tesla, big pop on Tesla.
You're wrong for being long it. No.
Tesla coming off the low.
We just look at scanners and see where.
All right, Tesla heading back up into the gap, maybe. Big buy order block, Tesla.
The call skew is very high, right? Almost just like spiders. So is this a risk reversal if you want to short it? That makes total sense. And I would rather do a risk reversal than short it here. Because if fall pops, you get that extra P&L. So like sell the 230 call to buy the 220 put, something like that. I mean, that could make some sense. Depending on your time, obviously. If you're going to fire out time, you'll change those strikes. Mark's asking, couldn't I be more responsive if I bought the straddle versus a condor? I'm buying the strangle. I'm buying the strangle, not the condor. If the wings are wider, so like when I started earlier this week, there were still some vols. Like I was selling $50 wide, or excuse me, I was buying $50 wide condors. But then what happened was like the vol got cheaper, and it's like, well, I don't want to just sell this call for. I want to call for 25 cents or something. No point. So that's why I changed. And the argument, should I buy the straddle, the at-the-money straddle versus the strangle? To be honest with you, the reason I just chose that is just a lower premium to get in on it on this, and maybe I should be going with the straddle, and it's something I should probably prices look at a little bit, but I've been pretty happy with the with that. And I think you can optimize. You want to look at the prices and stuff like that. So straddle versus strangle. I think on the margins, there's probably some optimization there, but not doing the condor. In other words, not selling the out of the money call and the out of the money put. I'm just not doing it because it's not adding anything to me. And if I do get a huge move and it's capped because I sold some extremely cheap call or put, it's like, well, it's terrible. And then lastly here, what's up with Datadog? It's getting added to the S&P 500. These things just get front run so hard now, and it takes the wind out of its sails. And so I know we talked about that in another Q&A, so it's not a hindsight comment, but this is when it gets announced, everyone front runs it, and then we're done, right? So what do you do with this now, right?
SPY. A little profit taking there.
And what you see is a lot of positive gains.
Tesla's still moving. Tesla.
Isn't changing with this next expiration, right? So I think this 135, like right in this area, makes sense as a long. And that's a decent amount of positive gamma. And then like some people do have to actually buy this thing. So that does make some sense. What walls? Got earnings there on the 8th. So, like selling the 8-1.
Tesla flows picking up.
Look at that call skew. Wow. I didn't expect that. So I think selling, these are the post earning. Let me just look at the 8-1. All right, so I'm going to delete the post expiration. So this is screaming to me as a call sell, or a condor sell. I don't know if these are even worth anything. But selling the 130 puts and like the 150 calls as the condor makes sense. Or just selling these calls. I don't know about a call spread, but for 8-1s like pre-earnings, that seems to make a lot of sense to me. That call skew has got to be because of the S&P ad. So like a 1x2, if there's anything in that, like again, the reason I'm kind of being a little bit vague is I'm not looking at the live options prices, but if you're going to like buy the 140s and sell to the 150s, something around those, seems really pretty interesting. So wait for OPEX for the long puts. Well, you got CPI next week, non-Cindy. So the way that I'm doing this is that there's been a bunch of times where I believe there's a catalyst, right? And then I get too cute with waiting for expiration day or this thing to do it, right? So if I'm trying to build up a 1% put position in my portfolio, that's $50 or $100 million in puts I got to buy. So
Nvidia's still going.
Leg into this. Just fucking around. I'm just buying a handful of puts, right? So I sold a few calls here. I bought a few call spreads here, or VIX call spreads here. I'll buy, a couple of puts maybe early next week. So I'm buying a few, and I'm not loading my portfolio up. I'm not going just crazy on these positions. I'm literally just legging into some a little bit. And this is also why the founders of the sport said buy.
That's me taking some scalps off on Tesla, taking some Tesla off into strength.
I think there's a couple of good reasons for a catalyst, and so if I'm long those August puts and I'm selling, some shorter dated call spreads for like next week, then my carry should be fine, right? And also the puts are really cheap, so I don't have to go crazy for trying to carry this stuff. So that's kind of where we're at on that. All right. See that the questions have slowed. That means that you're all sleeping, or on to better things. See, that's the time. That's right. All right. If you wanted to see the previous replays, so here's the webinar replays.
Okay, there goes Nvidia. Nvidia ripping now.
Kudos to the Spot Gaming team for getting that one.
Check out Tesla.
If you want to look at some cool vol conversations we had with Matt Cashman, please do that. And then we obviously have Equity Hub, Sharpen Your Skills, Founders Hub, Sharpen Your Skills, all that stuff is in there. So feel free to watch those. Email us, info@spotgaming.com. I will be back on Monday with the Q&A session. We also have OPEX next week, so there's a whole bunch of content coming out around that. A lot of new tools coming out very, very soon. I showed you one already. There's chart upgrades, there's all sorts of other stuff, and we have a huge project coming up at the end of the year, so a lot of good stuff coming around. And my cousin Vinny, I'm glad, I know you've been trading for a long time, so it means a lot that you get some alpha in here. You're right. Do I trade on Fridays? Yeah, I do. You know what? Actually,
Look at NVIDIA. Look at NVIDIA.
Before I go.
There goes NVIDIA ripping.
Most of you probably have seen this before.
NVIDIA looking good.
So this guy was a market maker at Jane Street, and I believe he's also written a trading book. And I cannot. But I thought it was really kind of like interesting, right? Because he says this, like, you have no edge, right? And so I was thinking about this a lot because we've talked a lot in presentations here before about what is your edge as a trader and how do you extract that edge, and that's kind of defining everything. And I actually think for the most part, he is right. I mean, he's a super smart guy. I'm sure his IQ is higher than mine. And I think, you know, his target audience is the people out there kind of YOLOing calls and paying prices that are just stupid. And we have this conversation about edge all the time because I actually think if you are in the fundamental space trying to outsmart a hedge fund because you think they may sell, you know, XYZ company's going to sell more products than some other ones, I think that you have a very small edge, right? If you've never visited a multi-billion-dollar multi-strat hedge fund and seen the resources and brain power stuff they have there, you could understand why I don't think you have a ton of edge in that space. There are people that do, and that makes sense. It's also just my opinion, but I actually think that there is a tremendous amount of edge in the options trading because the options prices get skewed so often based on the positions. And the key distinction is that there are dollars and cents that Ken Griffin or Jane Street can't really access either because of the risk that's coming onto them or it's just too small of an opportunity. So, you know, I think about the ability for myself to generate returns that are positive. A lot of those returns exist in a space where I'm putting on a trade that's a 10 lot of options or something like that, or a couple hundred shares of some stock, and I'm able to extract that edge because I'm living in this spot, like those like fish that like are hanging on these whales and moving around and feeding off the whale. That's kind of like what a lot of that is, right? And also it's the people that don't know what they're doing that create the edge, right? They are buying calls at too expensive of a price, right? Or they're fearfully running into puts, or the margin, you know, they're getting margin calls, or whatever it is there, right? In those positions, and those are the times like that positional edge that you get. And so, you know, I had some experience running a fair amount of money in S&P trading, and that's a much more difficult situation, right? You have to have a longer-term, you know, volatility strategy, know how curves are changing, and there's all sorts of exogenous inputs on there. Like one of the things that happened with me was that I was being benchmarked to an 18% bond strategy that the family office had, and it was a ridiculous estimate that they could get 18% a year. In fact, they ended up losing everything on that. But I had to make 18% a year plus for them to validate, which is hard, right? Because you have to start slinging stuff a little bit more. You know, you're talking about, hey, I'm trading $100,000 and I got to double that. Well, that's easy, right? Because it's a much smaller position. You can kind of move stuff. You don't have to care about your drawdown. Like there's a lot of these companies out there that say if you have more than a 4% drawdown or 5% drawdown in a single day, you know, they yank your account from you, right? So you have to manage the risk in a different way. So, you know, there's a lot of different things there, but the edge thing is quite interesting to me because I fundamentally disagree with this, but most of these people who have no edge are the ones that create the problem, right? They create the distortion in the surface. They're doing all these stupid things, right? Like buying calls at too expensive of a price, and call SKUs getting bid up, or there's a a margin call somewhere in copper, and copper's going crazy, and you know, there's edge in those opportunities, I think, and when you're a smaller trader, you can get in there, get liquidity in a small position, and get out, right? If you're talking about call SKU flaring a data dog for a week, how much does Ken Griffin really? How much can he lean on it? He can lean on it so much he's going to take the trade out, right? So it's an opportunity for them, but I can get my two lot in, right? Or whatever it is, and that could be meaningful P&L for me. So, anyways, it's an interesting thing. You know, so anyway, I saw that. I think most people in this room, I don't know how you feel about it. I'm sure no one canceled their spot game subscription because they just read that, but he's getting a lot of read on it, and so. Susan, you is there an efficient way for a newbie in options to learn and understand when we are paying too much attention? You know, at the end of the day, Susanna, excuse me, I'll tell you like what my number one problem is as a trader. I trade too much. And a lot of it just goes back to boredom. But I feel like by trading every day, I get the pulse of what's happening, right? Like I'm always looking at data. I have to know I'm buried in code, but I had to put my trading is on another computer altogether. So like my main machine is here, or I'm coding and doing the things I need to do, and then I have like move numbers over there. And a lot of it's just like I had this itch, right? I just gotta like trade something, and that cost me a lot, right? Because I'm just trading at times where I shouldn't be. I'm doing things I shouldn't do at prices that aren't the best, and whatever. And if I just cut that down and just said, here are the top 5 setups that I like. Show me when call SKUs at 100th percentile and IVs at 100th percentile. I'm like, I have a field day, and those are the times like Circle came up recently, and you know it's an incredible trade for me, right? Probably get maybe a dozen of those a year.
Tesla backup.
And so I'm not great at waiting for those fat pitches, right? And the fat pitch is different for everybody. Some of you may be slinging futures intraday, and that's what you like. Some of you will only sell call spreads or put spreads, you know, those kinds of things. And so the ability to say, no, this isn't great, not worth it right now, cutting down the number of trades you're doing, I think is a big one, just waiting for the best setup. And then the second one, which is really hard, is letting winners run, right? And so that's a different kind of problem. And the way that I've solved that problem is you scale down the number of trades you do, but you scale up the size when you get the trade that you like, right? When the trade works out your way, you scale out of it. So you buy 10 calls when you think it's a great opportunity, and when it starts to move your way, you sell half those calls. And that's more run, right? And so those are kind of those two things. And the nice thing about the options volume, right, is when you get crazy options volume and you get the SKUs blowing out, and you know what the news is, right? It's just people FOMOing something. That to me is like, okay, great. Like that's what my edge is, right? It's this positional edge. You're gonna tell me some biotech stock is releasing a drug next week or some Supreme Court decision. I have no idea, and so I'll stay way away from that, right? And that's kind of like with the Bitcoin stuff. I'm not short in Bitcoin vol, even though the Coinbase, because I don't know about the G's Act and what that means for everything else. I'm long Bitcoin stuff because I think it's going to break out. And I'll get a dead horse talking that angle of things, but I don't know, you know, these certain things, and so I just stay away from it. But you know, like I'm getting calls from my buddy saying, like, did you get in the Robinhood IPO? Like, oh my God, for Circle, like it's incredible, and we're all making so much money. And I'm like, okay, I know what I'm dealing with here. So you, Mr. Robinhood, you're buying the beers this week, but I'll buy you a full steak dinner next week. All right. Yeah, the IBIT and Morris stuff. just makes sense. Those calls are still cheap, right? So buying call spreads and still makes just a ton of sense to me. But I had this fear. I've said this before.
Tesla's still pushing.
Baseball signed by Babe Ruth. But my grandfather used to play with the baseball. It's like he got it signed and like, oh, I had this baseball. I'm going to play baseball. So it's like it's worth nothing. It's just a piece of shit. Like, Grandpa, why did you put this in a glass case on a shelf with a certificate of authenticity for 80 years, right? I don't know. And so I always picture my daughters coming in when Bitcoin's at like $1 million in like 10 years. Like, Dad, why didn't you buy more Bitcoin? And be like, shut up. I didn't know. Anyways, literally the audience here is just collapsing. So New York Yankees are. I mean, Cousin Vinny sounds like a New York area. All right, that is going to be it for me now, officially. I like them. I have Mara calls, actually. I do have those. I did a Mara. Last time Mara went.
Tesla's still pushing here.
The counter spread. So
Tesla's still pushing.
the original calls expired, so I owe them some very out of
Buy order blocks. Look at the volume. Tesla.
RBO, you want to pump that thing? Shoot. All right, I'll be back on Monday. Thanks everyone for joining us today. A lot of cool stuff going on, like I said, and so should be an exciting week seeing us here. Any questions? info@SparkGame.com.
Okay, that was Brett Kuchabar talking about alpha and different things on the platform. Very good stuff to know. Tesla back up to the highs, very profitable swings in many of these positions. Amazon, Apple, Google, Tesla now, Nvidia, waiting for Netflix to turn the corner, Broadcom, Google back, trying to get back up to the highs. Microsoft, nice push on Microsoft, giving you an opportunity to exit some of these positions. Beautiful look to the markets. What is that? VRNT. All right. Tesla moving higher. Tesla.
We play a critical role in providing compressors, turbines, and the equipment that's required for hydrogen. In fact, today
Tesla's still pushing back to the high of the day. Got buy order blocks here. Nice volume coming in, Tesla.
facilities such as NEOM, which is a hydrogen facility, and we see hydrogen being part of the energy mix going forward. And you heard from Saudi Arabia, they're investing heavily, and we see Saudi Arabia playing a big role in hydrogen expansion in the future.
Now, Simonelli being here is one reason we are here. Listen, we understand there's a lot of strong views about OPEC. There's been no OPEC bills floating around the U.S. Congress for decades. We understand there's a lot of strong opinions. One of the reasons we're here.
Okay, Tesla dealer hedge flows continue to rise. Okay, starting to level off a little bit right now, but looking very strong. And then breaking out again, Tesla. Okay, the flow's just ramped up just now.
That the oil markets would actually be a lot more volatile if it wasn't for this group. Listen, the only thing worse than OPEC managing the oil market is OPEC not managing the oil market. Why is that? Because when there's no swing producer, you get wild, boom-bust price.
Nice job on Intel there, Corey. It's moved 40 cents today, 47 cents. Intel. I'm getting spoiled with these $4, $5, $6, $10 moves.
is unfair on consumers, producers, or governments alike. So you can have your views on OPEC. I certainly get it. But what you can't have a view on is that energy demand is not going to grow. You can disagree, John and Kelly, on how much it's going to grow. OPEC obviously sees a lot of energy demand growth, much of that, yes, coming from oil and gas. But guys, I know that we talk about AI, John, Amazon Web Services, hyperscale.
Tesla, big move here on Tesla, still going.
Part of the whole scenario, which is use it all, except for coal, by the way, which they see declining.
Tesla's still pushing.
You're getting some good access, Brian.
Okay, I'm gonna make some lunch. I'll be back shortly. I'll switch channels here so we can listen to something besides CNBC.
Small caps have started to do a little better. So it's just little baby steps. And then we talked about a little bit ago with the Fed. You know, small caps want small caps want lower interest rates, right? I think they rallied a little bit last week on hopes of that. And on Friday, it was Thursday. Jobs Thursday.
Right.
It's hard to remember that.
4th of July holiday.
Something long enough to usually call Jobs Friday. Then they got hit because now they're punting again on the cut. So those are some things. But again, that's why you keep a diversified portfolio and just it'll take care of itself really if you do it that way.
And we are seeing long-term treasury yields come down from some of those highs.
Yeah, we are.
It's also a good thing for small caps. But going back to large caps, it's interesting because we have seen some dispersion when it comes to the returns for these mega cap names. So Microsoft, Nvidia, Meta, they've all done really well.
Yes.
Amazon and Apple, not so much. So it feels like, is it a stock pickers market within the Mag 7 right now?
Within the Mag 7, yes. I was going to say it's not so much a stock pickers market when you look at the sectors in general. There's a lot of strength out there. But the Mag 7, it is, of course. Tesla's been in a lot of trouble for different things.
Yes. I didn't even mention
I know you didn't. But it is from that point of view, I guess. But
is that because of macro headlines? Is that a specific?
Yeah, well,
specific to each company.
I think it's specific. I mean, Apple, their growth is, I don't know the number off the top of my head, but Apple is really slowing down. And Amazon, well, they're still a good company. Every time I walk in my house, I trip over something. So I think they're still doing okay. I know it's Prime Days as we speak. So we'll see how that goes. But the reality, that's more company specific. But that's the beauty of that. You can, buy a basket of Mag 7, buy them in general, and hopefully over the course of time, maybe a couple lag, but some of the other ones do well.
You brought up international a few times in our conversation. I'm curious, what is the right allocation to international investments? Let's say for someone who has a long runway.
Yeah, no, if you think about 100% basket for stocks, right? That's how we're doing. We have about 70% US. We've got about 20% in developed international, about 10% in EM. And that's more even weight, if you will, US and international. We're a little bit underweight emerging markets there. So that's kind of how we look at it. Again, we don't necessarily like EM, emerging markets. We think there's still some potential issues with China that are out there, but we still have that exposure and the money that we run because, it's okay and it can still do well. So that's how we see it. Now, when it comes to developed international, we do like Europe. And I know, everybody likes Europe now because it's done so well. We were adding European exposure for a pretty big amount back in March because right around February is when Germany came out, so they're really going to start doing some new stimulus things to really get their economy going again, like the largest they've ever done potentially, outside of like a real catastrophe. And those are reasons we think those areas are going to continue to do pretty well, and they have, and we think they can continue.
All right, Ryan. Now time for a segment we like to call Lost in Translation, where we get our guest takes on what the market might be misunderstanding. And something you find people are completely misunderstanding at this current moment is that market highs are not something to fear. Why is that? Make your case.
Yeah, I call it the fear of heights, right? People have all the big skyscrapers in New York. Sometimes you have a fear of heights. When you look since 1990, I found 738 new all-time highs are made on the S&P 500. And if you pick any random day, about a year later, the S&P's up about 9%. All right. But after those all-time highs, the S&P's up actually double digits. And it's up a median of 13.5%. And you look at this, these new highs happen in clusters that last for a while. And yes, then you can have a period like from 2000 to 2013 where you didn't have many. But once you start making them, these clusters can last a lot longer than you think. And if you have reasons to be optimistic, like we talked about during this podcast, economy does a little better, the economy does better, earnings do better. Maybe the Fed actually cuts a couple times for the right reasons. Simply inflation's coming back down and the economy's okay. Well, those are the right reasons to cut. Those all could be reasons that this bull market continues.
and those new highs continue as well.
So moral of the story, if you're not in the market yet, it's still okay to get in at these record
Oh, we
highs.
think so. Now, people always say, let's say you have $1 million. What do I do now? Well, that's a tough call. I mean, I would say maybe put 20% in every 6 weeks or so, and over the course that way you don't nail a top, or you maybe get a pullback. And what Eisenhower said, plans are useless, but planning is everything. The reality is, whatever you're going to do, set a plan and make sure you stick with it, because there's nothing worse when the TV is red and everybody on TV is telling you how bad it all is. You're not going to make a good investment decision. That's why you really have to make these decisions very clear cut, write them down and say, I'm going to stick to it and do it. And the reality, again, is this has been a global bull market. I think it's going to continue, and the second half should be pretty good.
Ryan Dietrich, thank you so much for joining us today. And we're winding things down here at Stocks in Translation. But make sure you check out our other episodes on the Yahoo Finance site and mobile app. We're also on all of your favorite podcast platforms. So be sure to like, leave a comment, and subscribe wherever you get your podcasts.
There's nothing like a break to put a fresh spring in your step. With Candy Crush Fanta, you can relax and unwind from a daily hiccup by matching colorful candies. So take a moment, put down the basket, put your feet up, and start fresh by swiping the day's stresses away. Plus, it's even better when you crack that tricky level on your first try. Now that's what we call a sweet treat. Candy Crush Fanta. Download now.
What's this?
Are you Tony and I love you?
No, thank you.
They're a well-known, well-established U.S. brand, and they're also diversifying in an attempt to shift and pivot amongst changing consumer demand. We talk about Fruit Loops and Cracker Jacks and the more
Markets are starting to slow down a bit.
and some of the more health-conscious brands. Which, when you look at your demographics, your higher income households are going to be less price sensitive and more health focused. So they're going to stray less from the sweets and the candies and the sugary things. So that's where I think some of these more health conscious brands that Kellogg's has could lean well in there. Similarly, your lower income or middle income households, they're a little more value orientated. And so, but the brand matters. And so I think they're able to capitate the households in both of those demographics by diversifying their portfolio of products. So I think it's a geographic market expansion play, but it's absolutely a portfolio diversification. And I think they were very intentional about pursuing Kellogg's specifically to your point.
So I know you mentioned the Kashi brand as people are being more health conscious, and this is going to become a health conscious question about some of these staples overall. I mean, they also have Pringles, which I love to eat Pringles, and Cheez-Its. I love to eat Cheez-Its. When you go to your registered dietitian, they don't necessarily recommend those. They're really not a food group. So at this point now, while America seems to be on this kick of less sugar and a little healthier, what about all the names? You have Nestle, Kraft Heinz, James Smucker, Conagra, General Mills, Kellogg. They're all going to see fewer sales because America's trending more to protein and vegetables.
Well, I think there is definitely some truth to that, and you can see it in all of those organizations that you just mentioned have been going on an acquisition spree. They've all been buying, and they're all diversifying their product portfolio. I think the one thing you notice is that these foods are shelf stable, and so right, wrong, or indifferent. While they may or may not be the most nutritional, it is the snack that a lot of folks often reach for. They are able to sit in your kid's lunch without going bad. The power is out and you don't have access to fresh foods. Those are always there. They've been these types of snacks have been around for some time. There is as I mentioned, higher income households, I think, have more of a health focus, as the cost of healthier foods obviously is much higher. And so I think the Cheez-Its and the Pringles and the cereals of the world are going to continue to have significant demand. And that's what these companies are banking on. And that's why you're seeing them buy, and diversify their portfolio with these types of snacks and products. I think you're also going to see a lot of investing in healthier alternatives too. I think they want to have a vertically integrated portfolio of all these different types of snacks to be able to offer globally, because you also have to look at your global markets will have different tastes when you look at international focus.
People, there's no doubt we're all supposed to be cutting with less sugar and less carbs, but that doesn't mean anything. You have the right to eat whatever you want, and and so people love to have all of these yummy foods, and that's where it all comes in. Thur bought that ice cream company way back. They've been making acquisitions and getting bigger and bigger, so they have a variety of things to put out there. What about the price point? And pricing power, is that an important part of the story? I mean, how much can you really raise the prices? I mean, to buy ice cream, here in New York City, if you want to try ice cream, it's all Oreos, which are locked too. Because you can't get anything. But price, I'm sure ice cream's very expensive, I think.
Mm-hmm. Yeah, I mean, I think what you're seeing is between the tariff pressure, rising interest rates, the cost of inflation, the cost of everything has gone up significantly. So buying a pint of ice cream, and especially a niche private label, well, it's not private anymore, but Halo, top is more truly more discretionary perhaps than Bluebell, who they also acquired, right? And so the way they look at it is they have both types, both price points to meet the different consumer demand depending on whether they're a higher, middle, or lower income household. So they want to be able to have as much breadth and capitation of the consumer wallet that they can get. And the only way to do that is by having a widely diversified product portfolio that really attracts all of the different tastes, to your point. And we have started to see some food price de-escalation. I think as the year goes on, and if we continue to see interest rates go down and some of this tariff noise start to settle, or at the very least an ability to navigate through the changing tariff landscape and having it be more the norm than perhaps it was at the first half of the year, I think it's going to give consumers more relief from a pricing perspective, and I think prices will come down. And I mean, food and beverage is a low margin business, so it really is about volume. So hence, M&A is a way for these organizations to buy. Kellogg being a really good example of that, of buying more volume, buying more market share, buying more geography, and being able to grow the business in an environment where margins and pricing is going to be tight. So instead of going deep with higher prices, they're going to go broad with a wide variety of products in their portfolio. And I think that's the trend you're seeing, and I think you're going to continue to see it throughout the year.
Thank you so much. Wonderful to see you. We covered a lot in these food group and staples and such. Dana Jalbert, thank you very much. Still ahead, we're going to be talking to our next guest, Larry Tintorelli. He has a bullish market outlook, several stock picks you're going to want to hear all about, and his preview of what the Fed meeting will be for the end of the month. Let's get that too. We'll be right back.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
A fresh take on the hottest trends in the market, from every click to every tick.
With no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only on Schwab Network.
Welcome back to the watch list. I'm Nicole Petalidis. We're looking at a market.
All right, market's fading a bit. BNC pivots. It's 2:40. Wow, the day has really passed fast.
Thank you so much for being with us. I was just saying, the NASDAQ is hitting some highs. Do you foresee more highs between now and the end of the year?
I do. These are very bullish trends right now. One of the strongest buy signals that we can get is new all-time highs. That indicates no overhead resistance. So there's no sellers over top looking to sell into those prices. So it's a very strong thing right now.
So nobody's selling and taking a profit?
Well, I don't want to say nobody's selling, but what
Yeah.
happens is when you have stocks that are way down.
Come on, Nicole, get with it.
I think this also makes a point that it's almost like nowhere else could Apple have actually done this. I mean, China was just this unique market where they could, like you said, build 8-lane highways and mobilize an entire world.
And if Tim was sitting here right now, he would literally say the same thing.
Yeah, I understand the decision making went into that. What I'm curious about is what do they do about it now? Do they just say this is what it is, for better or for worse? But now it's become a whole geopolitical thing. So who's going to make those decisions?
All right, Tesla making new highs soon.
Also, I would encourage investors to remember when you're vertically integrated like Apple is, you can't afford to just fail fast and try stuff out and sweep it across your entire product line. You really have to take the time to get it right because it's not just the software that you're putting on there. You're tuning the chip designs to that and the phone features and the camera features and all of that.
This is not Elon Musk turning Grok into Mecha Hitler. No. This is something totally different.
Steve Kovac, we're going to see a lot more on this today, including on overtime later in the day.
Meantime, let's get over to Pippa Stevens now for the CNBC News update.
After a second straight night of Russian drone attacks on Kyiv, Ukrainian President Volodymyr Zelensky said today at a meeting in Rome that he's received what he calls all the necessary political signals for U.S. military aid to resume after what he described as constructive talks with President Trump. His comments come after the latest shipment was temporarily paused last week in a surprise move by the Pentagon that caught many in Washington off guard. Ford is recalling 850,000 vehicles from model years 2021 to 2023 due to issues with the
Tesla at the high of the day.
Regulators say low-pressure fuel pumps could fail, increasing the risk the engine will stall. The recall impacts Broncos, Mustangs, and F-Series trucks, as well as the Lincoln Aviator and Navigator. And the first ever Birkin bag just sold at auction in Paris for $8.2 million. According to Sotheby's, that crushed the previous $500,000 record for a handbag. The original Birkin from Hermes is named after and made for the French actress, singer, and fashion icon Jane Birkin. Wow, Kelly, $8.2 million. That is insane.
The Birkin bag Yes. Thank you very much. Coming up, North Carolina takes the crown as this year's top state for business, but it was a pretty tight competition, apparently. Scott Coe will be here to discuss. And as we head to break, the CNBC Small Business Playbook virtual event on Wednesday, August 6th at 2 p.m. Come on. You'll get essential strategies for entrepreneurs to adapt, grow, and thrive in today's economy. Register for free just by scanning that QR code or head over to cnbcevents.com/.
All right, Broadcom's starting to turn now. Broadcom. Let's see what the hedging flows look like on Broadcom. Tesla's still rising. Hedging flows still rising on Tesla.
Crypto.com is America's premier crypto platform.
Tesla hedging flows continue to rise. Okay. Looks like buyers. Base on base pattern. Looking good. All right. Google pulling back in a little bit. Google pulling back in. Tesla hedging flows continue to rise. Larry Teddarelli is on Schwab.
Would run up to 200, go back down, run up, go back down. Now that it's broken through, I think we're looking for more new highs.
Yeah, understood. There's more. You have RTX, which is a great deal.
Yeah.
Tell me about RTX.
Very bullish in defense. They're a key player in the Golden Dome missile defense system. They've got bullish tailwinds from the White House. Very, very strong chart. And really global defense, whether it's in the U.S. or in Europe, global defense is very strong.
Yeah, aerospace and defense. So a lot of those names, a lot of people have been getting into those. They like some of the names abroad too, but doing the same thing in aerospace and defense.
Europe defense, yeah.
Right?
The European defense sector has been
Okay, futures.
stocks like BAE Systems,
Right.
Rolls-Royce.
All right, futures pulling back now.
And what's the final thought here? I mean, if you
Okay, futures and S&P hedging flows. Okay, we're starting to taper off a little bit.
We've been 100% invested probably for the past few weeks or so. This is the type of market environment that maybe I hold 2% cash would be on the high end. But as long as these trends remain as strong as they are, you've got rising 10-week moving average, rising 40-week moving average. You've got breakouts in all sectors. If you think about it, we've talked about defense, tech, nuclear. Yeah, I would look to continue to add.
Beautiful day on S&P as well. Tesla, S&P cash. Okay, just off the highs of the session, S&P cash. Looking for this to fade a bit.
That's a very, debatable topic. But right now, from the Fed's position, if the labor market is strong, which it is, and inflation's above target, which it is, why would they cut you?
Larry Teddarelli, Chief Technical Strategist, Blue Daily Trend Report. Thank you so much for being with us. Great to see you. Thank you. Our panel is ready to talk all about the economy and inflation in particular.
Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Thursday the 10th. Pretty decent week again. After 2 weeks higher, We're pushing up against resistance 6,300.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live.
There goes Tesla.
Schwab.com/coaching. Start learning today.
There goes Tesla. Big pop on Tesla going.
I have a question for you.
Brandon had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me. And
Tesla's still going.
she was with me.
Okay, looks like we could get up to, good back up to the 200-day pretty soon.
Someday it'll be their turn.
Tesla following through.
Portfolio manager at Argent Capital Management. Thank you both for being with us. So, Eric, some of your thoughts. Are you concerned about inflation moving higher? Gasoline?
That was some Tesla getting sold into strength.
Consensus is expecting 2.6 this month. We are definitely going to see pressure on gasoline. It's pretty easy to forecast gasoline once the month ends, and so we'll see at least a 1 point increase. So I would expect the headline to come to 2.5 just with the cycling and gasoline impact. There also looks like there's some headwinds in airline fares, which could bump it up a little bit more. But outside of that, I'm not too concerned. The 2.6 number seems pretty reasonable to me. Tariffs actually have a very, very small, the items that would be impacted logically by tariffs have a very, very small weight. I estimated somewhere between 12 and 17, 18% within CPI. So we're still kind of like looking at some tailwinds in the shelter kind of going forward. So overall,
Tesla ripping higher.
we're looking at a little bit higher numbers going into the end of the year because of gasoline, but nothing extreme.
Let's see, Jeff. What do you think? Has the Fed's been
Looking good, Tesla.
one cut, three cut, whatever. You have a mixture of folks voting for cuts and some that want to be in this wait and see line. Where do you think the Fed may go with this?
I expect them to hang tight where they are for the time being. It seems like inflation is just kind of pesky at the the recent levels it's been, the 2.5-ish that Eric was talking about. Costco this morning reported their monthly results for the second consecutive month. Their average ticket increase year over year accelerated. I think it's up to 2.7 or 2.8% now year over year. So we just remain at this kind of pesky, higher than they'd like level, which makes cutting interest rates harder to justify.
Tesla's still pushing. Flows are still very bullish. Tesla flows. Tesla flows still very bullish.
Yeah, I think there are kind of sticky high items, that impact the average, and others that maybe are exerting some, more downward pressure here recently. But the overall picture seems to be consistent in that 2.5-ish range. And absent change there, I don't really see justification for cuts, despite Trump's repeated badgering about it.
What do you think about the auto insurance and shelter act?
Yeah. So, I actually looked at shelter going forward, and we're coming off that massive run up in 2023, 2022, and we're still cycling off. So it's not going to help this month that much just because of an odd cycling issue from the prior year. But when I look forward over the next, call it 6 months, if we keep getting these sequential numbers, which are in like the 20 basis point area, we're going to get another 0.3 points that are going to come off inflation. So we actually have a tailwind to core inflation because of that. I do expect that to be offset by gasoline, but who knows what happens to gasoline prices going forward. But if they stay range bound like they have, then that could offset. But I don't think there could be downward pressure to core. Again, like putting aside what can go on with tariffs, but the CPI weight is, I'm sorry, the housing weight is so large, again, it's like almost 40%, that tariffs really have to rear their ugly head in order to offset what I see as coming down on the shoulder side.
We still have a relatively tight labor market, Jen. Where is that?
Yeah, seems to me like the labor environment might be weakening a hair on the edges, but not to an extent that would cause great concern. So,
All right, looking good. Continue to move higher.
and if you made me bet, I would take the under on 2 cuts before you.
Yeah, or CPI year over year, 2.8%.
That's 1.14 billion. 1.15 billion.
In the federal market committee minutes yesterday, they talked about GDP rising, inflation coming down, and unemployment actually is a better picture than what they were thinking. It seems. I mean, we just got the jobless claim. Your final thoughts?
Yeah, I mean, I think that, the labor market, in my view, is weakening substantially. But you have to really look underneath the data. Unemployment came down because the denominator came down. The workforce participation. You're seeing, a tremendous amount of strength in the last payroll number within healthcare. The day before the government number came out, ADP showed that healthcare declined by about 50,000 jobs. So we're getting conflicting data at this stage, and then the rest of the strength within the payroll.
Okay, goes Microsoft going again. Microsoft about to lift again. Apple looks like it's going to go.
Which is K through 12 public school teachers, public universities, which are being impacted by wage funding cuts.
Okay, we can get Netflix to turn. That would be awesome.
Besides healthcare and government, I'm just not seeing it.
Okay, we got an hour and 5 minutes to go. An hour and 5 minutes to go.
Sort of on the brink of a terrible turn. They're the glass half full folks and those naysayers, black swan event types. Jen, what do you say to those folks?
I remain optimistic. We're going to learn a lot here over the next few weeks during earnings season. There's a lot of talk about, AI leading to job losses, but thus far I haven't seen a whole lot of that. I take Eric's comments about the sources of employment growth coming from like non-cyclical sectors, but that doesn't necessarily mean that there's great weakness amongst the cyclical sectors. It's just flat, and that stability, that lack of real deterioration, I think leaves you feeling, not great, but the economy's growing slowly.
Are not showing inflation.
Dealer hedge flows continue to move higher. Tesla.
Yeah, no, that's been a relatively bright spot. So, and it's not, there is like a relatively big, but at the end of the day, I mean, what gives me concern, and this is going to take a long time to play out, is in the one big beautiful bill, we finally are trying to start raising healthcare costs. And I think there are good intentions there, and it obviously was very necessary because of the tax cuts. But the issue is that this is unprecedented. The entire just straight up and to the right growth that we've seen within healthcare jobs, it's never been challenged by $1 trillion of cuts to Medicaid. So we're entering into uncharted territory on what could happen to the job market if we kneecap the biggest growth driver of the job market over the past 30, 40. I even just look back to 1939, all the way back to then, healthcare has been, just straight up and to the right. So it's a big question mark.
All right, great to see you both, Eric and Jed. Thank you, Eric Putman, Jed Eller, Brooke. Thank you. And of course, we're watching this next week right here on Schwab Network, so don't miss that. You can download our app for free in the Apple App Store. tune in 24/7 for SchwabNetwork.com. I'm Nicole Pavlidis, watching for records at the closing bell, so keep it here on Schwab Network. Market on close is next.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account. Plus,
Tesla's
cash
still
management
ripping
solutions,
higher.
all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds.
There's some limit orders going off there.
With Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward
Find the next trend.
from every click to every tick.
There's no fear of missing out on next trend investment.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. Tea Bags Coffee, I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on Schwab Network.
What's Uber doing? Uber just trending. Tesla's still going. Okay, Broadcom's starting to turn now.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus.
Broadcom
Robust charting and analysis.
trading at highs. Just rising. Broadcom just keeps rising. Broadcom. Off the low, continues higher. Tesla's still going. Tesla. ABCD pattern on Tesla. Coinbase going some more.
It's 3 p.m. on Wall Street. This is Market on Close. I'm Marley Caden. With an hour left in the trading day, let's take a look at where the markets stand right now. The S&P touched an intraday high today. We are up at 62.83.42, up 0.3% right now. It's below the flat line at 22,849.60. The Dow up 0.5% right now, 44,697.85, and the Russell up 0.7%. 22.68.52. As we take a look, we've got some green here. Only oils are down on the day. The dollar is 97.32. Gold up 0.3% at 33.30.50. Crude oil trading down more than 2% right now at 66.82 a barrel. And Bitcoin hit a record high now, a new record high even since last I looked at $114,015. That's up more than 1.5% on the day. Couple of our big stories there with those all-time highs, but that is not it for the day. So let's take a
Coinbase breaking out of a squeeze.
on the day. Joining us now to help me do that is Jenny Horn. do have some next gen stocks on here. Quite a few tech ones to talk about today. Let's kick things off with AMD. They got a pretty decent upgrade today.
They did, and actually, a name that is seeing the most favorable reaction to this upgrade. So I think that the price warrants. I mean, some of the upside from the
Coinbase continues.
Here, HSBC upgrading shares to buy from hold, saying AMD is back in the AI game, highlighting that initially back in January they actually downgraded shares, but now as a result of their GPU roadmap, they did highlight less competition, but they are now believers in at least upside to fiscal 2026 estimated AI revenue.
Coinbase still going.
Forecast now to be about $15 billion, which is a whopping 57% above consensus, which sits below 10 billion. So this is, in their opinion, driven by a higher than expected pricing premium following the recent N1350 series launch. AMD still has a lot of fans. I mean, there's 36 analysts that do have buy leaning ratings. There's 15 holds. Not a single outperform, but there is one lone sell. And amazingly so, the average price target right now is 134. So that would actually imply downside from where we are currently trading. But I do think it's funny the way that they say back in the AI game, because I don't know if they ever left. It just hasn't really resonated with the street.
I agree with you there when you said that. I know it's a quote right out of the note to say they're back. I knew they had the downgrade in January, but what an abrupt turnaround in a 6-month period that they've raised their price target. You know, as I look at their $200 target, this is a 31 times multiple of what they're estimating their EPS for next year is. So, I mean, it's a pretty substantial upside they're viewing, and they're so far above the consensus. You know, their revenue estimates for AI are 57% above the consensus.
All right, Tesla. Tesla's still shooting higher.
Bull territory. Yeah, and I think that is right now. It's like you see the mass repricing from the sell side on a lot of these chip names, where we perhaps had gotten too pessimistic, or we've seen that frankly AMD hasn't had the performance to match upside though. So I think that rightfully so, re-ratings were definitely moved to the downside, and now it's like the game of catch up, where I'll be curious to see if that average starts to inch up. But AMD also still 37% off its all-time highs, which were made back early in 2024. I think perfect.
MP, nice move there.
A early winner of the AI cycle, but it's yet to really continue to unveil a new series of architecture and chips. So it's not like it's stopped, providing business in AI. It just hasn't really been read as a clear threat, obviously, to NVIDIA.
Oh, certainly not. And we do need to talk about Palantir. Obviously, Dan Ives put out a note while we're on our AI story, although surprisingly not the same response. AMD up more than 3.5% right now. As I look at Palantir, they're down 0.5%. And this was an extremely bullish note that he gave out.
It was. So now Dan Ives gives a $160 price target, which is a street high amongst all analysts that cover Palantir, and represents about 12% upside from where we closed yesterday. He posted on X initially expressing this growing confidence, though, in their AI strategy, describing it as the company's golden path to becoming an AI stalwart over the next 12 months. The bullish outlook, though, comes as right now many are trying to leverage their AI platform or AIP to integrate data decisions as well as operations for clients, which has helped drive
Coinbase still going. Wow. That's ripping there, Coinbase.
I do think it's important to note that they've been hugely beneficiary of some of these defense spending, even as right now there's a lot of uncertainties regarding the strategy of our government spending. There's still, right now, U.S. lawmakers calling for about a 12% increase in the defense budgets, specifically here in the U.S. Palantir has been partnering with Blue Force Alliance to digitize and accelerate its U.S. warship production for the Navy. Also has been negotiating to provide technology for the IRS, Social Security, so strengthening its government footprint. And so again, I know that's always a looming risk, is what happens if we see an evolution of government spending. But so far, under the Trump administration, since his operation, Palantir secured $113 million in contracts, excluding.
Let's take a look at junk bonds. J&K junk. Okay, nice bounce. Need to trend a bit more. High yield corporate debt, very strong. Trending. Let's look at advanced decline percent. Okay, everybody's turning up. NASDAQ taking a little bit of a break. Google, we got a B pivot on Google. Highs minus lows, new highs minus new lows. Advanced decline continues to climb. Okay, looking good. Blue elder sticks, looking for a pause. 6,300 major level on S&P 500, 6,300. Okay, trending, looking good. Tesla still going. Really nothing I want to buy at the moment. Really nothing I want to buy. It's been a pretty good day, so I don't want to chase anything at this point. Don't want to chase. There's always tomorrow. Okay, S&P might actually get going here. Watch the S&P. S&P hedge flows might turn up. Look at the hedging flows.
I mean, it's good points that Steve brings up. I mean, there are things that have been out of Tim Cook's control. It's like he got hit with a fastball from the president in terms of the tariffs and the impact that it
Oh, boo-hoo. I got nothing else to talk about. He's the CEO of one of the largest companies out there. I'm sure he's got thick skin. Oh, Dan Ives is on. Okay. I love that green jacket, Dan Ives.
So as the Mickey Mantle of tech, it's about the consumer AI revolution. Steve hits on it. We'll go through Cupertino, but now is the time to make sure you don't let the biggest monetization opportunity that we've seen in 40, 50 years, the fourth industrial revolution. Cupertino doesn't look at that from the outside in.
Okay, here we go. S&P is starting to turn back up.
This is going to be a big change here. We're going to see a deal soon.
All right, thanks for being here. It's an interesting story. It's certainly gotten a lot of talk.
Flows have been super bullish.
On this network. It's Dan Ives and Steve Kovac. Thanks to you as well. Let's bring in a shareholder now, Malcolm Etheridge. What are your thoughts on what Walt Piecyk had to say on CNBC?
Hedge flows continue to ramp up.
I'm in alignment with Ives on this one. I think that
Hedge flows continue to ramp up.
Maybe it is time after a decade to talk about who's going to be next up.
Are you bipolar or something?
With a CFO departing last year, a COO now stepping down this year, you can't just dismantle the executive ranks of an organization this large.
Okay, S&P looking good.
I think realistically, for me as a shareholder, letting go of Tim Cook here would be tantamount. Would be really good reason for me to be selling the stock. I think a lot of others would be in the same camp because it's just too much disruption all at once for a company that we've already acknowledged is significantly behind where the wave seems to be going and really needs to be doing something to catch up.
So what is that something? If Walter says that they need disruptive change, more of it,
What is that? Is that an acquisition, the likes of which they haven't been comfortable doing in the past? That's disruptive. That is being disruptive to what you're normally used to doing.
I don't even think it's singular acquisition. I think it's several. I think that the reason I say that, I know Perplexity is the one that everyone's floating right now.
Yes, can I help you, miss?
To replace Siri and be able to come into that Apple ecosystem and immediately make the search conversation a lot more clear. But I think that realistically, not only does Apple need to be acquiring its way into having an AI solution to ChatGPT and Anthropic and everyone else, It also has the acqui-hire designers who are capable of figuring out what's the next wave going to look like. Because as we've heard from several smart brains in Silicon Valley already, the next generation of AI tools is not going to be a device that's in our pocket. It's not going to be a handheld or anything that sits on our desk. It'll be some other kind of wearable. And so figuring out how to bring in the talent capable of driving that conversation is really going to be important for Apple as well. And so I don't think that just one acquisition is going to make it. But at a time when their best mind in AI is already being stolen away, it's really time to put that capital to work. And not
Okay, Coinbase is gone.
their way into growth with $100 billion buyback and thinking that that's going to be the thing that keeps people willing to pay 30 times next year's earnings. How long are you willing to wait? Yeah,
Coinbase is gone. Look at Coinbase. Look at the flow in Coinbase. The flow in Coinbase is crazy. Look at that flow. Still climbing. Something's off right there. It's just dropped back down. Look at the flow, the orange line all the way up from left to right, up and to the right. S&P 500.
Negative things to say about Apple outwardly. The price target, the consensus price target last I checked was somewhere around 230. So there really isn't a lot of motion happening. There's not a lot of people putting their money where their mouth is, so to speak. It's just us bemoaning out loud that we really wish this company would get it together.
It's interesting the way you talk about the scarcity of talent. Was Mickey Mantle Joe DiMaggio? No, he was not. Was Mickey Mantle still Mickey Mantle in the Hall of Fame? Oh, yes, he was. Malcolm, thanks. We'll see you soon. Malcolm Etheridge. Tech, speaking of, hitting another new high today as the market looks to extend its record run. Let's welcome in Dan Greenhouse. He's chief strategist for Solus Alternative Asset Management. It's good to have you on. This tech trade just doesn't feel like it's going to let up anytime soon for longer than a minute. I mean, the minute it does, it just picks right up again.
The question I think Jason's touched on this and I have touched on, like, why would it let up? And again, tech isn't what I specialize in for the millionth time. But the story remains in place. The CapEx spend remains in place. The demand remains in place. Now you've got VO3 videos all over the internet. There's just no reason, I think, for investors in this space to feel that the narrative that has been in place for 2 or 3 years now is challenged really at all.
If you watched the halftime show, but you obviously did since you're quoting from it, Josh Brown made the argument as well that people are making too much of this idea that this record-setting rally is too concentrated and largely concentrated in large cap tech. Now it's been in large cap stocks, generally speaking. What about that notion? Do you agree with him?
Yeah, well, listen, I think that there's 2 answers to the question. First is, I was someone who thought that the rally would diversify, so to speak, but the strength of the AI story has been such that the names in the space and the ancillary or secondary names, if you will, they're so big relative to the rest of the market. Mathematically, they're going to do most of the heavy lifting. That said, look at a chart of BlackRock or State Street.
Well, that's what I'm saying. It has diversified.
Yes.
I mean, industrials I think industrials hit another record high today.
I think industrials are leading.
Financials have been trading at a record high, but it's been a big stock rally.
Well, it's been a big stock rally across sectors in general. There's that. But I would also say, listen, the S&P is now, we're just shy of 6,300. We're up, the index is up almost 7% for the year. 6 sectors are beating the market year to date. 5 sectors are trailing. Only 2 are down, as we know, healthcare and energy. So that's pretty diverse. 6 sectors up, 5 sectors down. But on the individual name basis, you'd like to see roughly 250 names up, 250 names beating the index, 250 names trailing the index. You're a little short of that.
Okay, Netflix is starting to turn a little bit.
I would echo to some degree, assuming I heard what he said, and I was eating lunch when he was talking. So
Seeing a little bit of short covering in Netflix.
there is too much being made of, it's not.
S&P 500.
You and I are the same age. There are, well, I think I'm a little older than you, where you moisturize much better than I. But for the entirety of our,
I like where you were going with it when you you started. So just
I'm a youthful 30 you are. So for our entire careers, people have been lamenting the stock market's too expensive, too concentrated. Remember the nothing but Apple, the NBA market. There's been so many narratives that argue the market couldn't go higher, and here we are, 13% annualized, 15% annualized for a decade now, and all of those narratives have fallen by the wayside. So to that point, I just think the market is too concentrated is the latest in a long iteration of arguments against rally.
we're about to enter earnings season. Are we going to come out of earnings season almost justifying why the market has been so concentrated? And I could say that from both the tech and financials and the caterpillars of the world too.
But how concentrated could the market be if you just listed three separate sectors as being leaders: industrials, financials, and technology, if you will? Staples, actually, by the way.
I mean, again, if you pulled up the market caps of the entire S&P 500, you would see an extraordinarily divergent move. I think
S&P wants to go.
market cap stocks versus the smaller ones within that cohort.
Sure, but
Tesla, little fade at the high. Tesla, profit taking on Tesla. S&P turning back up.
that would be great. But that's not going to happen.
We're going to steal some market cap. We'll take some market cap from NVIDIA and we'll distribute it
From
down
each,
the cap space.
from each according to their market cap. But now we're completely sidetracked. But listen, I disagree. Those big names have higher growth rates. They're larger.
Snowflake dragging its feet. Snowflake. The other 9, the other 8, really 7. The other 7 New York Fan components look okay. Apple, Amazon off the high. Google trying to push back up to the highs. Microsoft, NVIDIA, Tesla. And we got Netflix trying to turn the corner right now. Netflix.
In and of itself. Now, when Jamie Dimon said something, people are like, oh, he says this and whatever. Not much of what he says has come to fruition. It doesn't matter. He raises a good point.
Yeah.
And by the way, I mean, you should listen to what somebody like Jamie Dimon says when he talks about yields.
Jamie Dimon has access to information I don't. I would concede that as the CEO of the best bank in the country, the best run bank. Are people complacent? Probably right now in the short term. As someone who has been relatively bullish on the tariff story over the last couple of months, I think you are now
S&P consolidating. Bollinger Bands are contracting as we head into the close. We got 40 minutes to go. 40 minutes to go. It's been a hell of a day.
In the meantime, you've got the sectoral tariffs, the 232s, the 301s, etc. It might get a little choppy here in the short term, but to your point about earnings season, Delta this morning, obviously, you mentioned the.
All right, let's see if we can't get the S&P to rally here. S&P starting to tick higher.
But nothing to sneeze at. I've heard nothing this morning on Squawk Box. Someone from the Bank of America Institute talking about the credit card data was on, arguing that the consumer, from a credit card standpoint, nothing is meaningfully different. So
Did you do any work today? Just watch CNBC all day.
this is like at 6 in the morning. And by the way, I'm trying to drive.
NVIDIA trying to push higher.
Thank you. No, we appreciate you. What about the Fed? Is the Fed going to
I have an intern watching all day.
cut rates this year? How many times?
I think you should probably expect 2 cuts this year. I mean, I get why Jamie Dimon is arguing what he's arguing, and far be it for me to argue with him. But my expectation is you're going to get 2 cuts this year. By the fall, assuming the tariff data bleeds through the way that I think it will, and always have thought it will, I don't think that's going to be a sufficient impediment to getting a cut in the fall. And then once you have cut once, you're probably going to want to cut again this year to get it out of the way. And then sometime early next year, you will have the prospect of a new Fed chair, eventually a new Fed chair.
That's me taking a little profits off of NVIDIA.
On down have basically made the case for lower interest rates. And so I think a new Fed chair is going to come in. There's probably enough.
I still have 18 July next week's 165 calls.
Let's just set the
NVIDIA.
100 basis points of reductions between now and the summer of next year.
And that's enough. You don't want any more than that because then that would maybe signal that something was wrong. They had to do it.
I don't think you need more than that. I think you could probably argue. My original argument was you might get stuck at 4.5, and I think obviously we have been stuck at 4.5.
Now,
All right, looking for some dealers to close their books soon.
remember, again, I know Tom Lee was on here making the same argument I've made for some time. Tariffs are a tax, they're not inflation.
Tesla making new highs. Tesla making new highs.
He's super bullish. Tom Lee is super bullish.
But I mean, there are people who are throwing out like 7,000 is realistic.
My price target is
I know, but there was a note out today where someone was talking about 5 to 10% more.
10% more is 7,000.
10% more, 7,000.
Yeah.
Or less.
And by the way, I only asked that because I did not watch the Tom Lee interview, despite your assumption that I'm watching CNBC all day. Listen, if I had my way, I'd be on air all day. But anyway,
believe me, we know.
The viewers demand it. But
believe me,
10% is not. Is that out of the realm of possibility? I mean, again, we're up 7% for the year. If by the spring of next year you're up 10% from current levels, is that a particularly shocking amount of gains, especially when you have way into the double-digit growth rates for the largest names?
But the Nasdaq's up 40
yes
percent since the April low. I mean, it has been the V-est of V-shaped recoveries that we've ever seen.
And the S&P is up called 35-40% year over year, which is a extended level of
Hedge flows flattening out now.
Followed by a slowdown in appreciation. And last time I checked, 10% appreciation was slower than 30% appreciation.
There's your V-shaped recovery right there.
Yeah, it's been a heck of a rally
in 3 months.
It's been a heck of a rally. To John's point earlier, probably not as broad as you would like, but sufficiently strong.
Netflix trying to turn. Netflix.
Anecdote that I always use, which is when my mom gets her Charles Schwab account and she opens it up and sees that her net worth or her investment account went up 10% this quarter, she doesn't call me up and go, how much of that is concentrated in the mag set? Yeah. She doesn't care. The spiders are up, and for many, 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 many Americans, that's a determining factor.
We'll leave it there. I'll let you run. Get back in front of your television set. We'll see you soon. Let's stay in Greenhouse from Solus once again. Christina Partsinevelos joins us now for a look at the biggest names moving into the close. Christina.
All right, Amazon fading a bit.
But even if there was a travel slowdown through the first half of the year, Delta management doesn't appear worried. The airline is confident.
Broadcom trying to turn. Broadcom's trying to turn into the close.
CEO and Bastion Tully are full of hope that he's seeing more clarity in corporate travel. High-priced seats were also boom. Premium revenue grew 5% year over year. That's why you're seeing Delta shares up almost 12%. And because of that confidence in the near term, those results really boosting other domestic carriers. United, American, Southwest, all on your screen. United up almost 15%, just on these strong words coming from one leader. Scott?
All right, Christina, thank you very much. Christina Partsinevelos. We're just getting started. Up next, Bitcoin bouncing to a fresh record high. We discuss how.
Okay, Meta turning back up. Meta. Little short covering into the close. Little short covering into the close. Meta turning again. Trading at 720, 725. Meta turning. Meta looking good. Okay, we got 34 minutes to go. 34 minutes to go for the regular session. 34 minutes to go. Okay, Tesla having a good run. Starting to see some profit taking off of that low of the day. Tesla. Okay, there goes SoFi. SoFi turning up. SoFi looks like it wants to run. Okay, SoFi, need to see that run up a bit more. Coinbase, geez. Coinbase, not unlike yesterday, we had a big run up in Coinbase. Big move there. Let's see what's Apple doing. Apple. Okay. Bitcoin. BTC. USD. Bitcoin. BTC Bitcoin. Big move on Bitcoin. Just below 114. Okay, Netflix is starting to turn. Netflix short starting to cover. Okay, S&P flow. S&P flow hedging starting to taper off. Starting to taper off.
We're back. Calamos Investments ringing the closing bell today in honor of its new fund offerings, one of which says it offers investors 100% downside.
Okay, Meta turning up now. Meta.
Good to see you.
Good to see you, Scott.
Congratulations, you're ringing the bell today, which is always a great honor.
Okay, Meta turn in the corner.
Let's start on the Bitcoin thing. 100% downside protected Bitcoin. How does that work?
Yeah, so we're really proud of the team at Calamos. We've been able to make the first 100% protected Bitcoin. And the way it works is if you buy the Bitcoin,
Meta's starting to go right now.
you get a percent of the cap rate. So if Bitcoin goes up, like the last one we do in this series, we had one come out just last week, and you get 10% of the upside. And if it falls to negative territory, Scott, you're fine as long as you keep it for the year and it rolls over. And it's been really, really hot. We've also adjusted. We've done 90% protected, where you get north of 24%. You get 80% protected, and those are in the low 40s percent of the upside. So it's a great way for people, some of the older people that are afraid of the volatility. But Bitcoin has been the number one performing asset.
That's some sell orders. That's some sell orders.
Probably been one of the most volatile too.
It's also been one of those. So that's why we invented this product, so to bring to market for people that don't.
Everybody's talking about replacing Cook now. I agree with the one guy that was on a few minutes ago. Bad time to replace Cook. All he needs to do is talk about Perplexity or some other company acquiring for AI. Meta. Okay, Meta. Okay, Meta trying to push a bit higher.
You see this administration really being advocates of it. I think this is a good entry point, an on-ramp for people that are a little bit less risk averse. At Calamos, we're risk managers. We've been doing this for close to 50 years, and this is just another type of product that we're launching. We did S&P, NASDAQ, Russell in a similar manner. And then when legislation was approved, we were able to do Bitcoin.
You also launched.
We got 29 minutes to go. 29 minutes to go.
First ever auto callable product. Well, I'm not embarrassed to tell you, I've never heard of that before I was preparing for this segment. What is that? An auto callable product? What do our viewers and your potential investors in it need to know?
All right. So the auto callable product is. It's part of the structured product world.
SoFi turning up. SoFi catching a bid end of day.
Structured product world. And in the past, you had to have a minimum 250,000 buy-in, and we're launching the first ETF where you can do that. Now, what is this auto callable? It's JP Morgan is doing the swaps for us, so they're partnering us with the swaps.
And the cube is has done the index for us, which is very, very important part of the analysis. So what it is a product. Think of it as a bond that gives you a coupon. It pays out monthly. We launched it. It's 14.7%. You get is the coupon. So you're getting that on a monthly basis. And the only thing that you're worried about is if the market falls, the equity market falls more than 40%, then it might eat into some of your coupon and then possibly your principal, depending on when it strikes. But we diversify the product by having over 52 all auto callable notes. So every Friday, we match up and see if that Friday the market's above, a decline of 40%. It keeps going. And
it sounds like you're trying to, but you're also trying to, as you said at the top, you're trying to give access to certain types of products that typically weren't available to everyday investors, only the super high net worth.
This is the what they call democratization of products, right, Scott? And so we've done a lot of this at Calamos, and this is a lot of wealthy, really high net worth individuals, billionaires, use all callables in their portfolios, and they get charged a lot of money because they're structured notes to do this, points at a time, where us is just a few basis points. And it's what the advisors call the easy button. You don't have to issue all the time because we did it versus an index and a swap, and it's all contained in the CTF.
All right. Well, it's the first time we've ever talked about it on this program, so I'm glad we're educating our viewers and frankly educating me too.
Well, hopefully we'll be hearing a lot more about it.
Before I let you go real quick, because I know you got to do your thing. The market, do you like the market here at these record levels?
I do. I still like the market. I think there's room for upside. I think that earnings are good, but there's still a little bit more room in the earnings things. I think a lot of the bad stuff, potentially event risk, is gone outside of global war, which I'm hoping is not an issue.
Sure.
But the tax bills passed.
Okay, Microsoft making it back up to the highs. Microsoft.
The tariffs, that's been under control.
Meta pushing. SoFi is pushing as well. SoFi.
Really be, helping the market. We've got potential people, 7 trillion supposedly of assistance coming into the United States. So I'm really, really positive about the market.
We'll leave it there. You do your thing up there on the balcony.
What's Supermicro doing?
Here on Closing Bell. Up next, speaking of Fed,
UMAC on the move. UMAC.
he maps out his forecast for the Fed. When are they going to cut? When's the first one coming? We'll get his vote next.
Okay, looking good. S&P popping back up. Supermicro looking for a bounce. Maybe it runs after hours. It trades after hours, so. Okay, SoFi moving back up to the highs. There goes the S&P. S&P with 24 minutes to go in the regular session. S&P 500 coming back up.
Shares getting the boost today following some bullish commentary from Wall Street. And checking out some of today's top trending tickers on the side. Stick around, much more market domination.
S&P hedging flows just off the highs of the session. Supermicro with a bounce. Okay. All right, looking pretty good.
It's legal cannabis. It's just right to your door.
Shopping for tires used to really rub me the wrong way.
All right. Not a bad day. Not a bad day. Okay, Apple trying to get above this high. We don't seem to be able to get through Apple. S&P trying to push a bit higher. S&P.
Some people like doing things the hard way, like doing their finances with a spreadsheet instead of using QuickBooks. Where you post all your financial info together in one place and updates it automatically. How easy is that?
Facing the Federal Reserve. President Trump stands as he continues to hammer tariff economy too slow to lower rates. For more, let's bring in former Fed Governor Richard Thur. He's now global economic advisor at PIMCO. It's good to see you again. Welcome back. Good to be with you. Why shouldn't Fed Chair Powell listen to the president? Why shouldn't they cut at their first opportunity later this month?
President and each of us is entitled to express an opinion on the Fed. And I think it's really about listening. I think they're looking at the data, the community. There's a range of views from the June dots. We know that 7 folks would be happy.
I joined you, Mondo.
But 12 more, including the chair, think
Microsoft new high today.
so. I think there's a wait and see mode, and that will be at the July meeting.
I mean, it's not like the president is on an island by himself. Is the only one suggesting this. Governor Waller says the Fed can lower rates because the short-term rate is still pretty restrictive. So
Microsoft new high today. Microsoft.
I think Governor Waller and also Governor Bowman.
S&P trying to pop through this area. S&P.
Monetary policy rules, including the ones I've worked on, would indicate a somewhat lower level for the federal funds rate. So I think right now, and Chair Powell himself recently indicated that if they weren't really focused on the risky case of the tariffs, they might.
There goes S&P 500.
Some more information is the way I assess it.
But, so you agree that the Fed's too tight?
Well, I certainly agree that once they have a better sense of the way that the tariffs are going to work through the economy, that I think a case for cutting rates will be pretty clear.
All right, Tesla trying to make a new high here. Tesla. Meta starting to pop up.
Sure. Why not just do it? You know, you throw a little bone to the president and those who say, well, you should, including some on your own committee, like I said, Waller and Bowman, maybe.
Yeah.
So, you know, you deal with that, and then you see. You haven't heard
Okay, here goes the S&P 500. Starting to move into the close.
I'm here to talk about what I think what they will do, and I think that, you know, from what we've.
Here goes S&P 500 starting to charge higher.
The chair, I think they'll be open to it looks like it'll be in the fall.
How many do you think we'll get starting in the fall? Like you say, if you believe September would be the first one.
Yes, that would make sense. I think that, look, the dots have some value, and right now the dots are showing.
Okay, S&P pushing a bit higher.
I think that 2 cuts will be appropriate, and I think that's a good starting point. Again, policy is restrictive according to standard policy rules, and so I think that'll be the first thing they'll be looking at.
It's funny you say the dots have quote some value. There's some say now they have no value, and they shouldn't even be doing the outlook or the projections. Do you have a counter to that?
I think it is useful for any central bank to provide useful information on its intentions. The challenge with the dots in some cases is that
Apple
they don't provide particularly useful information.
back up to the highs. Apple, of course, headed for the 200-day. Looks like there goes SoFi.
Do think that it's likely that a cut will be appropriate. I think that's useful information to be into the markets. Yes.
Richard, we'll talk to you soon. I've got to go get some news that's breaking now. I'll see you soon. Richard Clarida. Once again, we do have some news out of Washington. Megan Casella has it for us. Megan.
Hey, Scott, I can report that NVIDIA CEO Jensen Huang is set to be at the White House this afternoon to meet with the president sometime. That's according to a person familiar. The White House officials not immediately responding to me for a request for comment. They also couldn't get details on exactly what the two men will be meeting about, or who requested the meeting, how it came about. But it does come just a few hours after the president tweeted or posted on Truth Social about NVIDIA today, saying NVIDIA is up 47% since Trump tariffs, among other things. So tariffs, export controls, business with China, and Huang's upcoming trip to China, a lot for the two men to talk about.
Okay, so Jensen Huang is going to be meeting with President Trump this evening. Here goes Meta. Meta popping here. Meta into the close. There goes Meta. Meta. Nice look to Meta in the day run. Meta. Nice look to it.
HPE also agreed today off the heels of recent Wall Street upgrades and closing of the company's deal with networks. This would, will say, attract a risk reward. They'll say strong networking portfolio, sovereign tailwinds. What do you say?
Yeah, I mean, I was also just at an HPE event a couple weeks ago as well, and heard their story. And bringing it back to what we were saying earlier, they were one of the first to talk about this notion of enterprise AI, right? Creating systems that they could sell into enterprises. And it's still early days, but they were developing software and solutions that they have these GUI-like services that they've been building up as a way to provide cloud-like capabilities, but for enterprises who want to run some of this stuff locally. And then the Juniper thing is huge because now that combined entity, if you take the Aruba wireless networking stuff that HPE have along with the Juniper stuff, you have a true Cisco competitor, right? And that's that's a big opportunity out there. It's not as sexy as a lot of other businesses, right? But at the end of the day, getting all these systems to talk to each other, within data centers, from data center to data center, all of these kind of things, the security that they're embedding into these systems, all of that is critical for enterprises. So there's a huge opportunity to build on that combination, and I think they're going to see them do that. I'll make it just
Okay, Meta's still pushing. Nice little pop. Meta.
Obviously, they're going to be positive about it, but I think genuinely they have a good reason to be with that. Finally, let's hit Tesla real quick. This is the news. The share price rise. They have promising announcements. The company will expand its robo-taxi service. Robo-taxis rolling out last month. The company's hometown will extend to San Francisco within
Meta looking good. NVIDIA looks like it can go.
Sure if we're all ready for chatbots and ours just yet, to be honest with you. But look, the other thing is, to be fair, I have never been a big believer in the idea that Tesla owners are going to want to let other people just kind of randomly become a car. Yeah, there will be some people who, but a lot of the people who can afford a Tesla are kind of want to have their own car and not have people potentially mess it up. I mean, there's just so many things about that whole business model that have struck me as strange for a long time. Yet, the market seems super excited about it. We'll see what happens. Obviously, there are still technical challenges that they have to overcome.
Number 15 from the bell back to Christina. The stock she's watching. Top of your list is what?
It's an interesting one. WK Kellogg shares soaring that Ferrero agreed to buy the cereal giant. Thur bought a $100 million deal. It's the latest acquisition for the privately owned coffee maker after Nestle's U.S. candy business and Hale & Todd Enterprises. Shares
Okay, we got 13 minutes to go.
Operational rare earth mine here in the United States. That's why it's such a big deal. 51%. Huge rumors.
All right, thank you. Still ahead, the SMH hitting a 52-week high. We'll tell you what's driving down some chips coming up. The hell's coming right back.
Okay, looking good. Okay, S&P just dropped off, a little profit taking. Okay, Meta pushing higher. All right, profit taking. Netflix didn't get any kind of traction. Maybe tomorrow. Okay, Broadcom back a bit. Okay, NVIDIA, little profit taking there. Okay, profit taking on a bunch of these New York FANG components. Okay, Bitcoin just hanging out just below the highs of the day.
Basically, he's saying that with more clarity in place with the trade deals coming here and there, the budget bill done, kind of when his customers are actually more sort of inclined to make purchases, and that leads to really good growth in the premium sector, which is going to your business travelers or higher end leisure travelers, see that business improve. You're seeing capacity improve because they're sort of focusing more on the premium buyers, but also international is doing better. 80% of the buyers are domestic people, domestic customers are internationally strong.
Low tick alert -800.
Okay, that low tech is just coming on profit taking from highs. Okay, XLY, XLP. XLY, XLP. Let me see. XLY, XLP. XLY, XLP. Okay, looking good. Looking good. Meta. Okay, looks like a little profit taking end of day, but it's been a really great day. I hope everyone has a good evening. I'm your host, Cousin Vinny, coming to you from theclosingprint.com with 6 minutes left to go. 6 minutes left to go for this Thursday, the 10th of July. Been a pretty profitable one. If you've been trading with us over the week and over the past 2 weeks, not including this one, been looking pretty good actually. So we've got breadth indicators turning up. We've got the XLY XLP ratio bullish. We've got momentum clearly bullish. We've got junk, biotechs higher. We've got Bitcoin higher, of course. Bitcoin, everybody knows about Bitcoin, unless you're living under a rock. Okay, day two. Actually, day one on the breakout. Day one on the breakout out of a base. So junk bonds, I don't want to buy it here in the day, but tomorrow we'll do some trades on Bitcoin. And looking for much higher. Looking for much higher on Bitcoin. Okay, this is a 6 to 7 week base breaking out. Biotechs look good. I just showed you biotechs. IWM is bullish. These are all risky assets.
Yeah, no doubt. The SMH you just talked about just hit an all-time high. It's on track for its 7th straight week of gains. Sure, Nvidia does get all the headlines for crossing the $4 trillion market cap. It's not just about one name. AMD is getting a big boost after HSBC doubled its price to $200, saying the company is back in the AI game. Analysts think its new AI chips could rival Nvidia's and even command a pricing premium. Meanwhile, Micron, you can see AMD starting to close or is going to close before to Deutsche Bank just upped its target to a buy, pointing to a surging demand for high memory, which is a critical piece for AI performance. After Micron is a major supplier, shares up 0.5%. And let's take a look at
Meta. Okay. Coming into the close, we got about 3 minutes to go. We got Nvidia popping up here. Jensen's going to meet with President Trump. I don't know. I just think Jensen has a really good argument that you know, Mr. President, I understand that you don't want to give China any kind of lead, but by not selling chips, they're going to find it somewhere else. So we want to be the lead in AI chips and whatever. So I think he has a good argument. Maybe they want to talk about the newest chip that they're making for China. Regardless, I wouldn't want to be short. I'd be long, but I'd be long with a measured approach. If you were thinking about Nvidia, I'd be long. I am long. I have some calls, but a measured approach meaning I know exactly how much I can lose. With a short, if this thing goes ballistic for whatever reason, a short, you could get clobbered, right? With call strategy, I have risk defined. Okay, I have no position in Nvidia anyway, so I took all of the positions off into strength. So we'll be looking to get back in maybe into Nvidia tomorrow. Let's see what do we got? 2 minutes to go. Nvidia, maybe some 160s or something like that for tomorrow. Nvidia. Nvidia.
Yes, we will, Court. Thank you very much for that. That's Courtney Reagan. Mike, I'll turn it back to you. To your
Nvidia with less than a minute to go.
discretionary is leading today. Now, I know Tesla's up, it's a big piece of it, but it's up 1% as a group. So maybe that is fueling some cash into that area of the market.
Yes, and even the equal weighted consumer discretionary is up 1.2%. So it's not really just Tesla. It is also the travel names. And it's funny because it's all where your perception was beforehand, because Delta's guidance for the full year is way below where the street was at the end of the first quarter. But stock got killed, it's come back halfway, and I think everyone's realizing that there's a kind of a steady that's going on that's going to be able to tide us over. While stock's up 1% today as a group is another sign.
Okay.
You're still getting these clues that the market is getting reassured.
All right, so that's a wrap, folks. Have a great evening. Take care. Have a hard stop. We'll see you tomorrow. Ciao.